Okay, let's now start with service costing or operating costing. Just to set a broad context, what does operating costing or service costing is? Basically used for service industry like Bharadwaj Institute or any service industry like transportation, education, hotel, hospital, power, toll road. So wherever service is provided, we use service costing. The format of cost sheet will change based on the industry. Most of the industries will have a classification called variable, fixed, and semi variable. But there can be other classification like a toll road or an IT company where the classification can be little different. Here, sometimes there could be some clarity missing on classification. That is, should I classify something as variable cost, or is it a fixed cost, or is it a semi variable cost? Sometimes clarity could be missing, doesn't make a big difference. But primarily here the objective is very simple. We are required to prepare a cost sheet. The cost sheet will have a different classification for different industries, and objective is to ultimately calculate something called as overall cost, overall profit, and overall collection. One more thing which is very critical here is the cost unit. What is cost unit? Is what should be the cost unit for every industry. For example, in a transport costing, we have something called as a number of passengers into number of kilometer, technically called passenger kilometer. For goods transportation, we have number of tons into number of kilometer. For education, we have number of student into number of hours. For hospital, we have number of patient into number of days. It's multiplication of two factor, and based on that we decide the cost unit. Let's directly get into questions. Come to question 1. Go through the question. Go through question 1. Okay. A minibus having a capacity of 32 passengers operates between two places A and B. Distance between the place A and place B is 30 kilometer. It will make 10 round trips in a day for 25 days in a month. Occupancy is 70%. The details of expenses, passenger tax, bus profit. Prepare an operating cost statement on an annual basis. Annual basis, they've said. The operating cost statement can be for a month, can be for a quarter, can be for a day, can be for a year, and find out what is the cost per passenger kilometer and one way fare per passenger. Now, any transport costing question, we first have to find two things: distance traveled and passenger kilometer. This will help us in calculating something called as the petrol cost, and finally the cost per passenger kilometer. Working note 1: computation of distance traveled and passenger kilometer. Distance traveled and passenger kilometer. And passenger kilometer. We have to do the annual calculation because the operating cost statement is for a year. Distance traveled per day, distance traveled per day. In a day, the bus is making 10 round trips, 10 round trip, and distance between place A and place B is 30 kilometer. That's a one-way distance. One trip means 30 kilometer going, 30 kilometer coming back, like that 10 trips. So 10 trips into 30 kilometer into 2. 600 kilometer it will travel. Then distance traveled per month 600 kilometer into 25 days. 25 days 15,000. Distance traveled per year 15,000 kilometer into 12 months. This is will help me in calculating petrol cost. Then average passenger per journey. Average passenger per journey. 70% is occupied and the capacity is 32 passenger. So 32 passengers into 70%. 32 into 70%. On an average 22.4 will be there. Passenger kilometer 1,80,000 into 22.4. 40 lakh 32,000 kilometer. This is my revenue potential. My income is based on 40 lakh 32,000 passenger kilometers. 22.4 passengers will pay for 1,80,000 kilometer. Working note 2, operating cost statement. Operating cost statement, particulars calculation amount. Operating cost statement. Fixed costs, leave some 7-8 lines gap. That's the major category. Variable costs, some maybe 4 lines, 4 5 lines. Semi variable cost. That's the cost sheet classification. Question has asked us to do annual calculation, fixed, variable, and semi variable cost. Various costs are given in the question. Let's start writing them. Insurance, yearly calculation 15,600. Insurance 15,600. Rent 2,400 into 4 quarters. 2,400 into 4 quarters 9,600. Road tax 5,000 per annum. The semi variable cost is otherwise called as maintenance. So repairs and maintenance will come here. Semi variable cost, other name is maintenance charges. Repairs and maintenance will come here. 4,800 into 4 quarters. 4,800 into 4 quarters 19,200. Salary, mostly all are fixed cost. 7,200 into 12 months. 86,400. Tires and tubes. Tires and tubes can go under semi variable also or variable also, because it's normally depends on the number of kilometer, but okay, they've given per quarter, we are doing this. Classification can change with extra information. Diesel, main cost is this diesel cost, and for this only we calculated the distance traveled. 1,80,000 kilometer divided by 5 kilometer will give me the number of liters needed. 1 liter is consumed for every 5 kilometer. So 1,80,000 divide by 5 into 13 per liter. Divide by 5 into 13 per liter. 4,68,000. 468. Oil is also based on kilometer. That's also variable. Oil and sundries. Oil and sundries. 22 rupees per 100 kilometer. So 1,80,000 into 22 rupees per 100. 22 per 100. 39,600. Depreciation 68,000. There's something on passenger tax. This is neither my income nor my expense. We'll write that in some time. Put the total fixed cost. Total variable cost. Total semi variable cost, and finally a total cost. Total cost. 725,800. Let me know if you get anything different. Total cost is 725,800. 7,25,800. Clear? Now, after the total cost, there's a passenger tax of 22%, and the bus needs a profit of 25% of total taking. Add pass profit. Once you add profit, you get net collection. Add passenger tax. Passenger tax is like GST, no income, no expense, and gross collection. What I'll collect from the customer is the gross number. Add profit, net collection, add passenger tax, gross collection or total collection. Now, passenger taxes on the total collection. Ideally, it should be a net collection, but the question is given on total collection. Profit is also on total collection. Total collection, write 100 in bracket. 100 in bracket. Passenger tax is 22 percentage of this. So 22 is passenger tax. Net collection 78. Profit is 25. And total cost is 53. Total cost is 53. 53 equal to 72500. 25 is equal to question mark. My total collection is taken as 100. Passenger tax is 22% of 100. Net collection is 78. Profit is again 25% of total collection. It can be on net also, but they have given on total collection, and total cost is 53. Again 53 equal to 725,800. 22 equal to question mark. This will be the total collection. Now, question has asked for what is the cost per passenger kilometer and one way fare per passenger. Cost per passenger kilometer is equal to 7,25,800 by 40,32,000 by 40,32,000. 0.18 cost per passenger kilometer. 0.18. 18 paise is my cost per passenger kilometer. Then I'll calculate fare per passenger kilometer and then one way fare. Cost is 18 paise, 4 decimal, but it's 0.1800. Fare per passenger kilometer 1369,433 by 40,32,000. 0.3396. This is what I'll be charging the passengers to pay. And this will give me one way fare because one way fare is for 30 kilometers. The distance between A and B is 30 kilometer. One way fare, one way fare is equal to 0.3396 into 30. 0.3396 into 30. 10.19, approximately 10 rupees 20 paise will be charged. Any doubts on this? Tires and tubes have been taken in variable cost, so classification can change. That is obviously there, but what really matters for us is the final number it will match. Classification can change. Go through question 2. Okay. Is Travels has been promised a contract to run a tourist car on a 20-kilometer long route for a multinational firm. He buys a car costing 4 lakh 50, annual cost of insurance, taxes. He has to pay 2,500 for a garage. Annual repair is 12,000. Life is he hires a driver who has to be paid 3,000 per month plus 10% of the takings as commission. Other expenses, the car will make 4 round trips per day. Assume that a profit of 15% on taking is desired. What under the car will be on road for 25 days? What should be the charge per round trip? So one round trip, how much? Last time one way fare they asked, now a two-way fare has been asked. But this is more of a car rather than passenger. So here our calculation will be only number of kilometers traveled. We will not get into something called as number of passenger kilometer because it is not like a bus where many passengers will travel. It's only a car calculation. Working note 1, computation of distance traveled and number of round trips. Number of round trips. Particulars calculation amount. Particulars calculation amount. We can do calculation for a month, for a year, that is our wish. I'm doing it for a year, monthly. Or last question specifically said yearly statement. Here nothing is mentioned. Distance traveled per day. Distance traveled per day. The tourist car on a 20-kilometer long route, 20-kilometer long route, and the car will be making four round trips each day. Four round trips each day, 20 kilometer into two into four trips. Into four trips, 160. 20 into 2 into 4 trips, 160 kilometer. 160 kilometer. Distance traveled per month, 25 days operations. 25 days operations, 4,000 kilometer. And number of trips per year. This will help me in finally calculating what should be the charge per trip. Number of trips per year is 4 trips per day into 25 days into 12 months. 4 trips per day into 25 days into 12 months. 1,200 trips are made in a year. Working note 2, annual operating cost statement. In that, there is something called as driver commission, and that's why we are discussing this question. Annual operating cost statement. Fixed costs, some 7 8 lines gap. Variable costs, semi variable costs. Fixed, variable, and semi variable. Fixed, variable, and semi variable. You keep noting down the various cost. Check the screen in case you want. Only thing is driver commission, which I have well explained in detail. You keep writing items. Except driver commission, write everything else. except the driver commission. These are your cost. You can put a total driver commission adjustment after the total cost will happen. Total fixed cost. Let me know in case you get anything different. Total fixed cost. Total cost excluding commission. Let me know if you get anything different, any error, total error if you find. Total cost excluding commission is 256,900. Total cost excluding commission is 256,900. Check the total. Let me know in case you get anything different. Are you getting these numbers? Anywhere, anything else you get, any calculation error if you find, let me know. Commission alone, I have to explain. Any doubts in any of the numbers? We are doing annual calculation. Okay. Add commission. We don't know the commission figure. Add commission. Total cost. Add profit. Total collection. Add commission. Total cost. Add profit. Total collection. Now the question has said commission is 10% of collection, 10 percentage of the takings, and profit is 15 percentage of the taking. Both are on takings only. So collection is 100, profit is 15% of 100, cost is 85, commission is 10% of 100. Commission is 10% of 100, hence total cost excluding commission is 75. Total cost excluding commission is 75. Collection is 100, profit is 15 percentage of collection, cost is 85, driver commission is 10% of collection, 10% of collection, and total cost excluding commission is 75. 75 equal to 256,900, 10 equal to question mark. 34,253. Again 75 equal to 256,900, 15 equal to question mark. Total collection 342,533. This divided by number of trip will be the charge per round trip. Every trip I am doing, there's no passenger kilometer concept here, divided by the number of trips, divided by the number of trips, charge per round trip 342,533 divided by 1200. 285.44 will be my charge per round trip. 285 rupees I'll be charging for a round trip. This is not on the concept of passenger kilometer. Here, what matters is number of round trips. 285.44. Any doubts on this? Clear? Can you proceed? Go through three. Okay. Similar to the first question we did, the only thing is the first question, it was making a trip to the same location. Here, Mr. X owns a bus which runs according to the following schedule: Delhi to Chandigarh, Delhi to Agra, Delhi to Jaipur. Various expenses have been given. Passenger tax is 20% of the total taking. Calculate the fare to be charged to earn a profit of 30%, and the fare have to be indicated for Delhi to Chandigarh, Delhi to Agra, Delhi to Jaipur. So first thing we do is distance travel and passenger kilometer. But here we have different routes. So we'll first do Delhi to Chandigarh calculation, then Delhi to Agra calculation, then Delhi to Jaipur calculation, put a total. They're given data for a month, so we'll do only 1 month calculation. I can do yearly calculation also, but I'll prefer to do monthly calculation. Working note 1, computation of distance traveled and passenger kilometer in bracket per month. We'll do monthly calculation. Distance travel and passenger kilometer per month. You may need 5 6 columns. Not sure on the number of columns. Route, you may need 5 6 columns. Delhi to Chandigarh, Delhi to Agra, Delhi to Jaipur. Route, one way distance, number of days. One way distance and number of days. 250 kilometer, 8 days in a month. 210 kilometer, 10 days in a month. 270 kilometer, 6 days in a month. Route, one way distance, number of days, distance traveled per month. Per month is 250 into 2. One way is 250 into 2 into 8 days. 250 into 2 into 8 days. 2000. 4,000, sorry, 4,000, 210 into 2 into 10 days, 210 into 2 into 10 days, 4,200, 270 into 2 into 6 days, 3,240. Put a total. This will give us the total distance traveled. Three different routes are being taken. 11,440. Then every route will be multiplied with number of passengers, passenger kilometer, passengers and passenger kilometer. The capacity of the buses given in the last line 50% seating capacity. Delhi to Chandigarh 90% occupied. 50 into 90%, 45 passengers. 50 into 85%, 42.5 passengers. 50 into 100%, 50 passengers, and you multiply them. 5,20,500. 520, 500. Working note 2, monthly operating cost statement. We'll have to note down the various expenses, put a total, add profit, some passenger tax, all that you'll have to add. Fixed costs, leave some line gap. Variable costs, semi-variable cost. Semi-variable is otherwise called as maintenance charges. We'll note down various expenses monthly. First is depreciation, cost of the buses given 6 lakh. Depreciation is 20% per annum. 6 lakh into 20% into 1 by 12. 6 lakh into 20% into 1 by 12. 10,000. 6 lakh into 20% into 1 by 12. Driver salary 2,800 per month. Conductor salary 2,200 per month. Accountant, all this is formality. Accountant salary 200. Insurance 4,800 per annum. 400. Diesel consumption. Diesel consumption. Diesel consumption depends on distance traveled. 11,440 divided by the mileage 4 kilometer per liter into 36 into 46, sorry, into 46 into 46, 131, 560. Road tax 1,500. Lubricant oils 11,440 into 10 per 100 kilometer. 1144, 10 per 100 kilometer permit fee. Sorry, I didn't see that. 1500 by 12. 125. Sorry. 125. Then permit fee 315. Repairs and maintenance will go under semi variable cost. Repairs and maintenance 1000. And then passenger tax is 20% of the taking, and the profit is 30% of the taking. The total fixed cost 10,000 plus 2,800, 2,200, 200, 400, 125, 315, 16,040. Total variable costs 132, 704. Semi variable is 1000. All put together, total cost 16,040 plus 132,704 plus 1000, 149,744. Total cost is 149,744. Same thing, passenger tax, profit, net collection, passenger tax, total collection. Both the profit and passenger tax is given on total collection in the question. Both profit and passenger taxes on total collection. So total collection is 100. Passenger taxes 20. Net collection is 80. Profit is 30. Total cost is 50. Two double nine 488, and if you divide by passenger kilometer you'll get fare per passenger kilometer, and then multiply with the respective route distance, because they wanted the fare for Delhi to Chandigarh, Delhi to Agra, Delhi to Jaipur. Any doubts on this? First, number of passenger kilometer 5,20,500. Fare per passenger kilometer 0.5754. That's all, we are done. If you want the fare for Delhi to Chandigarh, you'll have to multiply with 250 kilometer. That will give you the one-way fare. And if you want Delhi to Agra, you'll have to multiply with 210 kilometer and 270 kilometer. Multiply with the respective distance, you'll get the fare. Go through question 4. Okay, a transport company has a fleet of three truck of 10-ton capacity, each plying in different direction for transport of customers' goods. The truck run loaded with goods, return empty, distance traveled, trips made, load carried per trip. There are three trucks, some distance travel and maintenance cost, various expenses. Prepare an annual cost statement. Question is very clear. They want an annual cost statement covering the fleet of three vehicles and determine the cost per kilometer, freight rate per ton kilometer. If you want a profit of 10% on freight, what is freight? Freight is my collection, the collection which I'm going to make. Now they want an annual cost event. First thing I have to do is calculate distance traveled and ton kilometer. How will we do? Earlier question we had this, which was given a single bus. There were three different analysis. So what we do now here is truck number. Listen for a minute. Truck number, one way distance, number of days, distance traveled per month, number of tons and ton kilometer. Write the headings. Truck number, one way distance, number of days, distance traveled per month, number of tons and ton kilometer. Or instead of number of days, make it number of trips. Number of trips. Truck number, one way distance, number of trips, distance traveled per month, number of tons and ton kilometer. This is the most important calculation. Copy paste from the question. I'm doing initially per month. Finally, I'll get per year because annual statement is needed. Let me get per month number and then we'll convert into per year. Or make it here itself, per year itself. Make it per year. Let's close it per year itself. How many days does the vehicle operate? 24 days in a month. So listen, 2 into 16 is one trip. 2 into 16, one way distance is 16 into 4 trips. Into 4 trips. 2 into 16 into 4 trips is one day travel into 24 days into 12 months. 24 days and 12 months. 2 into 16 into 4 into 24 days into 12 months. 36 864. Similarly, 2 into 40 into 2 trips into 24 days into 12 months. 12 months. 12 months. 46080. Then 2 into 30 into 3 into 24 days into 12 months. 51,000 total of all of this. One, check again, 134, 134, 784. 134, 784. This is the annual distance traveled. 134, 784. Now, number of runs is little tricky. It says the truck run loaded with goods but return empty. So when I go with 6. When I come back with 0. On an average, it is 3 ton. When I go back, go with 6. When I come back with 0 tons. On an average, it is 3 tons. On an average, it is 3 ton because we want average occupancy. So number of tons is 3. 6 plus 0 by 2. 4.5. 9 plus 0 by 2 and 4. 8 plus 0 by 2. 525,312. 5,25,312. Clear? Any doubts on this? 525,312. Clear? Now the question has asked us to calculate annual cost statement. I'm not doing the cost statement. I'm quickly discussing one thing alone I want to do. First is maintenance cost. So this alone we will do it now. Maintenance cost. They have given distance traveled and maintenance cost. Divide and check, are you getting same number at a per unit, per kilometer? Divide 46,050. Divide and check, are you getting the same number? Are you getting same number? 46,050 divide by 160 200, some 0.2874. Then 45 175 divide by 156 700, some 0.2882. We are not getting exactly same number, so it's a semi variable cost. You have to do this, which we did in the earlier chapter. Units, cost, total variable cost, total fixed cost, VC per unit, change in cost by change in kilometer. Note 1, maintenance cost, kilometer cost, TVC and TFC, and variable cost per kilometer, change in cost by change in kilometer, change in cost by change in kilometer, kilometer cost, total variable cost, total fixed cost. They have given two levels: kilometer cost, total variable cost, total fixed cost, total variable and total fixed. 160 200, 46,050, 156 700, 45 175. Change in cost by change in kilometer. Point 25 per kilometer. We substitute it here. 160 200 into 0.25. Fixed component is 6,000. Any one place you can substitute. Any one place you can substitute. No need to do it at both the places. 6,000. Now our maintenance cost will be 1,34,784 kilometer into 25 paise plus 6,000 of fixed cost, plus 6,000 of fixed cost. That's all. The problem is over. Nothing much is needed. Any doubts on this? Now, apart from the diesel cost, kilometer divided by 4 into 10, driver salary 2,000 into 3 drivers, because 3 truck, 3 drivers, into 12 months, license and tax 5,000 per annum into 3 trucks, insurance 5,000 per annum for all the 3 vehicle, depreciation per truck 3 lakh minus 10,000 by 10 into 3 trucks you have to do, oil and sundries, number of kilometer into 25 by 100, general overhead 11,084. This will give me the overall cost. Profit is 10% on freight. On freight means on collection. Cost, add profit, total collection. Collection is 100, profit is 10, cost is 90. Cost is 90. Any doubts on this? Go through 5. Okay, EPS is a public school having 25 buses, each plying in different direction for the transport of its school student. In view of large number of students availing of the bus service, the bus work for two shifts a day, daily both in the morning and in the afternoon. Buses are garaged in the school. Workload of the students have been arranged so that in the morning the first trip picks up senior student, second trip flying an hour later picks up junior student. First trip takes the junior student, then it takes the senior student. Distance traveled by each bus. The school works for 24 days in a month, remain closed for vacation in May and June, but bus fee is payable for all the 12 months. Various expenses have been given. Each bus on an average gives 10 km per liter of diesel. The seating capacity is 60 students. The seating capacity is fully occupied, and there are different category of students. Students who are within a distance of 4 km, they have to pay 25 percentage of the fee. 8 km, they have to pay 50 percentage of the fee. 16 km full. Since the bus fees has to be, you are required to calculate statement showing expenses of operating a single bus and fleet of 25 buses. So they want single bus calculation. 25 buses, just multiply with 25. And what should be the average cost per student per month? Average cost per student per month is nothing but average fees. How much a student has to pay if you are coming from 4 kilometers, 8 kilometers, and 16 km. Working note 1, computation of distance traveled. Computation of distance traveled. No concept of passenger kilometer because here it's the same students who are going to travel. Computation of distance traveled. Distance traveled. Particulars and amount. Distance traveled per bus per day. Distance traveled per bus per day. Per bus per day. Read and let me know how many kilometers will a single bus travel in a day. The distance is 16 km. First trip goes, picks up senior student. Then there's a second trip for junior going and coming back. Evening going and coming back. Totally four trips it has to make. Totally first trip for junior, first trip for senior, then again for junior and senior. So distance traveled is 16 km into two-way distance into four trips. 128. Distance traveled per bus per month. 24 days in a month. Per year into 10 months. 30,720. No concept of multiplying with passengers because it's the same students. Distance traveled for 25 buses. 7 lakh 68,000 kilometer. This will help me in calculating diesel cost. I'm not going to do the cost statement. So cost is driver salary per bus you do into 25, cleaner salary, license fees, insurance premium, repairs and maintenance, depreciation and diesel cost. That is assuming you're done. One bus cost is 2,52,082 for a year. 2,52,082 for a year. No concept of profit element given. Now this 252,082 is the cost of a bus which has to be paid by some students. Some students have to pay me this 252,082. I don't have any profit element here. Next, working note 2, fees to be collected. Fees to be collected. Cost slash collection of single bus. Cost slash collection of single bus 252,082. Cost slash collection. Cost slash collection of single bus 252,082. 252,082 is the cost slash collection of single bus. Now, in a single bus, the capacity is somewhere the capacity was given 60 students, and in a bus there will be 60 junior students and 60 senior students. So one bus fees has to be collected from 120 students. If this categorization and all was not there, then I would have said 2,52,000 divide by 120 is the fees per student, divide by 120. But some students will pay partial fee, some students will pay full fee. In the end, I want my 2,52,082. Next, we have three category of students. Now write category. I think three, four, five columns will be needed. Category 4 kilometer, 4 to 8 kilometer, and 8 to 16 kilometer. Three category of students are there. Number of students in a bus. Number of students in a bus. Three category of students are there. In a bus, 120 students are there. 120, 60 junior and 60 junior. 15% are 0 to 4. 30% are 4 to 8, and 55 percentage are 8 to 16. And these guys will be paying different fees. This 120 students into 15%, 18, 30%, 36, 55%, 66. Fees per student. Annual fees, I'm doing annual and then I'll do the monthly calculation. Annual fees per student. These guys have to pay X, full fees they have to pay. Last category guy has to pay full fees. Second category guy will pay only 50% fee, 0.5x and 0.25x. Total collection 18 into 0.25x, 36 into 0.5x, and 66 into x. This total has to match 2,52,082. I have to collect 252,082, no profit and all, but I don't want to make any loss and all. So I will give discount to few people, but in the end I want my money. X will be the annual cost for 8 to 16 kilometer category. Annual cost, then we can get the monthly cost. 252,082 divided by 88.5. 2848.38 per year, or divide by 12. Fees has to be paid for all the 12 months. 237.37 per month. That's all, I'm done. 4 to 8 kilometer will be half of this, and 0 to 4 kilometer will be quarter of the initial amount. Net I want 252,082. If no categorization was there, 252 divided by 120 students. 252 divided by 120 students, and that is the fare per student. Here indirectly I'll be collecting more from the 8 to 16 guy and give discount to 0 to 4. In the end I get my 252,082. Profit element, if there, then you have to add the profit element. They have not given any profit element. Go through question 6. Good problem. You go through this. Okay, Navya LMV Private Limited operates cab car rental service in Delhi NCR. It provides its services to the offices of Noida, Gurugram, and Faridabad. At present, it operates CNG fuel car, but it's also considering of upgrading to electric vehicle. Various expenses have been given for CNG car and EV car. Apart from that, these are the various other expenses. These are like common expenses, like driver salary will be common for both, garage rent could be common for both, office and admin cost could be common. Calculate the operating cost of vehicle per month per car for both CNG and EV. I'm going to do only EV. We can do either of them, so I'll do EV. And CNG, you'll have to do a similar calculation. One vehicle will travel for 1500 kilometers. They have given in the question how many kilometers it is going to travel. Working note 1, computation of annual cost, computation of annual cost, particulars, calculation amount. We are doing only one. If we are doing both, then 5 columns will be needed. Calculation amount for CNG, calculation amount for EV. Particulars, calculation amount, monthly calculation. Sorry, not annual cost. Sorry, computation of monthly cost. Monthly cost. They want monthly cost. Operating cost of vehicle per month. Computation of monthly cost. Fixed cost. Variable cost. Semi variable cost. Fixed cost, variable cost, and semi variable cost. Fixed cost, variable cost, and semi variable cost. Tell me depreciation per month will be how much? Calculated properly. Subsidy and all is there. Depreciation per month, depreciation. You calculate and then refer the screen. How much? 10,000 per month. We are doing monthly calculation. 10,000 per month. Next item is car purchase price, subsidy, life of the car, residual value, mileage is given, electricity cost. Electricity cost. For an EV, it is electricity. Put it in variable. Electricity cost is variable. Electricity cost. For a CNG, it is called fuel cost. Here it's electricity cost. Now, 1500 kilometer I have to travel and 240 kilometer per charge. Every time I charge, I can travel for 240 kilometer. This will tell me how many times I have to charge it, and every charging will cost me 30 units, and each unit is cost 7.6. Each unit cost is 7.6. It is 1500 kilometer divided by 240 kilometer per charge. This will tell how many times I have to charge it into 30 kilometers per full charge, sorry, 30 units per charge into 7.6. So 1500 divide by 240 into 30 kWh into 7.6. kWh is nothing but number of units. 30 kWh into 7.6. How much? 1425. Next is maintenance cost. Annual they have given, we'll write monthly. Maintenance cost. Maintenance cost 5200 by 12. 433.33. 5200 by 12. Maintenance cost 5200 by 12. Clear? Next is insurance cost. Insurance cost 14,600 by 12. 1216.67. 1216.67. Any doubts on this? Tire cost, you can put it under variable, you can put it under semi variable. Tire cost, the life of the vehicle is 10 years. The life of the vehicle is 10 years and tire is replaced every 5 years. So first we'll calculate the cost for the 10-year life and then divide by 10 years to get monthly cost. How many times we'll have to replace the tire here? No, no, once in 5 years. So how many times will you replace? Life is 10 years. Not two times, only one time. Reason is I buy the car, first 5 years, the tire is already there. At the end of fifth year, I'll replace the tire. At the end of 10th year, I'll not do replacement. This is the important adjustment. At the end of 10th year, I will not replace the tire. I'll just sell the car. That's all. Because why will I replace the tire and sell the car? Unless question says that at the end of 10th year, you have to replace and then sell. That's a different story. So here, only one time I will replace it. Only one time I'll replace it, not two times. Not two times. So for a 10-year, only 16,000 is the cost. For a 10-year period, the cost is only 16,000. Only one replacement we will do. Only one replacement. We are not going to do two replacement. So 16,000 divided by 120 months. 16,000 by 120 months. 133.33. You can put it under variable, you can put it under semi variable, that's your wish. 16,000 by 120 months. Only one replacement of tire. We will not do two replacements. Battery cost, calculate and write it. Again variable. Battery cost. How many times will we replace battery? Only one. At the end of 8th year, I'll replace it by 120 months. 4,500. Apart from that, there are certain common expenses for both the car. Let's write them. Important part is tire and battery cost. Tire and battery cost. What are the other expenses we have? Write that in the fixed cost. Balance is okay. Driver salary 20,000. Garage rent 4,500. Share of office and admin. I don't want any total and all. Just we'll write and then close it. Share of office and admin 1,500. Important is the tire and the battery replacement cost. Any doubts on this? Clear? I have done the EV part. You can do the CNG part later and then check. So they have taken battery replacement and insurance all under maintenance cost. Doesn't really matter. Categorization. Let's not worry much about it. Overall total will match. Any doubts on this? Go through 7. Okay. Happy Transport Services is a Delhi-based national goods transport service provider owning four trucks. Diesel cost, engine oil cost, repairs and maintenance, driver salary, cleaner salary, supervision and other expenses, cost of loading of goods. Each truck was purchased for 30 lakh with a life of 7 lakh 20,000 kilometers. So depreciation is based on kilometer, not the life of 5 years, 10 years. During the next month, 6 bookings will be there. First, calculate the absolute ton kilometer and cost per ton kilometer. What is ton kilometer is distance into the load carried plus assuming the return journey is another 2700 kilometer into the weight up and weight down, one you go and one you come back. Working note 1, computation of distance traveled and ton kilometer. Distance traveled and ton kilometer. Distance traveled and ton kilometer. Distance traveled is equal to distance traveled is equal to very simple, 10,710 kilometer going, 10,710 kilometer coming back. 10,710 plus 10,710 going and coming back, 21,420 kilometers. 21,420 kilometers. Clear? Going and coming back. Next, ton kilometer is equal to first journey 2,700 into 14 plus 2,700 into 6 going and coming back, 2,700 into 14, 2,700 into 6 plus 1890 into 12 and return 1890 into technically 0. 1890 into 12, 1890 into 0. 1840 into 15, 1840 into 0. 815 into 10. That into 0, even if you don't write also it's okay. 815 into 0. 1280 into 12. 1280 into 4. 2185 into 10. 2185 into 8. All put together 1 lakh 72,240 kilometers. Let me know in case you get anything different. 172 240. If at all you're getting anything different, let me know. Any calculation errors you spot. Any doubts on this? 172 240. Clear? We can do it in table approach. I've done it like this. Any doubts on this? Working note 2. Operating cost statement. We'll have to obviously do it for a month only because we have done calculation for a month. Operating cost statement. They want cost per ton kilometer. Operating cost statement, particulars calculation amount. operating cost statement, particulars calculation amount, fixed cost, variable cost, and semi-variable cost. Fixed cost, variable cost, and semi-variable cost. Fixed, variable, and semi-variable. Variable and semi-variable. First cost is diesel cost. Very clearly given 19.20 per kilometer. They have not given any mileage and other data. 19.20 per kilometer. 21,420 into 19.20 into 19.20. 4 lakh 264. Engine oil like a variable cost. 21,420 into 4,200 for every 13,000 kilometer. 6920. 4,200 for every 13,000 kilometer. Repairs and maintenance and semi-variable cost. 21,420 into 36,000 for every 10,000 kilometer. 36,000 for every 10,000 kilometer. 77,112. 36,000 for every 10,000 kilometer. 77,112. Driver salary. Depreciation is something I'll need some explanation. Driver salary 24,000 into 4. 4 trucks are there. Cleaner salary 15,000 into 4. Supervision and general expenses 14,000. Another variable cost is loading cost 180 per ton. Somebody has to load the goods and you have to incur 180 per ton. How many tons we are loading? 73 for going and 18 for coming back. You have to load, only loading charges they have given, unloading is not there. 73 plus 18, 73 for going, 18 for coming back. 180 into 73 for going, 18 for coming back. 16,380. And one more item is depreciation, which is like a variable cost. Depreciation is variable cost. Now question has said depreciation is based on kilometer traveled. 30 lakh is the cost of a truck and life is 7,20,000 kilometer. So 30 lakh by 7,20,000 is the depreciation per kilometer. Depreciation IC has done into 4. Into 4 will not be done because 21,420 that is for all 4 vehicles put together. So 30 lakh divided by 7,20,000 is the depreciation per kilometer. Depreciation per kilometer. So 30 lakh divided by 7,20,000 into 21,420. 89,250. We are done. I'm not putting any total and all. 89,250. Any doubts on this? Once you do this, you'll have to divide by ton kilometer as we did 170 to 240. Driver salary, cleaner salary, supervision charges, and diesel and oil, engine oil, cost of loading goods, depreciation, and semi variable cost. Put a total, divide by 170 to 240. Any doubts on this? Clear? Go through question 8. Slightly unique question. Okay. SpeedX Logistics, established in 2010, headquartered in Mumbai, India, operates within the transport and logistics industry as a third-party logistics provider. Company's fleet consists of 10 truck, 15 vans, 5 trailer, each serving distinct purpose. The records of truck R40 reveals the following information. So one of the vehicle they are saying 30 days it operated, 30 days it is maintained, operated for 25 days, hours operated 300, kilometer covered 2500, total tonnage carried 4 ton load per trip, return journey empty 2 round trips per done. 4 ton load per trip, return journey is empty, and 2 round trips per day. Operating cost is given directly 400, 170, 90, 550, 350. Maintenance cost is given directly. Fixed cost is given directly. In fixed cost, we have one item called interest. Assuming it is not related to equity fund, we'll consider that in the calculation. Capital cost. Can you add up all of this, including depreciation, and tell me per month cost? Including depreciation. Per month cost. I want per month cost. Including depreciation. 54,000 minus 36,000 divided by 60 months. How much the depreciation? All put together, how much you get? 2,700. 2,700. Any doubts on this? Clear? Okay. Now let's quickly discuss. Cost per day maintained is 2,700 by 30. 2,700 by 30. Cost per day operated is 2,700 by 25. Cost per hour operated is 2,700 by 300 hours. Cost per kilometer covered is 2,700 by 2,500. And commercial ton kilometer. Now, ton kilometer, this 2 round trip and all is of no use. 2,500 kilometer. In this, when I go with 4 tons. When I come back empty. So on an average 4 plus 0 by 2. On an average 4 plus 0 by 2. 2000. This they need not have given. If they give 2 round trips per day, we could have tried calculating this in case they had given distance and other things. So we should have calculated the kilometer travel, that is given directly. 2,500 kilometer into 4 plus 0 by 2, 5,000 commercial ton kilometer. 5,000 commercial ton kilometer, and then you keep dividing by everything. 30, 25, 300, 2,500, 5,000. Interest cost forms part of the total cost, assuming it is related to non-long-term funds. Non-long-term funds. Clear? Any doubts on this? Any doubts on this part? Clear? Okay, let's take a break of 15 minutes. Let's proceed now. Let's come to question 9. It's on airline costing. Go through this. Go through question 9. Okay. Star Airlines operates a single aircraft of 180 seats capacity between city ND and GA. The normal occupancy is 70%. So 180 into 70% are there in flight. One way fare is 12,500. Cost of operation is there is a fuel cost, there's a food cost, there's a commission, and there are certain fixed costs. Assume that fuel costs are unaffected by the actual number of passengers on the flight. Normally, in the practical world, if the passengers increase, fuel costs can increase. Calculate the net operating income. Net operating income is basically profit calculation, and advise some proposal where I'm reducing the fare so that number of passengers increase from 12,500, we are reducing it to 11,670. Number of passengers from 70% occupancy will go up to 144, which could be a slightly higher occupancy. We are required to calculate net operating income. We'll do it for per flight. Per flight means only one time it travels. What happens? Because we don't know how many trips it will do in a year, all that we don't know. Working note 1, computation of net operating income. Computation of net operating income. Net operating income. Particulars, original and revised. Original and revised. Revenues. Then we'll deduct variable cost. Then we deduct fixed cost and we get profit. Revenues is 12,500 into 180 capacity into 70% occupied. 70% occupied. 15 lakh 75,000. And this side 11,670 into 144 passengers. We are reducing the fare. We are reducing the fare so that we get more passengers. 1680 480. 11,670 into 144 into 144 less variable cost. Variable cost. Fuel cost. Ideally, fuel cost will change based on the number of passenger, but I cannot do anything, and it says it remains same. Negative 228. Food cost 270 per passenger. 180 into 70% is the number of passenger into 270 into 270. 34,020. And this side passengers are 144. 144. 34,020 and 38,880. Food cost, and we have commission cost, which is 7.5% of fare. What is 7.5% of fare? Is 7.5% of revenue. Whatever revenue I make, 15 lakh 75,000 into 7.5% I have to pay. Into 7.5% I have to pay. 1 lakh 18,125. 1 lakh 26,036. And less fixed cost, less fixed cost, lease charges 9 lakh 12,000, salaries 90,000 every time you fly, and this gives you operating income or profit. Operating income or profit. One 92 855. Let me know if you get any different number, any calculation error if you spot. If at all any calculation errors there. Yeah, this is right. The airline will go ahead with the proposal because the overall profit is going up. The airline should go ahead with the proposal as there is an increase in overall profits. As there is an increase in overall profits. Clear? Any doubts on this? Can you proceed? With this, my transport industry gets over. Next comes hotel industry. In hotel industry, my classification remains same: fixed, variable, and semi-variable. The classification remain fixed, variable, and semi-variable. Go through question 10. Okay, Mr. Intel newly sets up a homestay in Hanley, Ladakh, offering two types of rooms: single room and double room. 20 rooms are there, 100% occupied. Double room, 10 rooms are there, 80% occupied. Various expenses have been given: staff salary, food and beverage, lighting, repairs, laundry, building rent, and miscellaneous expense. We'll have to classify them into fixed, variable, semi variable. Room attendant will be paid 125 per room day. The industry works with something called as room days concept, number of rooms into number of days. Mr. Intel knows about the power cut during nights at Hanley to preserve the natural light for astronomical research. sets up emergency power backup. Emergency power backup, for which you are charged separately 200 per room if at all you request. If somebody is requesting, they'll be charged 200 per room. The rent of the double room is to be fixed at 1.5 times the single room. In the month of June, Mr. Matrix, along with his family, visited Hanley Dark Stay Reserve to experience the view of the star. For one night stay, only one night stay, he approached Mr. Intel to book a double bedroom and also requested for emergency power backup. Emergency, whatever tariff I fix, if you want emergency power backup, extra 200 rupees you have to pay. I have to find out the rent to be charged if I want a profit of 25% on total takings. So what will I charge to Mr. Matrix depends on what is the tariff of a single room and a double room. So first we'll have to get the tariff of a single room and double room, and then Mr. Matrix has to pay tariff of the double room plus extra 200 rupees because he wanted that emergency power backup. Working note 1, computation of room days. This industry works with room days. Computation of room days. Room days. Number of room days in bracket single room. Single room is equal to, what is number of room days is number of rooms into number of days. Single room, 20 rooms fully occupied. So 20 rooms into 360 days. Last line I said 30 days a month. Into 360 days in a year. Into 360 days. 7,200 room days. That is whatever tariff I fix into 7,200 is my revenue. And number of room days, double room, 10 rooms, only 80% are occupied. 8 rooms are only occupied for us. 10 rooms into 80% into 80% into 360 days. 28. With this, we'll somewhere calculate revenues later on. 2880 room days. Working note to annual operating cost statement. Annual operating cost statement. Same three-way categorization. Fixed cost. All the costs are given directly. We just need to classify them in the appropriate category and write it. Variable cost and semi-variable cost. Fixed cost, variable cost and semi-variable cost. Fixed, variable and semi-variable. Staff salary, put it under fixed cost. We'll keep copy pasting the various expenses. Food and beverage, assuming it is variable in nature. Food and beverage, 2016. Lighting and power can go anywhere. Fixed also is there, variable also there. I'm putting it under variable, anywhere it can go. Lighting and power, 8,60,000. Repairs is semi-variable. Repairs and renovation. Repairs and renovation, 494. Laundry charges, variable. Assuming rooms are occupied, we incur this, 322. Building rent, 1440. Miscellaneous expenses, miscellaneous expenses, 6,12,000. Miscellaneous expenses, 6,12,000. Categorization can vary little bit. Next question, it should not vary. I'll explain here. If you do up and down, it's okay. Then the question says room attendant has to be paid 125 per room day. Whenever room is occupied, you have to pay something to the room attendant. Variable cost, room attendant 125 into 7,200 plus 2880. 7,200 and 2880 into 125. How much? 12 lakh 60,000. Put a total. That 200 rupees for emergency power backup, it will not come in the cost because revenue will be there and cost will be there. We don't know how many times emergency power backup and all is needed. So that's a separate thing. Total cost, total fixed cost, 50 lakh 72,000. Total variable cost, 44 lakh 58,000. Total semi variable cost is 4 lakh 94, and this will give you total cost. How much? 1 crore 24. Add profit, total collection. Add profit and total collection. Add profit and total collection. Profit figure is 25 percentage of total taking. Collection is 100. Profit is 25. Cost is 75. Thirty-three, 41, 333. 1 crore 33. This is what I want to collect. And what will this be? Now right below. Total collection is equal to 7,200 room days. 7,200 room days single room. Total collection is equal to 7,200 room days into A. A is the tariff for single room. A is the tariff for single room. 2,880 room days into, they have said rent of double room will be 1.5 times the single room. 1.5, so into 1.5A. Into 1.5A, this will give you the tariff. Single room tariff is A, double room is 1.5A. Any doubts, any calculation error if you find, let me know. Anywhere if any item got missed out, let me know. Any doubts on this? Clear? This is the rent of a single room. Double room is 1.5 times of this. 1740. Let's round it off. 1740. And Mr. Matrix has to pay extra 200 rupees for emergency power backup. He has to pay extra 200 rupees for emergency power backup. 1740. Tariff for Mr. Matrix 1740 extra 200. 1940 has to be paid. 1740 plus 200. 1940. Any doubts on this? Clear? Can you proceed? Go through 11. Okay. The cost part is given directly, fixed expense, variable expenses per guest per day, 500 rupees they have set. A hotel is having 20 single room, 80% occupied during normal season, which is 8 months, and 50% occupied during off season. They want tariff per room per day, and break even point is asked. That is why in this question fixed variable is very critical, and they themselves have done the classification. Fixed is 53 lakh 25,000, variable is 500 per day. We'll have to calculate total cost. First get tariff per room per day, and then break even point has been asked in the question. Working note 1, computation of room days. Computation of room days. Room days. Room days during normal season. During normal season. Normal season. I have 20 rooms. In that 16 will be occupied during normal season. 16 will be occupied and 8 months. So 16 rooms into 240 days. Three thousand eight 40 room days. This is during normal season. Then there is an off season also. Room days during off season. In off season, of the 20 rooms, only 50% are occupied. Only 50% are occupied. 10 rooms into 120 days. Total room days. Now, question has not said separate rate for normal season. Like last question said single room separate rate, double room separate rate. Here also they can give single normal season separate rate and off season separate rate, but they have not done any of that. Next, total cost is equal to 53 lakh 25,000 plus 5,040 room days into 500 rupees per guest per day. 500 rupees. I have to collect 78 lakh 45,000 for a year. 78 lakh 45,000 for a year needs to be collected. Any doubts on this? 7845. Total collection, some profit margin is given. Profit is how much? 25% of cost itself. So 25% of 7845. And tariff equal to 98 divided by 5,040. They have not given different tariff. If they give different tariff, we'll have to assume A 1.A 2A something like that and do. 1945.68. 1945.68. This is the tariff we are going to fix. 1945.68. Any doubts on this? Next part is, what is the break even point in the normal season? In the normal season, assuming there's a 50% occupancy in the off season. First, let's calculate break even point. Then we'll bifurcate into normal season and off season, and then get something called as break even occupancy. Break even point is equal to fixed cost divided by contribution per room day. Instead of unit, it is called contribution per room day. Fixed cost by contribution per room day. 53,25,000 divided by 1945.68 minus 500. 500 is the variable cost. Once you divide, you'll get the break even point. 3683, you can round up to 84 or 83, that's okay. 3683 room days. 3683 room days. This many room days, if it happens, I'll be able to achieve break even. This is further broken down as normal season, which is a balancing figure, and off season. In the off season, we have already 1200 room days occupied. 50% occupancy, 1200. Balance has to come in normal season. 2483 room days. Balance has to come in normal season, 2483 room days. Doesn't end here. They have said calculate the break even occupancy in normal season in percentage also. Percentage means I have to divide by how many room days are there in the normal season. Divided by 2483 divided by in the normal season. 100% means 20 into 240. This is 100%. 20 into 240. 20 rooms into 240. If you work with 100%, and then you get the percentage which is needed into 100 to express in percentage. 51 point. And the question was talking about some 80%. That is why we are making profit. But even if it's just 51%, we'll have no profit, no loss. 51.73% during peak season. 2483 divided by 20 rooms into 240 days. 20 rooms into 240 days into 100. 20 rooms into 240 days into 100. 51.73%. Clear? Next comes hospital costing. Hospital costing also same classification: fixed cost, variable cost, semi-variable cost. There are industries where classification will change. This also same: fixed, variable, and semi-variable. Go through 12. ABC Limited runs a critical care unit in a hired building. CCU consists of 35 beds and 5 more beds can be added if required. Rent, supervisor, nurse, ward boy, doctor salary, repairs, food, laundry charges, medicine, other fixed expense, administration expense. It's estimated that for 150 days in a year, 35 beds are occupied, 80 days, 25 beds are occupied, and I've also done some extra hiring of 750 beds at the rate of 100 per bed. Calculate the profit per patient day if the hospital recovers on an average 2000 per day from each patient, 2000 per day from each patient, and find out break even point. Now in case of hospital, our cost unit is called patient days or bed days. What is patient days? Is number of patients into number of days. So here it says 150 days in a year, 35 beds are occupied. 35 beds are occupied means 35 patients are there. So first we will calculate patient days, then we prepare the cost statement. In cost statement only two category, fixed, variable, because question has also asked for break even point. For break even I cannot have semi variable category and all, only fixed cost and variable cost. Working note 1, computation of patient days, computation of patient days, patient days, patient days is equal to 150 days in a year, 35 beds are occupied, 80 days, 25 beds are occupied, and extra hiring has been done. 150 days, 35 beds, technically 35 patients, 80 days, 25 beds. Apart from this, there are other days, they have not given any information, only 230 days they have given. Other days we don't know what is happening, assuming they are not occupied. And extra hiring we did 750 beds. Extra hiring 750 beds. How much? This will give me my revenue. What is revenues? 8,000 into 2,000 rupees. My revenue is 8,000 into 2,000 rupees. My revenue is dependent on number of patient days. 8,000 into 2,000 rupees I'm going to charge. Any doubts here? Working note 2, operating cost statement. Particulars, calculation amount. Only two categories of cost we'll have. Fixed cost, variable cost. That's all. No other category. Semi variable will not come here. Fixed cost and variable cost. And somewhere clarity will be there in the question to classify them. Fixed and variable. Because if you change the classification, BEP will change. Rent per month. Rent will be fixed cost 75,000 into 12. 75,000 into 12. 9 lakh. Supervisor salary 25,000 into 2 people into 12 months. 25,000 into 2 people into 12 months. Nurse salary, all are fixed in nature. Ward boy salary, five thousand into 4. Next, doctors paid 2,50,000 per month, paid on the basis of number of patient attended. Why this information is critical? If you pay on the basis of number of patient attended, it is a variable cost. Because if patients come, I pay doctor. Patients not there, doctors are not paid is what the information. So this is a variable cost. Doctor salary 2,50,000 into 12 months. 2,50,000 into 12 months. Repairs fixed cost 81,000. Put to patient, very clearly mentioned variable, 8 lakh 80. Laundry charges again mentioned variable, else assumption would have been needed, but they have made it very clear. Laundry charges 6 lakh. Medicines 7 lakh 50. Other fixed expense 10 lakh 80. Admin expense will obviously come under fixed. Here the classification issues are not there. Admin expense 10 lakh. One more expense is there. What is that? Bed hiring charges, which is variable. 750 beds we hire, and for every bed we have to pay 100 rupees. 75,000. Total fixed 4861. Total variable cost 53 lakh. Total cost 1 crore. 1 crore 1,66,000. Profit is balancing figure, total collection. Profit is balancing figure, total collection. Total collection is 8,000 into 2,000. I'm collecting 2,000 from every patient for a day. 8,000 into 2,000. 1 crore 60 lakh. 58 lakh. Question wanted two things. One is profit per patient day. So profit per patient day is equal to 5834 by 8,000. 729.25. Profit per patient day 729.25. Profit per patient day 729.25. Break even point was asked. Fixed cost by contribution per day. Fixed cost is 4861 and contribution is 2000 minus 5305 by 8,000 minus 2000. Denominator is 1336.875. 1336.875. 3636. At 3636 patient days will make no profit, no loss. 3636, no profit, no loss. Clear? Any doubts on this? Can you proceed? Okay, now we have certain other industries. First is IT and ITES. Under IT and ITES, so your cost classification, if you go through the concept book, you will see hotel we are done. Again, some good MCQs are there. Hospital we are done. IT industry, the classification is employee cost, other cost. Only two classification: employee cost and other cost. We do not do any other way of classification. IT company, employee cost and other cost. Toll plaza, we do a classification called apportionment of capital cost, technically called depreciation. Apportionment of capital cost, technically called depreciation. Operating cost, maintenance cost. Apportionment of capital cost, operating cost and maintenance cost. Canteen, fixed variable, semi variable. Canteen is fixed variable and semi variable. Education institute, fixed variable and semi variable. Insurance company, will see a question where the classification is little different. Marketing and sales support cost, IT related cost, operations related cost and support function. You will see this in a question. Power plant, same as transport costing, that is fixed variable and semi variable. Go through IT company question. Question 13. Okay, following is the data pertaining to Infotech Private Limited for the year 2016-17. Salary, software engineer, project leader, project manager, repairs and maintenance, admin overhead. We are planning to do a new project which will cost 6 months. One leader, one project leader, three software engineer will be needed for entire duration. Project manager, some travel expenses, some depreciation information. Prepare a project cost sheet. Before we start, here we have to calculate something called as an overhead absorption rate. What is overhead absorption rate is, I have to calculate an OAR for these two expenses. Any expense other than employee cost. Any expenses other than employee cost, because a part of that will have to be distributed to this new project which we are doing. This was last year information. Assuming last year continues in the current year, we will follow the same OAR. Working note 1, computation of overhead absorption rate based on last year information. Based on last year information, computation of overhead absorption rate based on last year information. Based on last year information, particulars calculation amount. Total overhead cost, all cost other than employee cost. Total overhead cost 3 lakh plus 12 lakh. Suitable base, employee cost. We apportion the cost based on employee cost. Budgeted suitable base, that is last year employee cost. Last year employee cost. What is the total of last year employee cost? 30 lakhs. OAR 15 by 30 into 100. 50% of employee cost. 50% of employee cost. Now, whatever be the project cost in the current year, in that whatever employee cost is there, 50% will be called as overhead cost. You can have any number of costs, but 50% of employee cost will be taken as overhead cost. In case they mention any change, give effect to change, but otherwise 50% of employee cost. Working note 2, project cost sheet. Project cost sheet. Two-way classification, employee cost, others cost. Employee cost, let's first do it and then we write others. Two classification, employee, others. No fixed variables, all that does not come. Employee cost, other cost. Coming to employee cost, one project leader salary, one project leader is needed for entire duration. One project leader is needed for entire duration. Assuming last year salary continues, 9 lakh divided by 2, 9 lakh divided by 2 divided by 12 months is the monthly salary of a project leader. 9 lakh divide by 2 divide by 12 months. 37,500 is the salary of a project leader. And I need the project leader for the entire duration, 6 months project. 37,500 into 6 months. How much? 2 lakh 25,000. 37,500 into 6 months. We also need software engineer, 3 engineer we need. Divide and tell me what is the software engineer salary last year. 15 lakh divided by 5 people divided by 12 months. 25,000 into 3 employees into 6 months. 4 lakh 50. Project manager is needed for 2 months. Project manager salary. 2 months I need the project manager. Last year project manager salary is 6 lakh by 12. Only one project manager looks like 50,000. We need only for 2 months. Total employee cost. 7 lakh 75,000. Other costs. Two-way categorization, employee cost, other cost. Employee cost and other cost. Before other cost, I write first item is overhead cost. 50% of 7 lakh 75,000. Then I think they have given some more expenses. 50% of employee cost is the overhead cost. 50% of employee cost is the overhead cost. 387,500. 50% of employee cost. What are the other expenses they've given? Travel expenses 187,500 and then depreciation. Travel expense 187,500. Two laptops were purchased at a cost of 50,000 each and the life is estimated to be 2 years. 24 months is equal to 1 lakh rupees. 24 months is 1 lakh rupee. Two laptop at the rate of 50,000 each. And we need it only for 6 months. Question mark. 25,000. Total other cost. Total other cost. How much? 6 lakh. And finally total cost of project. On this I can add some profit margin if the question says this is the cost of the project. So when I bid, I'll bid maybe some 16 lakh, 17 lakh. Cost of the project is 1375. Cost of project is 13 lakh 75,000. Any doubts on this? Clear? Can we proceed? This is on IT company. Next is a toll plaza. The question which we are going to do, we are not going to do the classification. If classification is done, three-way categorization: apportionment of capital cost, then operating cost and maintenance cost. Go through 14. Okay. RST Toll Plaza built an 80-kilometer long highway between two cities that operate a toll plaza to collect tolls from passing vehicle. Company has estimated 50,000 lightweight vehicle, 12,000 medium weight vehicle, and 10,000 heavyweight vehicle will be using the highway in 1 month for the outward journey, also for the return journey. As per the government notification, vehicle for medical emergency, member of parliament, all they are exempt. 10% of lightweight vehicle will pass highway. So 10 percentage of the lightweight vehicles will not have toll charges. It is the policy of the company that if vehicle return within 24 hours of the outward journey, the toll fare will be reduced by 25% automatically. So for the outward journey, if you return within 24 hours, there will be a reduction of 25%. 30% of the chargeable lightweight vehicle, only the lightweight vehicle will return within the specified time frame. And the charges for medium weight vehicle is 2.5 times of the lightweight, heavy weight is 2 times of the medium weight, and toll and maintenance cost for a month is the cost is given. I need a profit of 10%. Calculate the toll rate if concession is not there and then concession comes in. So my collection for a month has to be 59,09090 plus profit of 10% plus profit of 10%. Working note 1, computation of toll rate. Computation of toll rate. Collection per month is equal to 59,09090 plus 10%. 64 approximately 65 lakhs. 65 lakh is to be collected. Now this 65 lakh is going to come from different category of vehicles, and the tariff is going to be different for different category. The medium weight will be 2.5 times of the lightweight, and heavy weight will be 2 times of the medium weight. Next, you may need 5, 6, 4, 5 columns. I'm not sure on the number of columns. Category, number of vehicles, toll rate, total collection. Maybe 4 columns should do mostly. Category, number of vehicles, toll rate and total collection. Number of vehicles, toll rate and total collection. We have three category: lightweight, medium weight and heavyweight. Lightweight, medium weight and heavyweight. Now in the lightweight, they mentioned 50,000 vehicles will pass, but there's a problem. 10 percentage will be exempt. So only 45,000 guys will pay, 45 for going, 45 coming back also, because same number of vehicle will be there for the return journey. Estimated that outward journey and the same number for the return journey. So I will earn 45,000 plus another 45,000. 90,000 vehicle will pay me toll rate. 90,000 vehicles will have to pay me toll rate. 10% exempt, 45 going, 45 coming back. Medium weight, no exempt, 12,000 plus 12,000. The return journey can be lower number also, but they have said same number. And heavy weight, 10,000 plus 10,000. Toll rate for lightweight is A. Medium weight is 2.5 times of A, 2.5 times. And heavy weight is 2 times of the medium weight, 2 times of the medium weight, which is 5A. Multiply 90,000 A, 60,000 A, 1 lakh A. All put together 65 lakhs. All put together 65 lakhs. ₹26 I'll charge for lightweight vehicle. This is how practically toll rates would be fixed. Lightweight vehicle will charge 26. Medium weight 26 into 2.5, 65. Heavyweight vehicle 26 into 5, 130. 130. Clear? Now there's a second condition. Rework scenario. Calculate the rate that will be charged from lightweight vehicle, from only lightweight vehicle, if the return journey concession facility is available, because only lightweight vehicle return journey concession is there, others they have not talked about anything. Assuming that the revenue earned from lightweight vehicles remains same, only the lightweight vehicle analysis. So as of now I'm earning 90,000 into 26. In the rework scenario, this 90,000 will go down. Why will it go down is because I will be giving some concession. So what we will do is we will increase the rate and then give the concession. 26 rupees will increase it to 27, 28 and then give the concession so that I get my 90,000 into 26. Now working note 2, tariff with concession. With concession, revenues from lightweight vehicles is equal to 90,000 into 26. 90,000 into 26. 2 crore 34 lakhs. 90,000 into 26. I want to earn the same 2 crore 34 lakhs from the lightweight vehicles. Sorry, can you check the number? 23 lakh 40, 23 lakh 40. Then write number of onward journey vehicle, or call it as collection from onward journey 45,000 A, 45,000 vehicle into A. Collection from return journey vehicle, they are saying I'm going to give a concession of 30%. So I'm going to give a concession of 25%, and that is for 30% of the chargeable lightweight vehicle. 30% of the chargeable lightweight vehicle. So of the 45,000 vehicle, 70% will pay full tariff. 70% will pay full charges, and 30% will pay only 0.75A. Will pay only 0.75A. Will pay only 0.75A. 25% discount I'm giving them. In the end, what I'll do is I'll increase the tariff, give the discount. I earn 26. Net I'll be earning 26. 45,000 into 70% have to pay full. 45,000 into 30% will have to pay 0.75. All put together 41,625A. 30% will return within the specified time frame. ICA has taken concession only for the return journey. Even onward concession can be there, because if I'm returning back, I can argue saying that you give concession for both the parts, but they have taken only for the return journey. Total collection 45,000A plus 41,625A equal to 2340. 27.01. Normal rate is this, and then I'll give concession. $20.26. Net I will get on an average 26 rupees. I'll give concession, but I want on an average 26 rupees. Any doubts on this? Clear? Go through 15. This is on insurance sector. Okay, this is a question on insurance sector. MRSL Healthcare Limited has incurred the following expenditure. Various expenses have been given. Under this, we classify the cost as marketing and sales support, operations, IT cost, and support function. Marketing and sales support is, as the name indicates, to market the policy or to help my support team. Operations means only two things. The core operations of an insurance company is issuing policy and maintaining claims or managing claims. claims related cost, and issuing policy related cost. IT cost, as the name indicates, the systems related cost, and support function is every other cost like postage, facilities, everything else will go there. Let's start. Operating cost statement. Operating cost statement. Particulars calculation amount. The four category: marketing and sales support. And here, if you do wrong classification, marks will get deducted because they very clearly said you have to do properly these four classification. Other places it's okay, fixed variable change, operations, IT cost, support function. Four categories: marketing and sales support, operations, IT, and support function. Policy development cost is I'm developing the policy related to marketing and sales support. Policy development cost, I'm starting a new policy, so it will help me in marketing the policy. Policy development cost. Policy development cost 35 lakhs. Office admin cost is support function. Office admin cost 48 lakh. Claims operations is related to issuing policy and managing claims. Issuing policy and managing claims. Operations, claims management. Claims management cost 3 lakh 80. Employee cost, we don't know which department they are in, so I put it under support. It can be part of operations, can be part of sales support. We don't know where the employees are, so we take it as support function. Employees cost 16 lakh 20,000. Employees cost 16 lakh 20. Postage and logistics 30 to 40. Postage and logistics 30 to 40. Operations, next one is policy related cost. Issuance cost. Policy issuance cost 2950. Issuing policy, servicing, developing policies, marketing and sales support, because that is before the policies even developed. Facilities cost 4675. Marketing, as the name indicates, cost of marketing 1 crore 38 lakh 90,000. Policy servicing issuance claims, these three only operation. Policy servicing cost 9645. Sales support cost 32 lakhs. IT cost, some question mark is there, we'll try to get it in some time. Put the total now. IT cost is balancing figure. IT cost is balancing figure. IT cost will be balancing figure. Total support cost 1 crore 43 lakh 35,000. Any doubts on this? Then total cost is what we'll get. They have said cost per rupee of insured value. So for every rupee of insured value, my cost is 0.002 and insured value is 3,500 crores. So total cost is 3,500 crores into 0.002. 0.002. 3,500 crores into 0.002. 7 crores. IT cost balancing figure. Deduct all other costs. IT cost balancing figure. 7 crore minus 1 crore 4335, 1 crore 2975, 2 crore 5 lakh 90. How is the balancing figure? 2 crore 21 lakh. And question has asked for what is the cost per policy? Cost per policy 7 crore divided by 2,800. Cost per policy is equal to 7 crore divided by 2,800. 7 crore by 2,800. How much you get? 25,000. Clear? Any doubts on this? Clear? Can you proceed? Go through 16. This is on a power plant. Same classification, fixed, variable, semi-variable. Will not be solving it. You go through it. I'll discuss 16 and 17 quickly. Okay, the new thermal power generating plant gives you the following data. Find out an appropriate form, cost of electricity produced per unit. So they want cost per unit. First is coal cost. Coal is a variable cost. Opening stock plus purchase minus closing stock is consumption into 1,000 rupees. Into 1,000 rupees. Opening stock plus purchase minus closing stock is the consumption. Oil directly 10 into 25,000. Water 5 lakh liters are needed into 2 rupees 50 paise per 100 liter, into 2 rupees 50 paise per 100 liter. Depreciation on steam boiler 24 lakh into 12.5%. This will go under fixed cost into 12.5% into 1 by 12. We are doing monthly calculation. We are doing monthly calculation. Wages of the boiler house 10 people into 10,000 per month. 10 people into 10,000 per month and 40 people into 2,000 per month. 40 people into 2,000 per month.
generating station 50 men into 10,000, 50 men into 10,000, ancillary worker 20 people into 2,000. Recovery on account of sale of ashes, this will be reduced from my cost. This will be reduced from my cost because this is like sale of scrap. Sale of scrap, you can reduce it from variable cost. Repairs and maintenance, semi variable 2 lakh 60. Depreciation of the generating equipment 12 lakh into 12.5%, 12 lakh into 12.5% into 1 by 12 into 1 by 12. Share of administration charges fixed, and units generated is 7 lakh minus 20,000. Units generated is 7 lakh minus 20,000. 7 lakh units got generated, but there is a loss in the process of 20,000. So effectively 6 lakh 80,000 units generated. Any doubts on this category? Fixed, variable, semi variable. Fixed, variable, and semi variable. Clear? Any doubts on this? The repairs part you could have separately written it as semi variable, but ideal classification is fixed, variable, and semi variable. Any doubts on this? Go through 17.
Okay, this is a fairly simple discussion. We'll directly do it. It's a company which is providing education loan. The bank is doing some education loan processing. Should be a bank. For the month of August, salary paid to education loan processor is 21 lakh 60,000. Overhead cost 30% is for education loan. 30% is for education loan. Total overhead cost is 16 lakh 40,000, which includes what? 11,000 for legal advice relating to education loan processing. So this 11,000 will fully go to education loan processing, and balance from 1640 minus 11,000, 30%. 30% will go to education loan processing. All this divided by 500 applications, divided by 500 applications will give me cost per application, will give us cost per application. Objective is to find out what is the cost per application. Clear? Any doubts on this? With this, my service costing discussion gets over. We have extensively discussed all different categories of question. Only thing you need to be aware is different format, because different industries will have different classification. That alone you will have to take care. Clear? Any doubts on this? Okay, with this, I'm done with this. Post break, we'll start with material costing. We'll start again at 10:30. I'll start at 10:30. Okay, let's now move to the next chapter, which is on material cost. Today we'll complete material cost. I'll be taking a session tomorrow as well, where we'll do two more chapters. One is labor, and I may choose either process costing or standard costing. That I'll update in the group itself. Mostly I'll be doing process costing and labor chapter. So let's now move to material cost. This chapter has little bit of formulae which you need to be aware. Once you're aware of the formulae, you'll be in a position to do. I'm not discussing formula anything directly in the problem only. We will see. Go through question one. Okay, there are discussion around EOQ, number of orders, frequency of ordering, minimum carrying cost, timing of next order. Most of the things which we calculate for EOQ is there. PQR Limited produces a product which has a monthly demand of 52,000 units. This is of no use because this is the demand for the finished product. In EOQ, we need the demand of raw material which produces a product. Produces a product means it's the finished product. Product requires a component which is purchased at the rate of 15 per unit. For every finished product, 2 units of component X are required. For every finished product, 2 units of component X are required. Whatever we learnt in the budgetary control chapter, production into input by output, production into input by output. Ordering cost is given. Whenever carrying cost is given as percentage, it is a percentage of purchase price. It's a percentage of purchase price. Let's start working note 1, computation of EOQ. Computation of EOQ of EOQ. EOQ is equal to square root of EOQ is equal to square root of 2 into, this is the formula, square root of 2 into annual demand, 2 into annual demand of raw material into ordering cost per order divided by carrying cost per unit per annum. Carrying cost per unit per annum. 2 into annual demand of raw material into ordering cost per order divided by carrying cost per unit per annum. Question has said produces a product which has a monthly demand of 52,000. So 52,000 into 12 is the demand of the finished product. 52,000 into 12 is the demand of the finished product into input by output, which is 2 is to 1. For every finished product, 2 units of component X are required. 6,24,000 into 2 by 1. This is the annual demand of raw material. 6,24,000 into 2 by 1. Many students in a hurry take 624. That is wrong. 624 into 2 by 1. Ordering cost per order is 350. Carrying cost per unit per annum is 12 percentage of purchase price, 15 rupees. 12 percentage of purchase price. 12 percentage of purchase price, which is 15 rupees. 22,030 units. EOQ is 22,030 units. Important part is annual demand of raw material. And if carrying cost is given as percentage, it's a percentage of purchase price. Second thing they've asked is number of orders. Number of orders is equal to annual demand, what we are going to buy in a year, divided by quantity per order. Whatever we are buying in a year, we are going to buy 12,48,000 units. 12,48,000 units. And quantity per order is 22,030. .56 practical world, it has to be rounded off. In exam many times we leave it in 2 decimal. 56.65 orders. 56.65 orders. Third requirement is frequency of ordering. What is frequency of ordering? Is how frequently are we going to place an order in a year. 56.65, last line says 360 working days. Last line says frequency of ordering 360 days equal to 56.65 orders. Question mark equal to 1 order. How frequently are we going to place an order? 360 days, 56.65 orders. 6.35. Order would be placed every 6.35 days. Order would be placed every 6.35 days. every 6.35 days.
Now, I advised them to follow 22,030. Part B is saying no, no, minimum lot size is 52,000. My supplier is saying I can supply only 52,000. I cannot give 22,030 and all. If I deviate from EOQ, I will incur extra cost because EOQ is the best quantity to order. It is the level at which total of ordering, carrying, and purchase three costs we incur: ordering, carrying, and purchase. Total of that is the lowest. But here we are deviating from EOQ. If you deviate from EOQ, you will incur extra cost. Next, computation of extra cost. Particulars and two columns. EOQ minimum lot size. EOQ and minimum lot size. EOQ and minimum lot size. Point number A, annual demand. Annual demand. This format will use it at many questions. 12,48,000. Quantity per order. There are three costs you have to calculate: ordering cost, carrying cost, and material cost. Quantity per order 22,030, and unfortunately I'll have to go with 52,000. Number of orders A by B. Number of orders A by B. A divided by B. 24 orders. Number of orders. This multiplied with ordering cost per order will give you total ordering cost. Ordering cost per order. How much is the ordering cost per order? 350. Multiply amount, you can round off. C into D. Multiply the two. Total ordering cost, you can round off and write the amounts. 19,828. 8,400. This is the first cost we incur. Total ordering cost 19,828 and 8,400. Total ordering cost. Clear? Then I have something called as carrying cost, where average inventory. What is average inventory? Is quantity per order by 2. Point number B, quantity per order. Whatever you are ordering, on an average, half will be the stock. Quantity per order by 2. EOQ has high ordering cost is higher, but carrying cost will be lower. On an average, put together, EOQ will always be better. Average inventory, carrying cost per unit, 1 rupee 80 paise. Multiplication of these two is total carrying cost. At EOQ, ordering and carrying cost figure will match. At EOQ, ordering and carrying cost figure will match. 19,827, 1 rupees rounding off difference. Again annual demand. Again annual demand. Again annual demand. Purchase price, material cost. Purchase price, material cost. Annual demand, purchase price, material cost. What's the purchase price? 15. Even if you don't write here, it is okay because both are same. You will see many questions, this can be different. Discount will be given. Finally, total inventory cost. E plus H plus K. And EOQ will have lower cost, other one will have higher cost. 187.20, saving in cost due to EOQ or extra cost they've asked, extra cost in minimum lot size, extra cost in minimum lot size, 15,545. Extra cost in minimum lot size 15,545. 15,545. We are incurring extra cost in minimum lot size. Objective is, if you follow EOQ, you'll have the lowest cost. And this format, we are going to use it in 3-4 questions. Any doubts in this? Below the table, minimum carrying cost. Whatever two options we had, minimum of that, minimum of 19,827 and 46,800. 19,827. Minimum of the two option, 19,827 and 46,800. And 46,800. Minimum carrying cost. Clear? And another thing is, determine when should I place the next order, assuming the company does not maintain a safety stock, have a present inventory of 12,480. So what is timing of next order is, this 12,480 is sufficient for how many days? We have to see. Whatever stock is there could be sufficient for 5 days, 10 days, 20 days, minus the lead time for supply. Why minus lead time? Because it will take 2 days for me to get the material. Next, timing of next order. Timing of next order, 12,48,000 units is for 360 days. 12,48,000 units is for 360 days. 12,480 units is question mark. We have this much stock. This is sufficient for some days. 12,48,000, 360 days. 12,480 is equal to question mark. How many days? This can survive me for another 3.6 days. It can help me for another 3.6 days. Lead time for supply. What is lead time is, I place an order and after placing the order, it takes some days for me to get the material. What's the lead time given? How many days? 2 days. Timing of next order. I have stock worth 3.6 days. Another 2 days it will take for me to receive the material. So I strategically place an order so that I get my material on the 3.6th day. 3.6 days minus 2 days. 1.6 days. I'll place an order so that I get my material on 3.6 days. Place an order after 1.6 days. After 1.6 days. Clear? Any doubts on this? Go through question 2. Okay, manufactures a special product which requires a component alpha. Alpha is my raw material. Particulars are collected. Annual demand of alpha. Alpha is the raw material. Cost of placing an order. Cost per unit. Carrying cost. Compute the EOQ. And they are saying if you deviate from EOQ, will give you a discount. See, EOQ is always the best quantity, but if discounts are given, other thing can be better. And what is indifferent level of discount? Let's start first computation of EOQ. Computation of EOQ. Same formula. EOQ is equal to 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. 2 into 8,000. 2 into 8,000. Annual demand of alpha. Alpha is the raw material here. If it is finished product, then you have to do into input by output. Into what is the cost of placing an order? 200 divided by 20% of purchase price. 400 into 20%. 20% of purchase price. 200 units. 200 units. 200 units. Clear? Now I have been told that if you go ahead and order 4,000 units at a time, you will get a discount of 4%. I was not even looking at discount scenario because EOQ is the best quantity. But now I've been told 200 units you order, that's the lowest cost. But if you order 4,000 at a time, we'll give you discount. Because of the discount, that can turn out to be better. Next, evaluation of quantity discount and indifferent level of discount. Evaluation of quantity discount. Particulars in 3 columns. 2 columns will fill it now. Third column I'll explain later. Particulars in 3 columns. Same thing. Same items you write. Please write the format first. EOQ quantity discount. Another column, what will come, we'll see later. First write the format. Annual demand, quantity per order, number of orders, ordering cost per order, total ordering cost, average inventory, carrying cost. Write the format quickly. Write the format quickly. Can we start? Annual demand was annual demand 8,000. Fill it at 2 places. 8,000. 8,000. Annual demand 8,000. There's another column. What is that? We'll see later. 8,000. Quantity per order EOQ is 200. If we want discount, 4,000 at a time. 4,000 at a time. 40 and 2 orders. 40 and 2 orders. 40 and 2 orders. 200. 200. 8,000 and 400. 8,000 and 400. Standard format, follow the format, any question can be handled. Average inventory is quantity per order by 2. 200 by 200, 4000 by 2, 2000. Now little caution on carrying cost per unit. Question said carrying cost is 20%. Originally it is 20% of 400, but if you go for discount, you get a 4% discount. You get a 4% discount. So here originally 20% into 400, but in the rework scenario 20% into 384. Purchase price changes. Purchase price changes. 4% discount. 400 minus 4% discount. 200 into 400. 200. Sorry, 20% into 400. 20% into 384. 384. 76.8. Total ordering is equal to total carrying for EOQ. Purchase price is different. Be little cautious. Purchase price is different. Again, repeat the annual demand. 400, 384. Thirty-two sixteen and 3226. Total inventory cost 3216 and 3226. Which means we are not going to accept the quantity discount because cost is going up. Though there is a good saving, but still I am not okay with this number. I am not okay with the number 3216, 3226. Which means we are going to reject the discount offer. Third part said, what should be the discount so that you're indifferent? You are saying 4% rejected. Okay, agreed. How much discount do you want? Next, third column, indifferent discount. Third column is indifferent discount. Indifferent discount. Indifferent discount. Annual demand same 8,000. Quantity per order same. Number of orders same. Total ordering cost same. Average inventory same. Till this it is everything same. 8,000, 4,000, 200, 400, 2,000. Carrying cost is 20% of A. I don't know the price. 20% of A. A is the purchase price. I want indifferent. Indifferent means I want the same cost. I'm trying to calculate that. 20% of A. 20% of A, 0.2 A. Total carrying cost is 400 A. 400 A. We don't know the purchase price. We are trying to calculate that. 400 A. 8,000 A. 8,000 A. And total of this 8,000 A plus 400 A plus 400 has to be equal to 3216. Indifferent means I want the same cost. Indifferent means I want the same cost. I'm okay with the discount. I'm okay, not okay with discount. Both are acceptable. Discount you give, okay. Or I go for EOQ. Both are same cost. Both are same cost. So I want this to be equal to 3216. Earlier it was 3226. This will give me A. A is the indifferent purchase price. A is the indifferent purchase price. 3226 is not acceptable. 30 to 16 I want. Indifferent purchase price, which is A. Indifferent purchase price, which is A, is equal to, what the price you got? 384 is not acceptable. Solve and tell me A. Sorry, 382 80, 382.80. That's the indifferent purchase price. 8400 A is equal to 3215,600. Divide by 8400, 382.8. 384 is not acceptable. 382.8 is okay. 3216 minus 400 divide by 8400. 382.81. 0.81 809581. Amount of discount 400 minus 382.81. I want this much discount, 17.19. And finally percentage of discount, 4.2975 percentage. 4% discount not acceptable. 4.29 I'm okay. 5 and all I'll be very happy. More than 4.29 I will be okay with discount. 4.2975 I'm indifferent. Both are okay. EOQ are going for discount model. Any doubts on this? Clear? Can you proceed? Go through question 3. Okay. RST Limited has received an offer of quantity discount on its order of material as under 9,600 if you order less than 50, 50 and less than 100, 9360, 100 and less than 200, 9120, 8880, 8640. Annual requirement is 500, ordering cost is 12,500, stock holding cost is 25%. Compute the most economical purchase level. So I technically have 5 choices and I have to find out what is the most economical purchase level. What is economical purchase level is how much quantity should I order. The problem here is last question, one quantity discount. Here there's a discount if you order between 50 to 100. There's a discount if you order between 100 to 200. There's a discount if you order between 200 to 300. There's a discount if you order more than 300. Now computation of most economical purchase level. Most economical purchase level, particulars and 5 columns. Particulars and 5 columns. The 5 columns are the 5 levels they have given: less than 50, 50 to 99, 100 to 199, 200 to 299, and more than 300 and above. 300 and above. 300 and above. For each of this, we have to calculate this 12 line item. So copy paste the same thing format. We have to calculate these 12 line items. Annual demand, quantity per order, number of orders, ordering cost. Copy paste the format. Annual demand, quantity per order, number of orders, ordering cost per order. Okay. Now my price depends on the quantity I'm ordering. Write the format quickly. Write the purchase price. The price depends on the quantity. The price will keep changing. 9,600 if you order less than 50. 9,360, 9,120, 8,880, 8,640. The price keeps changing. Price keeps changing. What is the annual demand? 500, 500. Now, the quantity per order, they have not mentioned any number. What ICI does is they randomly take a number less than 50, they randomly take a number and then proceed. But I have some scientific way, so I'll follow that. But otherwise, if they don't give anything, any number less than 50, maybe 40 units, 50 to 99, some 70 units, 100 to 199, maybe 100 units, some number you can take. Come down, computation of quantity per order. Computation of quantity per order. Quantity per order, particulars in 5 columns, particulars in 5 columns, particulars in 5 columns, annual demand, annual demand, ordering cost per order, ordering cost per order, annual demand, ordering cost per order. What's the ordering cost per order? 12,500. What we are doing here, you'll understand. ICI randomly takes a number, they don't give any logic. So, what randomly I can take, if at least they mention something, it's okay. Otherwise, in exam, even if you randomly take, it's okay. Carrying cost per unit. Carrying cost per unit. What is the carrying cost percentage given? 25% into 9,600. 2,400. 25% into 9,360. 9,360. 2,340. 25% into 9,120. 2,280. 25% into 8,880. and 25% into 8640, 2160. Carrying cost per unit 25% into 96, 93. Now apply EOQ formula for each of this. This is called tentative EOQ. Square root of 2 into 300 into ordering cost per order divided by carrying cost per unit. Apply EOQ for each of this. 2 into 500 into 12,500 divided by 2,400 square root 72. 2 into 500 into 12,500 by 2340 73. 2 into 12,500 into 500 divided by 2280 74. Every class interval apply the formula. 75 and last one will be 76 then. Yeah, 76. Final quantity per order. Instead of randomly taking a number, we will take number in a scientific manner. What a scientific manner is? Less than 50, a number which is closest to 72 will be the quantity per order. Less than 50, the closest number is 49. Closest to 72. 49 is closest to 72. 73 fits between 50 to 99, so 73 as it is. 73 as it is. Between 100 to 199, between 100 to 199, the number closest to 74 is what? 100, 100, 100 as it is. This is 200 and 300. Instead of randomly taking a number, we take it in this scientific manner: 49, 73, 100, 200 and 300. ICA randomly takes a number, they don't give any logic. So we put it here: 49, 73, 100, 200, 300. Beyond this, we will fill first column and last column. I don't want you to fill the other columns, okay? You have to do all the 12 rows for all the 5 columns. We will do first and last. 500 by 49, 2 decimal we will keep for number of orders. You keep filling and then refer the screen. You do the multiplication and then refer the screen. So like this, you have to do all the 5 levels and choose one which has the lowest cost. Here the lowest cost will come, I think, for 300. So that will get chosen as the most economical purchase level. Format remains same. Only thing is quantity per order. ICI takes it in a random manner. I try to do it using this formula. Any doubts on this? Or what question can do is sometimes they will give this, saying that we are going to place 2 orders, 5 orders, 8 orders, and quantity per order will become balancing figure. Any doubts on this? Clear? If there are no discount and price per ton is 10,500, we are not doing it simple formula 2 into 500 into 12,500 divided by 25% of 10,500. Carrying cost, whenever it's a percentage of purchase price. It's a percentage of purchase price. Clear? Any doubts on this? Can we proceed? Go through four. It's a good problem. Okay, it is similar to the earlier set of question, but there's something on bonus which is there. How it impacts the calculation? Let's see. Catalyst Limited is a distributor of industrial chemical, providing the chemical in drum packaging. Each drum of the chemical costs 200. 200 is my purchase price, and I've been selling it for 240. Annual demand is 2,50,000 drums. So my finished product is drum, and I purchase also drum. So this 2,50,000 is annual demand of raw material for the EOQ. Cost of delivery is 100 and inventory holding cost is 180 plus 10% of purchase price. The carrying cost is 180 rupees plus 10% of purchase price. Based on the above data, MD calculated the EOQ. Then purchasing manager states that MD has ignored a share of bonus, which is 10% of the amount by which the holding and order cost are below 2 lakh. Something on bonus needs to be analyzed. What happens, we'll see. He further points out that supplier are ready to give discount if you order 1000 drums or above. Price per drum is only 199.6. Today we are getting the order at 200 rupees, but if I increase the quantity per order, I can get it at 199.6. Calculate the EOQ. We'll first do that. And second, comparison of both. In that, one extra cost will come called as bonus. How does it happen? We'll see. Working note 1, computation of EOQ. Computation of EOQ. Square root of 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. 2 into annual demand of raw material. It's always annual demand of raw material. Be very, very clear. Ordering cost per order divided by carrying cost per unit per annum. What is the annual demand? 2,50,000. 2 into 2,50,000. Ordering cost per order 100. Carrying cost is 180 plus 10% of 180 plus 10% of purchase cost. 180 plus 10% of 200. 180 plus 10% of 200. So carrying cost is huge, 200 rupees per unit. 2 into 2,50,000 into 100 divided by 200, 500 drums. This is the carrying, this is the EOQ we have decided. Now on the decided EOQ, I can get something called as a discount, and that is going to change my analysis. Any doubts on the EOQ part? Next, working note 2, comparison of EOQ and quantity discount. EOQ and quantity discount. EOQ and quantity discount. Particulars EOQ quantity discount. Same format. But don't just write till material cost. Don't write total cost. There's one more cost which will come here. EOQ and quantity discount. Till only material cost. There's an extra cost which will come in this question. Something on bonus needs to be analyzed. EOQ and quantity discount. There's an extra cost on bonus here. EOQ and quantity discount. How bonus is calculated, we'll see as we proceed. Can you proceed? You've written this. Format remains same. There's an extra cost to be analyzed called bonus. What is the annual demand? 2,50,000. EOQ 500. EOQ 500. If I go for quantity discount, I have to order 1,000 or above. I'll go for 1,000 because 500 I am EOQ, 1,000 or above. So let me go with 1,000. Ideally, I would want 500. Closest to 500 is 1,000 if I want discount. 2,50,000 by 500 is 500 orders, 250 orders. $50,000, 25,000. 50,000 and 25,000. Average inventories quantity per order by 2, 250, 500. Carrying cost is going to be a little tricky, 250 and 500. 250 and 500. Carrying cost is 180 plus 10% of 200, and other side is 180 plus 10% of 199.6. 10% of 200, 10% of 199.60. 199.60. 199.60. which makes it 199.96. 199.96. There's an extra cost to be analyzed called bonus cost. What happens we'll understand as we proceed. Five crore. Other side, 4 crore 99 lakh. 5 crore and 4 crore 99 lakh. Bonus. This will not come in any other question. This question is talking about something on bonus, and I'll have to evaluate that as well. Bonus. Normally, this will not come. This question is talking about something on the bonus front. What question says is, we are going to pay a bonus of 10%. Bonus of 10% by which the total inventory holding and ordering, total inventory and holding are below 2 lakh, are below 2 lakh. So listen, bonus is equal to 10% into 2 lakh minus ordering and carrying put together. Ordering and carrying put together, 2 lakh minus that number. If ordering and carrying is 1 lakh and this is 2 lakh, minus that extra amount, whatever I'm saving on that 10% bonus. Bonus is 10% of the total of inventory holding and ordering cost are below rupees 2 lakh, are below rupees 2 lakh. Ordering and carrying put together is 1 lakh here. So I will be paying this bonus. 10,000 rupees bonus. 10,000 rupees bonus. 10% of 2 lakh minus 1 lakh. 10% of 2 lakh minus 1 lakh. 10% of 2 lakh minus 1 lakh. What is 1 lakh is 50 plus 50. And this side 10% into 2 lakh minus 25,000 minus 99,980. 99,980. 7502. This is an extra cost which is not there in the other problem. This question is talking about some bonus to be paid. And then finally total cost. Ordering plus carrying plus this bonus. Bonus needs to be considered in the picture. $532,482. Bonus have to be considered in the calculation. We will opt for discount. We will opt for discount. $532,482. 32,482. We will opt for discount. The EOQ part, one caution you always need to have is you need to take the annual demand of raw material. Many question finished product will be given. We have to take raw material demand. Any doubts on this? Clear? Can you proceed? Okay, part 1 is done on EOQ. EOQ we may do again as part of inventory levels. Part 2 ABC analysis. Quickly go through the question. I only will do it in the screen. You are not going to do this question. Go through this question first. Okay, they have given 12 items. What is ABC analysis? Is prioritization of, like I had categorized as block 1, block 2, block 3. Organization may categorize the material. Category A means most important items. Category B are moderately important. Category C are least important items. So I'll have to do a categorization. Now for categorization, first thing we need to do is we have to get the values. I don't want you to write anything. Item, units, unit cost, and we have to write the values. We'll have to write the values. Once we write the values, then we'll have to do certain adjustments. You need not do it along with me. It is a calculation heavy area. They have given 12 items. Item, units 12,000, 30, 18,000, 3, then 6,000, 35, 750 and 200 and 220, then 3,875, 400, 105, 300, 350, 3,250, 20,000 and 7.5, 27.5. First thing is you will have to get the values of these items to understand which are high value item, which are low value item. So I multiply these two, 12,000 into 30 and get their values. After you get the values, you will have to arrange them in the descending order of value. You will have to arrange them in the descending order of value. So this is a working which you have to do. After you are done with this, you have to go ahead and arrange them in the descending order of value. So high value items come in the top, low value items come in the bottom. 7 lakh 50, 360, 316, 250, 285. You have to arrange them in the descending order of value. This is the first step you have to do. This itself can take away good amount of time in exam, because if you have 12 items and all, it will take away a lot of time. You have to first write the values and then arrange them in the descending order. After you arrange them in the descending order, we write something called as cumulative value. What is cumulative value? It's cumulative of this figure. Cumulative means I start with 7 lakh 50, 7 lakh 50 plus 360, 1110 plus 316, 1426 plus 285. Like this it keeps going on. You will have to find the cumulative values for every row, every item. You'll have to find the cumulative values. First you'll have to arrange them in the descending order of value and then put the cumulative values. Then cumulative value as percentage of total value. Cumulative value as percentage of total value. Cumulative value is percentage of total value. Whatever cumulative value we calculated, this we have to divide by 27, 74, 750. This we have to divide by 27, 74, 750. So 7 lakh 50 divided by 27, 74, 750 into 100 to express in percentage. Cumulative value as a percentage of total value, 27 percentage. This is 27.03%. Then the second one you have to do 1110 by 27, 74, 750 into 100, 40%. Like this, it keeps going on. You will have to find the cumulative value as a percentage of total value. Cumulative value as a percentage of total value. You will have to find it for 12 items. It will take away good amount of time. Similarly, like we calculated cumulative value, we have to calculate cumulative quantity. Like we calculated cumulative value, we'll have to calculate cumulative quantity, which is starting from 3000, 3000 plus 12,000, 15,000 plus 11,500, 26,500 plus 3,800. It goes on like this, and we get 78,450. We get 78,450, and then we do cumulative quantity as percentage of total quantity. Cumulative quantity as percentage of total quantity, like cumulative value as percentage of total value, cumulative quantity as percentage of total quantity, which is 3000, 78, 450. 3000 divided by 78, 450. Like this, you will have to do it for all the items. I'll repeat: item, units, unit cost, multiply, get the value, arrange them in the descending order of value. Arrange them in the descending order of value. After you arrange cumulative value as percentage of total value, cumulative quantity as percentage of total quantity, and question has said store items which constitute 70, 20 and 10 are A, B and C respectively. 70% of value they will give in the question. It can be 70, 20, 10, 60, 30, 10, whatever they say. 70% means till this 69.24, till 69.24. So all these items till 70% value, cumulative value, these are category A. These are category A items. 69% of value, 46 percentage of quantity. 69% of value, 46 percentage of quantity. And I, A, K, E and C. I, A, K, E and C are block 1 or category A. Like I did block 1, block 2. These are category A. Then from 70 till 90, from 70 till 90, you can either take any of them. 90, both are very close to 90. 87.35 and 92.76, both are very close to 90, almost equal gap. Your wish, you want to take it till 92.76, you can take it, or till 87.35, because it's a subjective analysis. So I take it till this, till 92.76. These are category B. These category B items are extra value is 23 percentage and extra quantity is 29 percentage. 23 percentage of quantity, 23 percentage of value, 29 percentage of quantity. They are category B. Category A most important, category B moderately important, and in the end all these three are category C. They are low in value for us. These are category C. So finally summary like this we have to write: most important, moderately important, least important. Moderate, most important 69.24% of value, 46.27 percentage of quantity. Then 23.52 percentage of value, 29.89 percentage of quantity. 7.24 percentage of value, 23.84 percentage of quantity. Any doubts on this? Clear? Some question may say that An item which has more than 10% of value is category A, less than 5% of value is category C. So then individually you will have to do no cumulative analysis. Every item individually you will have to calculate value as percentage of total value or quantity as percentage of total quantity and do the categorization as per the question. It's a subjective selective call. Whatever the question indicates, we have to do. Clear? Any doubts on this? Done? With this, our discussion on ABC analysis gets over. It is a slightly time consuming calculation. If you do the calculation, it will take good amount of time. You have to arrange them in the descending order of value and then start doing it. Clear? Go through question 6.
Purchase Committee of A Limited has been entrusted to review the material procurement policy of the company. Chief Marketing Manager has apprised that the company at present single product X by using two raw material in the ratio of 3 is to 2. I use two raw material in the ratio of 3 is to 2. Material is perishable in nature. Because of perishability, you will see some impact on the calculation. Has to be used within 10 days from the GRN. Otherwise, material becomes obsolete. Material B is durable in nature, can be used even after 1 year. Material is purchased from local market within 1 to 2 days. One is called minimum lead time, two is called maximum lead time, and normal lead time is average of 1 and 2. Similarly, minimum lead time 2 days, maximum lead time 4 days, average is 3. This lead time analysis is needed to calculate inventory levels. I'll explain the formula as we do. Purchase prices 30 and 44 respectively, exclusive of taxes. Company has to incur an administrative cost of 1200 to place an order. This is ordering cost per order. Carrying cost is 15% and 5%, 15 and 5% of purchase price. At present, material A is purchased in a lot of 15,000 kg to avail 10% discount, to avail 10% discount on market price. So I'm availing 10% discount and purchasing a lot of 15,000 kg. GST applicable and input tax credit is availed. If you are availing input tax credit, GST is not a problem. Sales department has said that we are going to sell 30,000 kg in January. Ratio of input and output. Company works for 25 days. Production is carried out evenly. For the month of January, what will be the quantity to be requisition? EOQ. What is the maximum level? Saving or loss? What will be the minimum stock level? So certain requirements have been given. Here they've asked for both material A and B. B, let's not do anything. Reason is once I write A answer, B automatically comes in. Though in solution I may discuss it, but if I answer A, automatically B answer will come and we can just put a tick mark. So B we can ignore totally in the question. Every requirement is related to only material A. First thing I need annual demand. For annual demand, they have given sales. From sales, I have to get production. From production, I have to get raw material consumption. From raw material, I have to get raw material purchase. Budgetary control area. Here, they have not given any stock data. So, sales is equal to production. Consumption is equal to purchase. If they give stock data, from sales get production. From production get raw material consumption. From raw material consumption get raw material purchase. Working note 1. Computation of EOQ.
computation of EOQ, annual sales slash production of FG, annual sales slash production of finished product, sales slash production of finished product. Sales department has estimated that they can sell how many? 30,000 kg, and the trend will continue for the entire year. 30,000 kg into 12. 30,000 into 12. RM consumed is equal to production into input by output. Somewhere they have given product input output ratio. 3 is to no 3 is to 2 is the mix. Input output ratio is not 3 is to 2. 3 is to 2 is the mix of the material. Last para, 5 is to 3. Input output is 5 is to 3. This 6 lakh kg you will have to split in the ratio of 3 is to 2. This 6 lakh kg will be split in the ratio of 3 is to 2. Annual purchase of material A, 6 lakh into 3 by 5, 3 is to 2. And annual purchase of material B, 3 is to 2 is for this purpose. Clear? Any doubts on this? With this, I answer part 1. For the month of January, only January, my purchase will be 30 and 20. Why 30 and 20? 360 and 240 for a year. 360 and 240 for a year. 30 and 20 respectively. Clear? Next, EOQ is equal to square root of 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. First, we'll do it for material A. 2 into annual demand of raw material into ordering cost per order divided by carrying cost per unit per annum. 2 into annual demand of raw material into ordering cost per order. B is not needed. In class, I am doing it. 2 into what is the annual demand? 3,60,000. Ordering cost is given directly. Carrying cost is 15% of purchase price without discount and all. Discount later analysis. 15% of purchase price. Purchase price is 30 rupees and 44 rupees. 15% for A, 5% for B. So 30 into 15%. Get the EOQ answer. 13, 856. 13,856. With this, I can close the answer, but I am doing material B also. Material B is 2 into 2 lakh 40. In case in exam you are not sure about material A, you can try material B and complete the answer also. 1,200, 5% of. It is 5% of purchase price. 5% of purchase price. What's the purchase price? 44, no? Okay, 44 into 5%, 2.2. So 2 into 2,40,000 into 1,200 divide by 2.2 square root 16,181 kg. So with this, my answer is 13,856 and 16,181 kg. Clear? Next, inventory levels have been asked. Maximum level is equal to reorder level plus reorder quantity minus minimum consumption into minimum lead time. Reorder level plus reorder quantity minus minimum consumption into minimum lead time. Formula, logic, everything you want, then you will have to go through the concept book again. Reorder level refers to the level at which I place an order. Reorder quantity refers to what quantity I order, and I subtract something called, so at any time I'll place an order when it's reorder level. Reorder quantity is the extra quantity I will receive, and in the gap I will consume at least minimum consumption into minimum lead time. Now minimum consumption into minimum lead time. Lead time is 1 to 2 days. Lead time is 1 to 2 days. 1 day is minimum, 2 days is maximum. 1 day is minimum and 2 days is maximum. Leave some gap and come down. ROL, reorder level, is equal to maximum consumption into maximum lead time. In case you want more clarity on the formula, you will have to refer the detailed video. It's there in my YouTube channel as well. Maximum consumption into maximum lead time. Now, consumption is, they have not given any data. 3,60,000 for a year, and a year consists of 300 days, 25 days in a month. A year consists of 300 days. 3,60,000 divided by 300 is the maximum consumption, minimum consumption, normal consumption, everything is same. I do not have data. 3,60,000 divided by 300. So 3,60,000 divide by 300 into 2 days. 2,400 units. 2,400 units plus every day 1,200 units. Now ROQ means what quantity are we ordering? Ideally it is equal to EOQ, but the company is saying because I want to take discount. Somewhere the question has said because I want to take discount, A is purchased in a lot of 15,000 kg. I told them follow some 13,000 number, but they are adamant saying that we will buy 15,000 kg at a time. So ROQ is 15,000. ROQ is 15,000, whereas ideal ROQ is EOQ. Ideal ROQ is EOQ, but they are following something else. So ROQ means quantity which we are ordering, reorder quantity, plus 15,000. Minimum consumption 1,200, minimum lead time 1 day. Minimum lead time 1 day. 16,200 kg. This also should be kg. Wait, there's one more rule here. 16,200 kg. This is an answer in every other question. But here they are saying material A is perishable and has to be consumed within what? 10 days from the GRN. So I see I did logical right. Maximum level has to be restricted. Has to be restricted to 10 days into 1,200. 10 days into 1,200. If your answer is more than 10 days into 1,200, less than 10 days into 1,200, that's okay. But at worst case, it cannot exceed 10 days into 1,200 is a logical point, because after 10 days, material will get wasted. So ideal maximum level is only 12,000 kg. Ideal maximum level is only 12,000 kg. 10 days into 1,200. 10 days into 1,200. So they took this as the answer, which is logical. They have taken the logical route. 10 days into 1,200. Any doubts on this? I am restricting my inventory to 10 days into 1,200. But we are ordering itself 15,000. What happens? You'll understand as we proceed. So my maximum level answer is 12,000 kg. 12,000 kg. Then minimum level minimum level is equal to minimum level is equal to ROL minus normal consumption into normal lead time. ROL minus normal consumption minus normal lead time. Formula, remember or go through the logic. Logic is explained in the regular videos. ROL minus normal consumption into normal lead time. 2400 kg, 2400 kg. What is the normal consumption? 1200 kg. Everything is 1200. Normal, minimum, maximum, everything is 1200. Normal lead time is average of 1 and 2. Average of 1 and 2, 1.5 days. 600 kg. 600 kg. It's a very good problem because of that perishable loss. You'll understand the implication in the last working note. Any doubts on this? So 600 kg. Calculate saving or loss if you shift the order quantity to what? EOQ. Currently we are adamant and not following EOQ. If I shift to EOQ, what will happen? Next, comparison of EOQ and quantity discount. 12 column format, 12 row format. First write the 12 rows. Comparison of EOQ and quantity discount. EOQ and quantity discount. EOQ and quantity discount. Very good adjustment. Write the format and then I'll take you to. There are some good adjustments here. EOQ and quantity discount. Don't write the annual demand. There is some adjustment needed here. Don't write the annual demand. Just write the 12 items and wait. Because of that perishable nature, some adjustment is to be done. Under EOQ, what is the quantity per order? And quantity discount? 15,000. Okay, now listen. Ordering anything more than 12,000 is waste because in 10 days you can consume only 12,000. So if I'm ordering more than 12,000, extra units will get wasted. Extra units will get wasted. 1,200 per day into 10 days. 12,000 is what ideally I should order. Anything about 12,000 will get wasted by the company, be it EOQ, be it quantity discount. So what ICI did is they said number of orders in a year, will be 300 days by 10 days is the life. 300 days by, or you can say number of orders is 3,60,000. This is better explanation. Divide by 12,000. Only 12,000 good units I'll get. Balance and all is waste of time, waste of money. 30 orders, and now my purchase quantity unfortunately will be 30 into 13,856 and 30 into 15,000. I'm just wasting money. I'm wasting money and ordering more units because wastage is going to be there because of perishable nature. 30 orders into 13,856. Why 30 orders? 3,60,000 units you need, and every time you place an order only 12,000 is used. Balance is wasted by the company. So quantity annual demand is reverse working under different number here. So now write this: 13,856, 15,000. Number of orders is 30 and 30. Ideally, they should have given me another choice called 12,000. Their wastage will not be there. 4,15,680. We're just wasting units, and here we are wasting more units, 4,50,000. 415, 680, and 4,50,000. What's the ordering cost per order? Beyond this, it's the same analysis. 1,200, multiply them. Beyond this, it's the same thing. You can do it and then refer the screen. Be a little cautious about carrying cost. Unfortunately, we are incurring extra cost in EOQ. There's no saving in cost in EOQ. There's only extra cost here. Ideal third option is 12,000 units, which they have not told us to analyze. Carrying cost is 15% of 30, 15% of 27. And if I shift to EOQ, I will have a loss of 321,201. By shifting, I'll have only a loss. No profit, it will be a loss making situation. Ideally, EOQ should save money, but in this question, EOQ will lead to loss of money for us. 321,201 loss. Clear? Any doubts on this? Done? Yeah. I'll take a break. I resume by 12:20. Let's proceed with the balance set of questions. Go through 7. It's a straightforward, direct question where we'll revise all the formulae.
Number of units to be purchased is given. Cost of placing a purchase order. Purchase price 80. Insurance charge 20. This will also get added to the purchase price only technically. Cash discount to be received is 2%. Annual cost of storage, they have not given in percentage, they have given directly. Let's first do EOQ and then other things we'll do. EOQ is equal to square root of 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. Carrying cost per unit per annum. 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. 2 into 10,000. 2 into 10,000. Ordering cost per order is how much? Cost of placing an order 40. Storage is 5. Purchase price is of no use in the question. 2 into 10,000 into 40 by 5. 400 units. Now they've asked for multiple levels. We'll do one by one. Reorder level, maximum level, minimum level, and danger level. These are the levels they've asked. Reorder level is equal to. Reorder level is equal to. What is the formula for reorder level? Maximum consumption into maximum lead time. Straight away given maximum consumption into maximum lead time. Maximum consumption 40 units, maximum lead time 30 days. 40 units into 30 days, 1200 units. Maximum consumption into maximum lead time 1200 units. 1200 units. ROL is 1200 units. Maximum level is equal to ROL plus ROQ minus minimum consumption into minimum lead time. Minimum consumption into minimum lead time. 1200 plus ROQ is equal to EOQ. No other data is there. ROQ is equal to economic order quantity, which we have calculated. ROQ is equal to EOQ. ROQ is how much? 400 minus 1200 plus 400 minus. The maximum is 40. Average is 30. Minimum is 20 plus 40 by 2 technically. If they give, follow whatever they have given. If not, average is minimum plus maximum by 2. Maximum is 40, minimum has to be 20, so that average is 30. Minimum is 20. Minimum lead time given 10 days. 1200 plus 400 minus 20 into 10. How much you get? 1400 units. Maximum level 1400 units. Maximum level is 1400 units. Minimum level is equal to ROL minus normal consumption, or technically average consumption, into normal lead time. Normal consumption into normal lead time. Normal consumption into normal lead time. Normal consumption into normal lead time. ROL number is 1200. 1200. Normal consumption is 30 units and normal lead time is 20 days. Average consumption into average lead time. 600 units. 600 units. Danger level is equal to, danger level is when you have to place a emergency order. Danger level is equal to normal consumption
into lead time for emergency purchase. Normal consumption into lead time for emergency purchase. I have to purchase something as an emergency now. Normal consumption into lead time for emergency purchases. Emergency purchases 30 units into emergency purchases 8 days. 30 units into 8 days 240. Lead time for emergency purchases. Clear? Any doubts on this? Go through 8 and complete EOQ. Go through 8 and complete EOQ. Complete EOQ. I'll take you through the ROL part and discount analysis. Complete the EOQ part. Carrying cost is 10% of inventory value. It will be 10% of purchase price only. Whenever it's expressed in percentage, it's a percentage of purchase price. Why they say on average inventory? Because we calculate the carrying cost by multiplying with average inventory. Square root of 2 into 3,60,000. How much? 6,000 units. Clear? Any doubts on this? Next, reorder level is equal to maximum consumption into maximum lead time plus whenever there's a safety stock, you have to add safety stock. This is an extra stock maintained by the company. Once you add safety stock to ROL, it will get automatically added in other levels. Maximum level, minimum level, everywhere safety stock needs to be added, but there it will get automatically added because maximum level is dependent on ROL, minimum level is dependent on ROL, everything is dependent on ROL. So we just add once to ROL. ROL maximum consumption is 3,60,000 by 360 is maximum, minimum, normal, everything is same. 3,60,000 by 360. 3,60,000 by 360. 3,60,000 by 360. Lead time is 45 days, that is maximum lead time, minimum lead time, normal lead time. In case they ask any other thing in the question, minimum level they ask, no, maximum level, anything they ask, maximum consumption, minimum consumption, normal consumption, all the three are same. Maximum lead time, minimum lead time, normal lead time, everything is same, into 45 days plus 6,500 plus 6,500. How much you get? 51. Next is comparison of EOQ with quantity discount. If you order 30,000 units at a time, let's do the comparison. EOQ and quantity discount. EOQ and quantity discount. EOQ and quantity discount. Write the 12 items. You do the calculation. Once you are done, you refer the screen. One more adjustment can be done, but ICA has not done. I'll explain that. But this is the calculation. In the average inventory, we can add the safety stock portion. But in both the places, we are going to add 6,500. So they've ignored it. In the average inventory, safety stock can be added because safety stock will be maintained throughout the year. There's some safety stock portion. ICI has ignored it, so I've not done that. 865, 850. Any doubts on this? So we'll go ahead with the quantity discount. Ideally, yes, but they have not done it, so I've kind of ignored it. You can write a note because it's anyway will be added at both the places. So you, even if you consider or ignore, it will not make any difference. Conclusion will remain same. Even if you add it in the both the places, you're going to multiply 6500, so it is going to have same effect only. Any doubts on this? Go through 9. A good question. Okay. A company uses three raw material A, B, and C of a particular product for which the following data apply. Raw material, usage per unit of the finished product. Usage per unit of product 10, 4, and 6. Reorder quantity is given. Price per kg is given. Delivery period minimum, average, maximum. ROL is given. Certain requirements have been asked the question. Weekly production varies from 175 to 225. 175 to 225. Now what is the use of this 175 to 225? Is 175 into 10 is the minimum consumption, 225 into 10 is the maximum consumption, and 200 into 10 is the normal consumption. They have given production 175, 225, averaging 200. 175 into 10 is the minimum consumption, 225 into 10 is the maximum consumption, 200 into 10 is the average consumption. What will be the following quantity? First is minimum stock of A. Minimum stock is ROL minus normal consumption into normal lead time. So we will do ROL. They have given ROL. Else I could have calculated ROL, which could be different. They have given ROL. I'm following it. If I am asked to calculate ROL, I would have calculated. It could be different from 8000 also. ROL minus normal consumption into normal lead time. What is normal consumption? 10 into 200. 10 into 200 for material A. For material A, 10 into 200. Maximum 10 into 225. Minimum 10 into 175. 10 into 175. Working note 1. Minimum stock of A is equal to minimum stock of A. Minimum stock is equal to ROL minus normal consumption into normal lead time. Normal consumption into normal lead time. Normal consumption into normal lead time. 8000 minus what is normal consumption is 200 units into 10. Material A into 10. 200 units is the production. 2000 units. 2000 units. 200 into 10. 2000 units are technically 2000 kg. It is 2000 kg. Raw material is in kg. What is the lead time? Normal lead time? 2 days or 2 weeks. Sorry, 2 weeks. This is weekly calculation. 2000 kg into 2 weeks. This will give you minimum level of A. 2000 into 2 weeks. 8000 minus 2000 into 2 weeks. What's the minimum level? 4000 kg. They have not asked us to calculate ROL, else I would have done ROL. ROL answer will be different. They have given the number, I am following it. Maximum stock of B, maximum level of B is equal to, what's the formula for maximum level? ROL plus ROQ minus minimum consumption into minimum lead time. Minimum consumption into minimum lead time. Again, ROL is given in the question. 4750 plus 5000 minus 4750 plus 5000 minus minimum consumption into minimum lead time. Minimum consumption into minimum lead time. Minimum consumption is 175 into 4. 175 into 4. 175 into 4. Second product 4 units. What is the minimum lead time? 3 weeks. Seven thousand 7650 kg. Third requirement is reorder level. I'm going to use two different formulae. Both may give different answer. I'm not very sure. They have given minimum level in the question. So one is normal reorder level formula. Second is using this. They have given minimum level in the question. First I'll use this formula. Minimum level is given. ROL is calculated. Minimum level is equal to ROL minus normal consumption into normal lead time. And second I'll use the ROL formula itself. Minimum level is equal to ROL minus normal consumption into normal lead time. Both ideally should give same answer, but if the question is not drafted properly, it can give different answer also. Two thousand kg is equal to ROL minus 2000 kg is equal to ROL minus normal consumption is 200 units into 6 kg. 200 units into 6 kg, 1200 kg into 3 days. This will give one ROL answer. We'll do the second in some time. ROL, how much? No. 5600. No? 5, na? It will go to the other side. It will add 5600. 5600. 5600 kg. This is one way. The second is directly the ROL formula itself. ROL is equal to, ideally both should give same answer unless question is drafted wrongly. Maximum consumption into maximum lead time. If it's not drafted properly, we can't help it. ROL is equal to maximum consumption into maximum lead time. Maximum consumption is 6 into 225. 6 into 225. And maximum lead time is 4 weeks. May give different answer also. 5400. Somewhere either they have drafted it wrongly or whatever it is. 5400 kg. Even the material A, if I had calculated ROL and did, you would have got a different answer. They had given the ROL, we followed that. Average level is equal to, there are two formula. One is max plus min by 2 and there's another formula. I'll explain another formula. Average level, material A First, let's calculate the maximum level. Minimum we have, maximum level is equal to ROL plus ROQ minimum consumption into minimum lead time. Minimum consumption into minimum lead time. ROL plus ROQ minimum consumption into minimum lead time. There are two formulae for average level. ROL plus ROQ minus minimum consumption into minimum lead time. 8,000 plus 10,000. 8,000 plus 10,000. They have given ROL, we are following it, else if we calculate, we may get a different answer. 8,000 plus 10,000. Minimum consumption is, what's the minimum consumption? 1750 into 1 week. 1750 into 1 week. 16. Average level of A. Formula 1. There are two formula, both can give different answer. Min plus max by 2. Min plus max by 2. Min we have calculated 4,000. Max is 16,250. Divide by 2. Formula 2. Min level plus ROQ by 2. Minimum level will always be there with the company and half of the reorder quantity. Half of the reorder quantity. Half of the reorder quantity. Min level plus ROQ by 2. Min level is 4,000. ROQ by 2 is 10,000 by 2. And these two formulae are there and both will give different answer. Both the formula are there in ICA material. There's no drafting issue or something. Both the formula can give different answer. Any doubts on this? Can you proceed? First one we got minimum level 4,000 kg. Second one maximum level 7650. Third one ROL 5,400 is there in the answer. We have done two answers, 5,600 and 5,400, and 16,250 and 9,000 kg. 9,000 kg and 10,125, both the answers. Any doubts in this? Clear? It's a good question where production is given. Based on production, you get the maximum consumption, minimum consumption, and normal consumption. Max lead time, min lead time, and normal lead time is given in the question. Any doubts here? So with this, inventory levels discussion gets over. Part 4, which is inventory turnover ratio. It's a very simple concept. We have done inventory turnover ratio in the ratio analysis. This is related to raw material. Go through question 10. Go through the question. I'll be back. Normally our inventory turnover ratios for the finished product, which is COGS by average stock. For raw material, it's called raw material consumed by average raw material, right? Inventory turnover ratio is equal to RM consumed by average stock. Material A, RM consumed is opening stock plus purchase minus closing stock. 10,000 plus 52,000 minus 6,000 divided by 10 plus 6 by 2. 10 plus 52 minus 6 divided by opening plus closing by 2. Opening plus closing by 2. 7 times R 365 by 7 will convert into days. R 365 by 7, 52 days. 7 times R, 52 days. Material A is rotated 7 times in a year and it is stock holding is 52 days. Stock holding is 52 days. Material B, 9,000 plus 27,000 minus 11 average of 9 and 11. 2.5 times R. 365 divided by 2.5, 146 days. 146 days. With this, the discussion on inventory turnover ratio gets over. We have 3 more components. We'll try to close them in the next 40 minutes. Go through safety stock question, then I'll explain this. Go through the question. Okay. Alliance Limited distributes wide range of water purifier system. One of its best selling item is a standard water purifier. It uses the EOQ model to determine the number of water purifiers to order. Management now wants to determine how much safety stock is to be held. What is the purpose of safety stock? We'll understand as we proceed. Annual demand is 36,360 days. 36,360 days. And using EOQ model, I'm ordering 3,600 standard water purifiers at a time. Lead time for an order is 6 days. So it takes around 6 days for me to get the material. Annual carrying cost is 450 and stock out cost. What is stock out cost is you go to a shop, ask for a product and the shopkeeper says product is not available. I miss the sale. I lose profit on that. Next time you come, again I say it is not available. Like this, you will come 2-3 times. If it's not available, you will stop coming to my shop. So stock out is basically the loss because of losing the sale and losing a future sale. Losing a future sale. In the past, 200 times whenever I have ordered the units, 200 times data I'm giving. In the past 200 times, the records indicate that people have been asking for these many units. If people ask for in the 6 day gap, people are asking for 540, 560, 580, 600, 620, 640, 660. I may have some amount of stock out which can happen. How do I decide how much stock out will happen? Let's start. First, note one, computation of ROL. Computation of ROL. Computation of ROL. ROL is equal to maximum consumption into maximum lead time. Maximum consumption into maximum lead time. In a year, I am selling 36,000 water purifier, which means I'm buying 36,000 water purifier. I'm selling 36,000, I'm buying 36,000. So in a year, 36,000 by 360. 36,000 by 360. And the lead time is 6 days. I place an order whenever the stock is 600 units. People are asking in between for 540 during lead time is that 6 day gap. 540 meet the demand, 560 meet the demand, 580 meet the demand, 600 meet the demand. If they ask for 620, 20 units is my loss. Will it happen every time? No, there is some data given. 640, 40 units loss, 660, 60 units loss. To arrest this loss, I can maintain a safety stock of 20 units. I'll be able to close that 620 loss. 40 units if I maintain, 640 also will not happen. And if I maintain 60 units, stock out itself will not happen. Zero stock out will be there. But the problem is, if I maintain safety stock, I have to incur carrying cost on that. Carrying cost is 450, and this is maintained. Safety stock is maintained throughout the year. Whenever people are asking for the product, you give that product and immediately replenish it back. Safety stock is like a buffer stock. It's a contingency. You cannot say this is a normal stock, this is a safety stock. You're just saying that some extra stock we will maintain. Next, computation of note 2, analysis of past orders. Analysis of past order. Whatever two columns they have given, add them, and third column is probability. Demand during lead time, number of times, and probability. And probability. Demand, number of times, and probability. $540 6 times, $560 12 times, $580 16 times, $600 130 times, $620 20 times, $640 10 times, $660 6 times, total $200. Now, what we are trying to see is trying to do some scientific analysis saying that every time stock out will not happen. History says 6 times this happens, 0.03. If this happens, no stock out. If people are asking for 540 units, no stock out. 12 by 200, no stock out here, no stock out, no stock out. The stock out starts at these levels. 200 times they have given. The problem is with these three levels. This is what I have to avoid. Problem is with these three level, and there is a very rare chance, only 10% chance, 5% chance, and a 3% chance. But still, I want to avoid these stock out. How can I avoid? By maintaining extra buffer stock. Problem with buffer stock is I will incur something called as carrying cost. So I'll have to balance, like we balance ordering cost and carrying cost. Here we are going to balance carrying cost and stock out cost. Carrying cost and stock out cost. Three levels we will maintain: 20 units, 40 units, and 60 units. 20 will take care of 620, 40 will take care of 640, and 60 will take care of everything 660. Any doubts on this? Next, stock out analysis. Our safety stock, 4 columns. Safety stock level, ordering cost, carrying cost, and total cost. Not ordering cost, stock out cost. Sorry, no ordering cost here. Stock out cost, carrying cost, and total cost. Objective is to balance these. No safety stock, 20 units, 40 units, 60 units. No safety stock, 20, 40, and 60. I do not maintain any safety stock, then I increase it to 20, increase it to 40, increase it to 60. If you do 60, stock out cost is 0. No stock out will happen. No stock out will happen. Stock out cost is 0. We are arresting all form of stock out cost there. Other 3 we will do the calculation in some time. Carrying cost is 0 into 450. 450 rupees is the carrying cost. 0 into 450, 20 into 450, 40 into 450, 60 into 450. Now I have to calculate the stock out cost when I don't maintain any safety stock, when I maintain 20 units, when I maintain 40 units, and when I maintain 60. 60 is already done. Stock out will not happen. Next, stock out cost. Stock out cost if safety stock is 0 units. Stock out cost if safety stock is 0 units. Stock out cost for a single order is equal to stock out cost for a single order is equal to for a single order is equal to listen, if you order 6 to if you do not have any safety stock, here you will have a stock out of 20 units and the chance of that happening is 0.10. Chance of that happening is only 0.10. Here you will have 40 units of stock out and the chance of that happening is 0.05. And here you will have 60 units stock out and the chance of that happening is 0.03. You will have to consider the chance also. 20 units, 0.10 chance, 40 units, 0.05 chance, and 60 units, 0.03 chance. 20 units, 0.10 chance, 40 units, 0.05 chance, and 60 units, 0.03 chance. This is the probability for one order. In a year, there are multiple orders placed. Every time I place an order, this is the stock out. 20 units into 0.10 chance, 40 units into 0.05 chance, and 60 units into 0.03 chance. So, right, 20 units into 0.10 chance, 40 units into 0.05 chance, 30 units, 60 units into 0.03. All this multiplied with 900 rupees. 900 is the loss. 900 is the loss whenever a stock out happens. $900 is the loss. Multiply all this. This will give you a stock out cost of a single order. 5,220. In a year, we are going to place 10 orders. 36,000 by 3,600. EOQ is 3,600. 36,000 divided by 3,600. If they don't give number of orders, that's all only one time loss. 5,220 just one time loss. Stock out cost for full year. 5220 into 10 orders, 52,200. Somewhere I want to bring down this 50 to 200. That's the purpose. 50 to 200. 50 to 200. 5220 into 10. 50 to 200. This is a huge cost I'm incurring, and I'm trying to arrest this cost. I want to bring down this loss. 50 to 200. Clear? Then stock out cost if safety stock is, I start now maintaining safety stock 20 units. 20 units. Now listen, if you maintain 20 units, very simple. This 20 will become 0. This 20 will become 0. And this 40 loss will become 20 because I have extra 20 units. I'll supply them. 20 loss will be there. And this 60 will go down to 40. 60 will go down to 40. The stock out will keep going down by 20 units. 20 became 0. 40 became 20. 60 became 40. Calculate the cost. 20 became 0, 40 became 20, 60 became 40. 1980. I'll repeat again. My stock out cost depends on number of units of stock out. Earlier 20, 40, 60 was the stock out. 20 goes down to 0, 40 goes down to 20, 60 goes down to 40. So my stock out cost has a huge fall now. From 50 to 200, we bring it down to 19,800. From 50 to 200, we bring it down to 19,800. We bring it down to 19,800. Further, I can bring it down by maintaining 40. Stock out cost of safety stock is 40 units. 40 units. 60 means everything will become 0. 40 units means original 20 becomes 0. Original 40 also becomes 0. But the 60 alone will have still stock out. 60 stock out will still be there. 20 became 0, 40 became 0, 60 became 20. 5, 540 into 10. 540 into 10, 5,400. 5,400. Clear? So my stock out cost is 5,400. Total, whichever gives me the lowest cost, I'll select that. 60 units, no need to do any calculation, zero stock out cost. I'll start maintaining buffer stock. The buffer stock will take care of the difficult situations. Our safety stock is going to be 40 units, and because we maintain safety stock, our reorder level will now increase. Earlier reorder level was 600, but now they're saying what is the new reorder point. What is the new reorder point? Earlier it was 600 units. Now from 600 I'll increase it to 640. So till 640 I'll be able to meet the demand. 660 I cannot meet the demand. 20 units stock out, but I'm okay with that small stock out because I don't want to incur huge carrying cost also. So new reorder point is 600 plus extra 40 safety stock. Extra 40 safety stock. 600 plus extra 40 safety stock, 640 units. Clear? The important analysis is the stock out cost analysis. Clear? Now I move to the next concept called pricing of material receipt. Quickly, I'll show you the concept so that we discuss it a little better. Whenever I do material receipt, we have three types of cost: items included, items deducted, items ignored. So included, basic price, all costs incurred to bring the material to the factory, basic price, freight inwards, road tax, octroi, GST if ITC is not available, customs duty, insurance charges, commission, non-returnable packing. If there is a returnable packing, there can be net cost. What is net cost is, I buy at some, when I buy the product, I have to pay 200 rupees for packaging. When I return the bottle or something, I get back only 150 or 160 rupees net cost. Items which are deducted: trade discount, quantity discount, and which are ignored. This is very important. GST is ignored if ITC is available. Demurrage charges, penalty charges, detention charges, all these are abnormal cost, and cash discount is ignored. We divide by effective good units. What is effective good units? Is units ordered minus only normal loss. Only normal loss is to be subtracted. Abnormal loss should not be subtracted in the denominator, and this will give you effective good units, and this will give you cost per good unit. Cost per good unit. Everything you will have to go through the concept book. Some of the concept I would not have covered in some of the question. So everything you have to go through concept book once. Just read the concept. MCQ if you have time you solve, but concept going through is very very critical. Now let's come to this question. Go through 12. Okay, they've given Axe Limited some purchases are they're doing. Lot of expenses are there. Some are ignored, some are deducted, some are added. That we'll have to take care. We'll then answer whatever is the requirement of the question. 20% shortage is due to normal reason. If any abnormal loss happen, we'll not subtract. Normal, we'll subtract. Working note on computation of cost. Computation of cost. Particulars calculation amount. Particulars calculation amount. Listed price. Assuming I'm buying only one lot, I'm doing calculation for one lot. Listed price. Yeah, one lot only has purchased a lot of 5,000. Okay, one lot purchase. Listed price 2 lakh 50. 2 lakh 50. Trade discount can be subtracted. Trade discount is allowed to be subtracted. Less trade discount. 2 lakh 50,000 into 10%. 25,000 net price. net price 225. What should I do with GST? It ideally would be ignored, but there's a problem. It says credit available, but in the top it says unregistered supplier. If you're an unregistered supplier, you cannot take credit. Credit is available, but I cannot take any credit because I'm an unregistered supplier. Unregistered supplier cannot get any ITC benefit. So CGST and SGST will be added in the calculation. Credit is available, but I cannot take credit. CGST and SGST on the net price 2,25,000 into 18%, 40,500. I will get a cash discount if I make the payment in 30 days. Doesn't matter. In the end, it says you have made the payment and all, but cash discount is to be ignored. It is not related to costing. It is related to financial analysis. Cash discount in bracket ignored. Cash discount ignored. Whether you make the payment early, you don't make the payment early, doesn't matter. Freight and insurance have to be considered 17 to 20. Toll tax, all cost incurred to bring the material will be included. Toll tax 5,000. Demurrage. Demurrage is an abnormal expense. This is charged by the transporter if we delay the item, delay taking the item. Abnormal cost 0. Demurrage is 0. Abnormal cost 0. Commission 10,000. Commission is 10,000. I deposited 30,000 for returnable container and I got a refund of only 20,000. So net cost is 10,000. Amount deposited for returnable container and amount of refund on returning the container. So 10,000 rupees is the packaging cost. Net cost of returnable packing. Total cost excluding other cost. We'll see what to do with other cost. Total cost excluding other cost. Excluding the other cost. 225 plus these items. 3,07,720. Total cost excluding the other cost. 307,720. 307,720. Any doubts on this? Then other cost and finally total cost. Other cost is 2% of total cost. I don't know the total cost. So total cost is 100. Other cost is 2% of this. Excluding other cost is 98. Just give me a minute. Net got disconnected. Okay. So 98 is this number. 98 is equal to 307 722 equal to question mark. What's the number you get? 6,280. Total of this 314. This is overall cost. Then number of units ordered. Number of units ordered is 5,000 less normal loss. Normal loss can be subtracted. Less normal loss. What is the normal loss? 20%. 1,000. Effective good units. And cost per good unit is 3,14,000 by 4,000. 314 by 4,000. 78.50. Cost per good unit 78.50. If you look at the requirement now, If Axe Limited pays the supplier within 30 days, what is the amount of discount received? Now, ICA has assumed discount will be received on the net price. GST no discount. GST no discount. So I will get discount on 2,25,000. I'll get discount on 2,25,000. So I will get a discount of 22,500 and it will not be deducted from the material cost. It will not be deducted from the material cost. Amount of other expenses, we calculated 6280 and it will be added with the material cost. It will be added with the material cost 6280. GST 40,500 and it will be added with the material cost. Why are we adding it? Reason is very simple. We are adding this because credit is not available because I'm an unregistered supplier. If I was a registered supplier, it will be ignored. Total material cost is 3,14,000 and 4,000 units and 78.5. 4,000 units and 78.5. Clear? Any doubts on this? Any abnormal loss, we will not subtract it. Here there was no abnormal loss, only normal loss was there. Any doubts? Okay, the last segment is called price source ledger. I do not have a question on price source ledger, so do solve one or two questions from the main material on PSL. But I'm going to do a comprehensive question which covers everything of material cost. Go through this 13. It covers whatever we have done till now. It's a slightly lengthy problem. Go through this. Okay. First para no use, second para no use. Then there is a data purchase price, trade discount, total duties, no credit availed, no credit availed. Insurance charges is there. Units purchased during the year, opening stock, closing stock, minimum consumption, maximum consumption, average consumption, minimum lead time, maximum lead time, average lead time for emergency purchases, normal wastage 80 units, abnormal wastage 40 units. Factory works for 365 days. Calculate the per unit cost of material by using average price method. First, we will do the per unit cost for the lot which we have purchased. Average price method means opening stock plus purchase cost divided by opening stock units plus the units purchased, and we'll get the average price method answer. Minimum level is equal to ROL minus normal consumption into normal lead time. Danger level is equal to normal consumption into lead time for emergency purchases. Average number of days for inventory is held. Average inventory is inventory turnover ratio, RM consumed by average stock. RM consumed by average stock. This will give you the ratio, convert into days, and value of abnormal loss which has to be transferred to costing P&L account. There is some abnormal loss data. Working note 1, computation of cost per good unit of purchase. Cost per good unit of purchase, particulars calculation amount, particulars calculation amount, cost per good unit of purchase, particulars calculation amount, purchase cost, purchase cost. How many units we have purchased? 60,000 into 4,800. 60,000 into 4,800. 28 crore 80 lakhs. Less trade discount. 2% discount. 57 lakh 60,000. Add duties paid. Credit is not there. And this is on purchase price. Ideally, it has to be on post discount price, but the question is saying on purchase price. 28 crore 80 lakh into 8%. 2 crore 30 lakh 40,000. 2 crore 30 lakh 40,000. Insurance charges 62,000. Total material cost. Total material cost. How much the value? 30 crore 53 lakh 42,000. 30 crore 53 lakh 42,000. Effective good units. Effective good units. 60,000 minus only normal loss can be subtracted. 60,000 minus normal loss you subtract, abnormal you cannot subtract it. 60,000 minus what is the normal loss? 80. Cost per good unit. This is not the average cost answer. This is just one answer, cost per good unit. Then I have to add opening stock and do the calculation. This number is not of much use because we have to follow average cost method. If they had followed FIFO method, this is the cost per unit. Because under FIFO only the current year cost is considered. Cost per unit is equal to opening stock plus current year cost divided by opening stock in units plus effective units purchased. Effective units purchased. Effective units purchased. Opening stock plus current year cost. Current year is 30 crore 53 lakh 42,000 divided by opening stock plus effective units purchased. Opening stock is 5,000 into 5150. Get the answer here. $5,100. Any doubts on 5100? 5,000 into 5150 plus 30 crore 53 lakh 42,000 divided by 5,000 plus effective good units. We have some loss and all. We are not bothered. I'll in the denominator take effective good units. 5,100. Any doubts? Do 7 and 8. That is part 2 and part 3. Minimum level. You know the formula and all. You do it and then refer the screen. You do minimum level and danger level and then refer the screen. Minimum level and danger level. You do it and then refer the screen. This came in exam. The first part is little tricky. Second and third at least easy to do. The even in a bigger question, sometimes the easier one at least close it. Minimum level is easy to do. Danger level is easy to do. Part one is little tricky. Two nine two five units. Any doubts on this? Clear? Can you proceed? Then next part is danger level is equal to normal consumption into lead time for emergency purchases. Normal consumption is 1125 into 2, 2250 units. Value of abnormal loss 40 units into 5100. Value of abnormal loss 40 units into 5100. 40 into 5100. Clear? Any doubts on this? 2 lakh 4,000. Now comes the number of days for which average inventory level is held. This is little tricky. Now write inventory days is equal to inventory turnover RM consumed by average stock. This is inverse formula. Average stock divided by raw material consumed into 365. Average stock by raw material consumed into 365. Leave some space. Average stock is equal to opening is given in the question 5,000 into 5150. Closing is 4,500 units into 5,100 divide by 2. 5,000 into 5150 4,500 into 5,100. 24 lakh 35,000 is the value. I can do in units also, almost same answer we will get, but the better to do value because opening stock has a different value. 24 lakh 35,000. 5,000 into 5150, 4,500 into 5,100, whole divide by 2. Are you getting 2435? Can you proceed? Any doubts in this? Next is, just give me. Is it 2435 or sorry 2 crore 2 crore 43 lakh, sorry 2 crore 43 lakh 50,000. Any doubts on this? Next, RM consumed is equal to opening stock plus purchase minus closing stock minus normal loss minus abnormal loss. We are consuming this many units. Opening stock plus what I buy minus closing stock. Normal loss is obviously not consumed and abnormal loss is also not consumed. Opening stock is, first write the units, 5,000. Purchase is 60,000. Closing stock is 4,500. Normal loss is 80. Abnormal loss is 40. $60,000. How much? 60,000? 500. You have to subtract normal and abnormal loss. 60,000, 380. 60,380 units have been consumed by us. Value is equal to this into 5,100. Every unit is 5,100 for us. 60,380 into 5,100. 30 crore. Now let's use this in the above formula. 30 crore 79 lakh 38,000. 30 crore 79 lakh 38,000. Clear? And I take it to the above formula. 2 crore 43 lakh 50,000. 30 crore 79 lakh 38,000. Question has specifically told 365 days. Even if silent, we would have done that. Round it off as per the question. 28.86 will be rounded off to 29 days. 29 days. That's the amount, or that's the number of days for which the average inventory is held. 29 days. Clear? One thing which I have not done specifically is one area called as price stores ledger preparation. We had one question even in budgetary control, there also we did not do, and here also I have not added, but it can get tested. It is there in the concept book. In the concept book itself, some examples will be there. So with this, 6 chapters have got over. They broadly, we are done with 31 marks, 41, 50, 59 marks of discussion is over. Tomorrow I'll do labor chapter and process costing. Labor chapter and process costing may get over a little early also. Around 1 o'clock also it can get over. We'll see. Process costing normally takes a lot of time. So we will do labor chapter and process costing. For the balance chapters, in my YouTube channel, I have recorded something in the month of September 24. For the earlier exam, which is your the Jain exam, I had recorded something. I'll add that in the playlist which I've created for this batch. so that you can go through, but the material will be different. You will not use this material to see those video. It will be the earlier revision material. More or less same questions will be there, but some changes will be there. So what you need to do is you can go through the questions which are there, and extra questions if they're in this material, you will have to cover those extra questions. Some changes will be there, not lot of changes, but some changes will 100% be there as compared to the previous material and this material. Clear? We'll end with this then.
Good morning, friends. Okay, let's continue with the discussion. Today we were to do two chapters. One is labor chapter and second is process costing. Labor chapter is predominant purpose of labor chapter is to calculate how much wages is payable. When we did material cost, there the focus was on controlling material cost, but here the main focus is how do you calculate laborers cost, and labor is normally paid on two bases. One on the basis of units produced, second on the basis of number of hours worked into rate per hour, units produced in rate per unit. And there can be an HALC plan where 50% bonus is paid, and there's a row 1 plan where 80 by ST into time saved into rate per hour. That's the bonus paid. Let's directly get into question. Question 1. Zeba Private Limited allotted a standard time of 40 hours for a job and the rate per hour is rupees 75. Actual time taken by a worker is 30 hours. You are required to calculate the earnings under HALC, row 1, time rate and piece rate system. Straightforward question just to get started with. Let's start HALC system. Computation of earnings under HALC system. Earnings under HALC scheme is equal to hours worked into rate per hour. This is technically called basic wage, and on top of it 50% of time saved into rate per hour. 50% of time saved into rate per hour. 50% of time saved into rate per hour. Hours worked here, they've said actual time is 30 hours, standard time is 40, allotted is called standard time, so standard time 40, actual 30, the gap is called hours saved. 10 hours we have saved, so 30 hours into 75, 50% of 10 hours into 75, 50% of 10 hours into 75, 2625, 2625. Then comes row 1 scheme. Row 1 scheme, earnings is equal to hours worked into rate per hour plus the bonus is not 50%, it's a percentage between the actual time and standard time. It's a comparison of that. So actual time by standard time into time saved into rate per hour. Time saved into rate per hour. The bonus percentage varies based on the actual time by standard time relationship. Actual time by standard time into time saved into rate per hour. Same thing, 30 hours into 75. 30 hours into 75. Actual time is 30. Standard time is 40. Time saved is 10. Rate per hour is 75. $2812.50. Actual time by standard time into time saved into rate per hour. Then time rate system, earnings is equal to hours worked into rate per hour. That's all. Nothing extra. Hours worked into rate per hour. No extra payment, no bonus, nothing. Hours worked into rate per hour. That's the time rate system. 30 hours into 75. Hours worked into rate per hour. 2250. Piece rate system. Earnings is equal to units produced into rate per unit. Units produced into rate per unit. Units produced into rate per unit. Question has not made any reference on units in the question, but they've asked for piece rate system. So we are going to make one assumption, any assumption you can make. Our assumption is, let us assume, let us assume 1 hour or 1 unit. Let us assume 1 unit takes 1 hour. 1 unit takes 1 hour. 1 unit takes 1 hour. That's our assumption. 1 unit is going to be produced in 1 hour. Now, standard time is calculated with the help of actual output. Standard time is calculated with the help of actual output. ST and AO is interlinked. AT and SO is interlinked. I don't need SO. Standard time is 40. 40 hours means 40 units have been produced. 40 hours is equal to 40 units. Standard time is equal. It's not actual time. Standard time is equal to actual output. 40 hours is equal to 40 units. Also, 1 hour is 75. 1 unit will also be 75 because we have assumed 1 hour 1 unit. We have assumed 1 hour 1 unit. 1 hour 75. 1 unit also 75. 1 unit also 75. 1 unit is also 75. 40 units into 75. 40 units into 75. We have made an assumption 1 unit is equal to 1 hour. 1 unit is equal to 1 hour is the assumption. So 40 units is equal to 3000 rupees. Clear? Any doubts on this? Fairly straightforward, simple question just to get started. Go through question 2. Okay. A company is undecided as to what kind of wage scheme should be introduced. Following particulars have been compiled in respect of three systems which are under consideration. actual hours worked, hourly rate of wages, production of three different products, and standard time allowed. For the purpose of piece rate, every minute is 10 paise. For the purpose of piece rate, every minute is 10 paise. Guaranteed hourly rate basis. What is guaranteed hourly rate basis? Is hours worked into rate per hour. Let's get earnings. Earnings under guaranteed hourly rate basis. Guaranteed hourly rate basis. Earnings is equal to hours worked into rate per hour. Earnings is equal to hours worked into rate per hour. Hours worked into rate per hour. Worker A 38 hours into rupees 6. 38 into rupees 6. 228. Worker B 40 hours into rupees 5. 200. Worker C 34 hours into 7.2. 34 hours into 7.2. How much? 244.8. Clear? Any doubts on this? Working note 2. Earnings under piece rate system. Earnings under piece rate system. Worker A is equal to earnings under piece rate system. Now, when we follow piece rate system, worker A has produced three different product, B has produced one product, C has produced two different product. Every minute is 10 paise. Every minute is 10 paise. So 12 minutes means the piece rate is 1 rupee 20 paise. Every minute is 10 paise. Piece rate means rate per unit. Rate per unit. 1 rupee 20 paise, 1 rupee 80 paise, and 3 rupees. And there is one condition called guaranteed at 75% if his earnings are less than 50%. What is this guarantee? We'll understand. So worker A, he has produced all the three products. Worker A 21 units into 1 rupee 20 paise. 12 minutes means 1 rupee 20 paise. 36 units into 1 rupee 80 paise. 46 units into 3 rupees. 46 into 3. Same is getting, earlier also he got 228, here also 228. Same 2 to 8. Worker B is equal to, he has produced only product R, only the third product he has produced, 25 units, 3 rupees for that. Now there is a condition which says piecework earning is guaranteed at 75% of the basic pay if the earnings are less than 50% of the basic pay. Now basic pay is this 200. I have been given a guarantee that I will get 75% of the basic pay if the earnings are less than 50% of the basic pay. What is 50% of 200 is 100. If you are getting 101, you will be paid only 101. 105, 105. But if it's less than 100, then you will be paid 75% of 200. Guaranteed at 75% of basic pay if the earnings are less than 50% of basic pay. Next, earnings is less than 50% of 200. basic pay, and hence B would be paid rupees 150, 75% of basic pay. 75% of basic pay. I have given a guarantee that I'll pay 75% of basic pay. 75% of basic pay. So as per the guarantee, I'll have to give rupees 75 to worker B, sorry, rupees 150 to worker B. If he was getting paid 100, 101, 102, no need to do any adjustment. Worker C, he has also produced two products, 60 units into 1 rupee 20 paise, 135 units into 1 rupee 80 paise. 300. Here also no problem with that condition of 50%. The worker B was deviating that condition, and hence we had to pay 75% of basic pay to worker B. Any doubts on this? Next, earnings under row 1 scheme. Under row 1 scheme, earnings under row 1 scheme. Now, in order to do the row 1 scheme calculation, we'll have to first compute standard time. What is standard time? Calculated with the help of actual output. So here standard time of worker A is 21 into 12 minutes based on actual output. 36 into 18 minutes, 46 into 30 minutes. Worker A standard time, computation of standard time. Computation of standard time. Worker A 21 units into 12 minutes, 36 units into 18 minutes, 46 units into 30 minutes. Two two 2280 minutes are 38 hours. 2280 minutes are 38 hours. That's worker A's analysis. Worker B 25 units into 30 minutes. 750 minutes are 12 and a half hours. 750 minutes are 12.5 hours. Worker C 60 units into 12 minutes, 135 units into 18 minutes, into 18 minutes. T150 minutes are 52.50 hours. 52.50 hours, 3150 minutes. Now we'll have to pay bonus. Bonus will be paid if you save time. If you don't save time, no concept of bonus. Any doubts on the standard time? Next, earnings. Earnings. Hours worked into rate per hour. Actual time by standard time into time saved into rate per hour. Worker A and B has not saved any time for the company because worker A took 38 hours and the standard time is also 38 hours. Worker B took 40 hours, standard time is only 12.5. No concept of negative bonus. So worker A 38 hours into 6, that's all. Bonus is 0. No time saved, so bonus is 0. 228. Worker B 40 hours into 5. No concept of negative bonus. 200. Worker A and worker B is not paid any bonus. There's no actual time by standard time into time saved into rate per hour for worker B. It'll lead to negative. Worker C, yes, he is paid bonus. Worker C, actual time by standard time, time saved, everything is there. Worker C has taken only 34 hours. 34 into 7.2. 34 into 7.2. Actual time is 34. Standard time is 52.5. Time saved is 52.5 minus 34. 331 point. Actual time by standard time into time saved into rate per hour. Clear? Any doubts on this? Can you proceed? Most important calculation is standard time, and standard time is always calculated with the help of actual output. Go through three. Here Halsey versus Rowan will be compared. Standard time for a job is 90 hours. I am paying only 50 rupees per hour. Hourly rate of guaranteed wages is 50. Because of the saving in time, worker effectively earns 60 rupees. I am paying only 50, but he is earning 60 rupees because of bonus and other things. For the same time, saving in time, calculate the hourly rate. What is hourly rate of wages? Is total earnings divided by number of hours. A worker will get under Halsey premium. Under Halsey premium. So, row 1, company is paying 50 per hour, but the worker is effectively earning 60 per hour. Let's do working note. Computation of actual time taken. Actual time taken. Earnings is equal to hours worked into rate per hour plus actual time by standard time into time saved into rate per hour. Row 1 scheme. The actual time, let's call it as A. Earnings is equal to hours worked into rate per hour. Actual time by standard time into time saved into rate per hour. Now I earn 60 rupees per hour. Effective hourly rate of wages is 60. My earning is 60 A. A is the time taken. 60 rupees per hour. A into 50 hours worked into rate per hour. A into 50 hours worked into rate per hour. A by 90 into time saved is, I gave 90 hours. You took 60, 50, 40, 70. I don't know the number. 90 minus A into 50. Somewhere we'll have to solve this, get the answer to A. 50A goes to the other side. 10A is equal to 4500A minus 90A square by 90 is equal to 10A. A into 90 into 50. A into 90 into 50. 4500A. A into negative A into 50. Sorry, 50A square. 50A square by 90. 90 gets multiplied to the other side. 900A is equal to 4500A minus 50A square. A and A square gets cancelled. 50A equal to 3600. A is equal to 72 hours. A is equal to 72 hours. 50A square is equal to 3600A. 50A equal to 3600. 10A is equal to 4500A minus 50A square by 90. 90 gets multiplied to the other side. 900A is equal to 4500A minus 50A square. 50A square is 3600A. 50A 3600. A equal to 72. Any doubts in this? Now I have to put them under Halsey plan and calculate the earning per hour. One more condition here is, normally Halsey pays 50% bonus. Question says assuring 40% to the worker. Assuring 40% to the worker. So the bonus is only 40%. It is not 50%. Normally 50% is paid, but here assuring 40% to worker. Working note 2. Hourly rate of wages under Halsey scheme. Under Halsey scheme, earnings is equal to hours worked into rate per hour plus 40% of time saved into rate per hour. It's only 40% because question specifically says assuring 40% to worker. Assuring 40% to worker. Normally you will not pay 40%, you will have to pay 50%. Question specifically says we are going to give only 40% bonus. Assuring 40% to worker. Hours worked is 72 hours. Company is paying 50 rupees. 40% of 90 minus 72 into 50. 40% of 90 minus 72 into 50. 3960. 3960 divided by 72 hours. 3960 by 72 hours. 55 per hour. 55 per hour. Clear? Any doubts on this? Go through question 4. Two workers A and B produce the same product using the same raw material. Normal wage rate is same. What is normal wage rate? Is rate per hour. Rate per hour is same. A according to row 1, B according to Halsey. Time allowed, A has taken 30 hours, B has taken 40 hours. Factory overhead is 5 per man hour. Factory cost is given. They want us to calculate what is the normal rate of wages and what is the material cost. What is the normal rate of wages and what is the material cost? Let's start. Computation of normal rate of wages and material cost. Normal rate of wages and material cost. Particulars worker A, worker B. Direct material. Direct material. Factory cost includes three things: direct material, direct labor, and factory overhead. X, we don't know the amount. Direct material X and X. Direct wages, underline that. Two items will be there. One is basic wages, and both have saved time bonus. Basic wages and bonus. Now, I don't know the rate per hour. Rate per hour is Y. Direct material, we don't know X. Rate per hour, we don't know Y. Worker A has taken 30 hours. Worker B has taken 40 hours. Worker A as per Rowan scheme. Worker B as per Halsey scheme. So if you have taken 30 hours into Y. Y is the rate per hour. 40 hours into Y. 30Y, 40Y. 30Y and 40Y. And bonus is 80 by ST into time saved into rate per hour. 80 by ST into time saved into rate per hour. Actual time by standard time into time saved into rate per hour. 30 by 50 into 20 into y. And worker B is proven scheme, 50% of time saved into rate per hour. 50% of time saved into rate per hour, 5y. 50% of time saved into rate per hour. Basic wages plus bonus. Good question. Then factory over it. 5 per hour actually worked. 5 per hour actually worked. So 5 into 30 hours, 5 into 40 hours. Total cost x plus 30y plus 12y plus 150 is equal to 3490. X plus 30y plus 12y plus 150. Material plus labor plus factory over it. $3,600. 3490 and 3600. Solve the equation. Material cost 2500 and labor cost normal rate of wages is 20 per hour. Material cost 2500, normal rate of wages is 20 per hour. 20 per hour. Clear? Any doubts on this? Can you proceed? Third part I'm not doing. We have to do the statement again, but now without x and y. Earlier we did a statement of factory cost with x and y. We'll have to repeat the statement without writing x, without writing y. We now have the numbers. Any doubts in this? Clear? Can we proceed? Go through question 5. Slightly different question. Go through this. Okay. AB Publisher works for various educational institute for editing, binding, printing of various books and magazines on job work basis. Currently, it has employed 30 workers, pay them on an hourly rate basis for each job assigned. To complete one of the process of binding, average time allowed to an employee is 8 hours. So one magazine should take 8 hours. One magazine should take 8 hours. In the month of March, two employees C and D were given 21 and 30 units of magazine. So they should have taken 21 into 8 hours, 30 into 8 hours. Whereas what they took is only 78 hours and 114 hours. So they would have saved a lot of money, a lot of time. Existing rate of wages is 60 with bonus as per Halsey system. Bonuses as per Halsey system and existing rate of wages is 60. New wage agreement has been signed that employees will be paid 65 per hour from the month of April. But inadvertently for the month of March itself, the accountant by mistake paid at the rate of 65. Amount of loss that has been incurred due to incorrect rate selection in the month of March. So I have to do Halsey calculation at 60 per hour, 65 per hour. Gap is the loss due to incorrect rate selection. Loss incurred by the company if it had followed row 1 scheme. Again, row 1 with 60 rupees, row 1 with 65 rupees. Gap is the loss. Amount that could have been saved if row 1 scheme of bonus payment. So saved is row 1 versus Halsey comparison. Working note 1 Halsey scheme. We'll do only the first worker. Halsey scheme. Second worker is not needed. Halsey scheme. Incorrect rate of rupees 65. Incorrect rate of rupees 65. Earnings is equal to hours worked into rate per hour plus 50% of time saved into rate per hour. Leave some two lines gap. Standard time. Standard time computation. Standard time computation. We are doing only worker C. We are doing only worker C. Worker C has produced how many units? 21. Standard time is equal to 21 units into 8 hours per unit. 21 units into 8 hours per unit. 168 hours. 168 hours. Earnings is equal to earnings is equal to 168 hours the worker C should have taken. He ended up taking only what? 78 hours. So hours worked 78 hours into wrong rate 65. 50% of 168 hours minus 78 hours into 65. $7,995. This is incorrect rate. Then we'll do the correct rate. The gap is the loss due to wrong rate selection. The gap is the loss due to wrong rate selection. Incorrect rate we are paying 7,995. Then correct rate of rupees 60. Correct rate of rupees 60. Nothing much to be done. Same thing, just that you'll have to do 60 now. You do and then refer the screen. 7380. This if I had followed the correct rate. The gap is the loss due to wrong rate selection by my accountant. Accountant ended up selecting the wrong rate, and because of which there is a loss which the company is suffering. Loss due to wrong rate 7995 minus 7380. How much? 615. Same analysis we'll have to repeat now under row 1 scheme. Incorrect rate, correct rate, and loss due to incorrect rate. Working note 2, row 1 scheme. Row 1 scheme, incorrect rate of rupees 65. Earnings is equal to earnings is equal to hours worked into rate per hour plus 80 by ST into time saved into rate per hour. Hours worked into rate per hour, 80 by ST into time saved into rate per hour. 78 into 60, 78 by 168, 90 into 60 into 65. First we are doing 65, then we'll do 60. 65, sorry. First we are doing 65 calculation. Two seven 16. 78 by 168 into 90 into 65. 2716 plus 5070. 7786. 7786. This is incorrect rate of 65. Incorrect rate of 65. Now we'll have to do the correct rate of 60. Correct rate of 60. Correct rate of 60. Seven one eight seven. The gap is the loss due to the wrong rate. 7187. Any doubts on this? Loss due to wrong rate. 7786 minus 7187. How much? 599. Loss due to wrong rate. 7786 minus 7187. 599. Loss due to wrong rate 599. Now question has also asked for what is the saving that could have been made if you follow row 1 system. Now saving is comparing row 1 with the HALC. Two answers I'll give. One comparing the wrong rate, second comparing the right rate, because
The loss that could have been saved or amount that could have been saved because by mistake he has used applied 65. So if you had applied 65 in Halsey, 65 in row 1, what is the difference? And if you had done the right rate, 60 and 60, what is the difference? Next, saving in row 1 scheme. Saving in row 1 scheme. Saving in row 1 scheme. Particulars in 2 columns. Particulars and wrong rate of 65, correct rate of 60. Wrong rate of 65, correct rate of 60. Halsey earnings, row 1 earnings, and saving in row 1 scheme. Saving in row 1 scheme. Halsey earnings, row 1 earnings, savings in row 1 scheme. How much is the Halsey earning at wrong rate? 7995. Correct rate? 7380. Row 1 is 7786. 7187. The gap is the saving I will have if I had applied or if I had opted for row 1 scheme. 209 1. Logical is 193, but by mistake we have applied wrong rate. So if I had repeated the mistake under Halsey and row 1, technically the gap is 209. 209 is the saving I would have had under row 1 scheme. Any doubts on this? Clear? Can you proceed? Go through 6, a good problem. Okay. Tropic Private Limited was engaged in the business of manufacturing product B. Product needed 2 units of material R. Company wants to sell 24,000 of P and does not wish to retain any closing stock. Opening stock is 4,000 units. Raw material has to be procured after considering the opening stock of R amounting to 10,000. Technical director further confirms that the yield in the course of manufacture is 80% of input. Is also very important information. Company presently procures its annual requirement on a quarterly basis from a regular supplier, getting a discount of 2.5% on the price of 20. First analysis is EOQ. Every time the company places an order, it incurs 125 for the order. placed. Company has also taken a rented warehouse and the annual cost of storage. Carrying cost is 10 per unit, not given percentage. Company has appointed chartered accountant. Then Mr. T reviewed the labor costing, identified that employees were paid overtime wages, to ensure completion. Overtime wages comprised of daily wage, and 100% of daily wages is overtime premium. So if you do overtime, I'll have to pay double rate. Based on the cost record, 180 hours of regular, which is given 200 per hour, and overtime is 20 hours, which is given at 400. Mr. T suggested that the above time may be taken as standard. So standard time is 180 plus 20, 180 plus 20, and the scheme of incentive be introduced to reduce the overtime. He further indicated that row 1 scheme of incentive can be done, and this will lead to production of 125 units per hour. People will start producing 125 units per hour. Now, they have asked for EOQ, they have also asked for row 1 scheme analysis. Now, for doing EOQ, first thing I have to do is sales. From sales, I'll have to get to production. From production, raw material consumption. From raw material consumption, raw material purchase, and then apply the EOQ formula. Let's start. Working note 1. Computation of quantity to be purchased. Quantity to be purchased. Annual sales is equal to. Annual sales is equal to. First, they have given the sales in the question. How many units? 24,000 units. 24,000 units. Sales plus closing stock minus opening stock is production. Budgetary control area. Sales plus closing stock minus opening stock is production. It's a good question. 24,000. Company does not want to retain any closing stock. 0, 4,000. Production is equal to 20,000 units. RM consumed is equal to production into input by output. Production into input by output. Production into input by output. Input by output. What's the input output ratio given? The product P, there are two information. First information said product P required 2 units of material R, and another thing they said is the yield in the course of manufacturing is only 80% of the input. So ideally 2 units should give me 1, but it will not give me 1 because yield is only 80%. Yield is only 80%. So into 2 by 1 into 100 by 80. 100 by 80, the yield is only 80%. Into 2 by 1 is the units to be used, but 2 units will not give me 1 unit of output. 2 units will give me only 0.8 units of output. 2 units will give me only 0.8 units of output. Into 2 by 1 into 100 by 80 into 100 by 80. How much? 50,000. RM consumed is equal to opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock. 50,000 is equal to some opening stock of raw material is given 10,000 plus purchases closing stock 0. Purchases 40,000 units. Now let's see the part 1. Annual requirement of material are to meet the target sales of 24,000 units of product P is I'll be buying 40,000 units. I'll be buying 40,000 units. Can somebody may say I want to interpret it as units consumed, but better to assume it as units purchased 40,000. Ordering quantity as per the current inventory policy. The current inventory policy is we are buying them on 40,000 divided by 4. 40,000 divided by 4. No need to do even EOQ. 40,000 divided by 4 means the answer is over. We'll do EOQ, but the answer gets over there itself. 40,000 divided by 4. 15, 12, 12, 5 can't be the answer. So EOQ has to be 1000. Third is net savings in inventory cost. EOQ and quantity discount comparison. EOQ and quantity discount comparison. Let's do the EOQ, but the answer has to be 1000 units. Next, EOQ is equal to square root of 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. Annual demand is 40,000. Ordering cost per order is 125. Carrying cost is given directly, not percentage. Carrying cost is 10. Has to be 1000 units. It has to be 1000 units. That's what the MCQ said there. In this question, carrying cost is not a percentage of purchase price, directly 10. Next, comparison of EOQ and quantity discount. EOQ and quantity discount. 12 line items will have to do. 12 items will have to do. You do it and then refer the screen. EOQ and quantity discount. Saving in EOQ. Do the calculation and then see the comparison. The screen.
20,500 is the savings in EOQ. It's not a percentage of purchase price directly 10 rupees here. If it is a percentage, then we'll have to take the percentage, it will change. Till this, it is more of material costing question. Then comes the Rowan scheme of payment. Any doubts on this? Can you proceed? Rowan scheme. Existing wage cost. Existing wage cost. Existing wage cost. Today we are paying 180 hours of regular working and 20 hours of overtime. 180 hours of regular working and 20 hours of overtime. Regular is at the rate of 200, overtime is at the rate of 400. So today payment is 180 hours into 200, 20 hours into 400. 180 into 200, 20 into 400. How much? Now for Rowan scheme, the question has said take this as the standard time. Take this as the standard time. Standard time is equal to 180 hours plus 20 hours. Actual time is equal to we have produced 20,000 units, and question says you are producing at the rate of 125 units per hour. You are producing at the rate of 125 units per hour. So to produce 20,000 units, we would have taken 20,000 units divided by 125. We are producing at the rate of 125 units per hour. Producing at the rate of 125 units per hour, and for the year we are producing 20,000 units. So actual time 20,000 units by 125 160 hours. Time saved is 40 hours. Time saved is 40 hours. Earnings is equal to hours worked, rate per hour, time by standard time into time saved into rate per hour. One 160 hours into full rate per hour. Sorry, 200. No, normal rate. That's all. No overtime concept now. 200. Actual time is 160. Standard time is 200. Time saved is 40 and 200. 44,000 and 38,400. 44,000 and 38,400. 44,000 and 38,400. Clear? If you look at the data here, it says incentive under the Rowan scheme, incentive is 6,400. Bonus is 6,400. Incentive under the Rowan scheme 6,400, and savings is 44,000 minus 38,400. 44,000 minus 38,400. 5,600. 5,600. Any doubts on this? Clear? Go through 7. Again, a good question. Okay, Shivi is working by employing 10 skilled worker. It's considering introduction of some incentive scheme, either Halsey scheme or Rowan scheme for increasing the labor productivity. She feels that if the scheme could bring about an average 20% increase over the present earning, it will act as a sufficient incentive for the workers to produce more. Hourly rate of wages, today we are paying 2 rupees per hour. We want to shift to either Halsey system or Rowan system. Average time for producing one piece by one worker at the time of previous performance, that is, one unit is equal to 2 hours. That's the time allowed. Number of working days in the month, number of working hours per day for each worker, actual production. Calculate the effective rate of earning. What is effective rate of earning? Is rate earning per hour, and savings in labor cost, and advise which scheme is to be implemented. So Rowan versus Halsey comparison, right? Particulars, Rowan scheme, Halsey scheme. Particulars, Rowan scheme and Halsey scheme. Rowan scheme and Halsey scheme. Hours worked, rate per hour, basic wages. Hours worked, rate per hour is basic wages. Hours worked, rate per hour, basic wages. Now, there's a concept called man hours concept. What is man hours concept is, if 10 people are working, hours worked will be multiplied with 10, because 10 people will have to be paid. In this question, working days in a month is 25, working hours per day is 8. So, 25 days into 8 hours into 10 employees. This is the hours work. 25 days into 8 hours into 10 employees. 25 into 8 into 10. Was the rate per hour given? 2. Basic wages is 2000 into 2. 4000. Basic wages 2000 into 2. 4000. This is one part of the calculation.
The second part of the calculation is on the bonus side. Bonus depends on actual time by standard time into time saved or 50% of time saved. So standard time always computed with the help of actual output. We have produced 1250 units. Standard time is 1250 units into 2 hours per unit. Into 2 hours per unit. 2 hours per unit. 1250 units into 2 hours per unit. 1250 into 2 hours per unit. 2500 and 2500. Time saved. Time saved is 2500 minus 2000. And then we pay bonus. 80 by ST into time saved into rate per hour. Actual time by standard time into time saved into rate per hour. Total earnings 4800 and 4500. Total earnings 4800 and 4500. 4800 and 4500. Question wanted earning per hour, effective earning per hour. Effective earning per hour is equal to 4800 divided by 2000 hours of working and 4500 divided by 2000 hours of working. 2.4 and 2.25. Effective earning per hour 2.4 and 2.25. 2.4 and 2.25. Clear? Effective earning per hour 2.4 and 2.25. Next, saving in labor cost per unit. Saving in labor cost per unit. Saving in labor cost per unit. The total earnings of the employee is nothing but the labor cost of the company. Earnings of the employee is nothing but labor cost of the company. From an employee point of view, it's called earnings. From a company point of view, it's called labor cost. So new labor cost per unit. New labor cost per unit 4800 divided by 1250. 4800 1250 units. 3.84. 3.60. Existing labor cost per unit. This is the new labor cost per unit. 3.84 and 3.6. 3.84 and 3.6 is the new labor cost per unit. Existing today is 1 unit is taking 2 hours. Today 1 unit is taking 2 hours, no bonus, nothing. And 2 hours would have been paid 2 into 2, 4 rupees. 2 into 2, 4 rupees. 1 unit is taking 2 hours today and the rate per hour is 2 rupees. Rate per hour is 2 rupees. So today we are paying 2 hours into 2 per hour. and the gap is the saving in labor cost per unit. 16 paise, 40 paise. Savings in labor cost per unit. 16 paise and 40 paise. 16 paise and 40 paise. That's the saving in labor cost per unit. Clear? Now, question has said, which scheme is to be implemented? If I look at from a savings point of view, 40 paise saving HALSI is better. But I gave one assurance to the employee saying that their earnings will increase by 20%. Their earnings will increase if the proposed incentive scheme could bring about an average increase of 20%, an average increase of 20%. So today an employee is earning 2 rupees per hour. He would at least want 2 plus another 20%. That is 2 rupees 40 paise. He is earning today 2 rupees per hour. He would want at least 2 plus another 20%, 2.4, which is only possible under Rowan scheme, because Rowan scheme will give me 2.4. HALSI is not even applicable because HALSI is giving only 2.25. I gave an assurance. Advise Navya about the selection of the scheme to fulfill her assurance. To fulfill her assurance. So assurance given is very clear. The assurance given here is that there will be an increase by how much? 20%. So 2 should go up to 2.4. 2 should go up to 2.4. So we will go ahead with implementing the Rowan scheme. We'll go ahead with implementing the Rowan scheme. In case saving was not there in Rowan, then we would have rejected both the scheme. ALSI rejected because assurance is not fulfilled. Rowan selected because assurance is fulfilled, and company is also saving money. Company is also saving money. Clear? Any doubts on this? Done. Let's take a break of 15 minutes. Okay. Till now, we focused on calculating labor cost. After computing the labor cost, it has to be recovered from a customer. That is what the third segment of the chapter is. Let's go through 8. Okay. Following data have been extracted from the books of ABC Private Limited: salary, bonus, employer's contribution, total cost of employee welfare activity, leave permitted, number of employees, normal idle time, abnormal idle time, working days. Now, the purpose of calculating annual cost is to calculate cost per hour and ultimately recover it from the customer, saying that customer has to pay me 500 per hour, 600 per hour, and there is some abnormal idle time which the question is talking about. Working note 1: computation of annual cost per employee. Annual cost per employee, particulars calculation amount. Annual cost per employee. Salary. One employee calculation will do. Salary 30,000 per month. So 30,000 into 12. Employee cost will include everything, including all allowances, everything. Salary 3 lakh 60. Bonus 25% of salary 90,000.
Employer contribution. This is an expense for the employer. Employer contribution 15% of salary. 54,000. Employee welfare activities. All of this are the cost for the employer. Employee welfare activity 661,500 per annum, and there are totally 175 employees. So 661,500 is for all the employees put together. 661,500 by 175. 661,500 by 175. Total cost per employee or annual cost per employee. There can be other expenses and all, but these are the expenses given here. 5,07,780. 507,780 is the annual cost per employee. 507,780. Now, question says employee cost per hour. One employee will work for 310 minus 30 days, which is permitted leave. 280 days into 8. In that, normal idle time can be subtracted. Abnormal cannot be subtracted, like we did in material, where normal loss can be subtracted. Effective working hours 280 days into 8 hours minus normal loss 70 hours. Normal loss 70 hours. Normal loss 70. 2170. Employee cost per hour. Employee cost per hour. Based on this, I'll recover from customers. 230, 234 per hour. Every customer, if he uses any time of our employees, they will be asked to pay 234 rupees. Then there's an abnormal idle time per employee. Cost of abnormal idle time. We have wasted 50 hours. This is a loss for the company, and this is per employee. If they do overall, then you have to multiply with 175. 50 into 234. 11,700 is the loss. 50 into 234. 11,700 is the cost of abnormal idle time. Cost of abnormal idle time. Clear? Can you proceed? Go through 9. Okay. P and Q are part of a manufacturing team that handles multiple jobs within the production process. Detailed description of the respective monthly wages, standard working hours, overtime, employer contribution, basic wages, and some employee contribution, dearness allowance, contribution to PF, contribution to ESI. Overtime was done on job is you are required to calculate earnings of P and Q, allocate the employee cost. Now, earnings of P and Q will be little different from the labor cost. What is my earning is basic wages, dearness allowance, and overtime, and from this my contribution to PF. As an employee, I have to contribute to PF, that will be subtracted. When employer does the calculation, he has to consider employer contribution to PF and ESI. Working note 1, computation of earnings of P and Q, earnings of P and Q, basic wages, earnings of P and Q, basic wages 12,000 and 15,000, basic wages 12,000 and 15,000, dearness allowance, dearness allowance, this is an extra allowance to take care of the inflation effect, 50% and 50%, extra 50% paid, overtime wages, overtime wages. Question says overtime is compensated at double the sum of basic wages and dearness allowance, double the sum of basic wages and dearness allowance. Overtime has been done by P and he has done an overtime of 8 hours. As per rule, you have to pay 210 hours, 18,000 rupees, basic wages and dearness allowance, basic wages and dearness allowance. So come down, 210 hours is equal to rupees 18,000. 8 hours equal to question mark, and then you have to double it. You have to double it. First, you'll have to calculate it and then double the amount. Double the amount. $685.71 double wages. You can round it off now. 1,371. Overtime wages is 1,371. 1,371. 1,371. Clear? 1,371. Less employee contribution to PF. Whatever employee is contributing, it will be subtracted and then given to the employee. Employee contribution, both have to contribute the same percentage. Employer contribution is equal to employee contribution. It can be different also. 10% on basic wages. It can be on basic wages and dearness allowance, but it's very clear on basic wages. 10% into 12,000, 1,200. 10% into 15,000. Less employee contribution to ESI. 1.75% into 12,000. 210.
263. Net earnings. Net earnings. This is what I'll be paying them. Net earnings. 17,961. 20,737. This is the earnings of the employee, which but he's earning more only, but this is what will come. Balance will get deposited with PF and ESA, guys. Working note 2, computation of labor cost, and then we have to allocate the labor cost to some jobs. Computation of labor cost, particulars into employees. Basic wages, dearness allowance. Basic wages, dearness allowance. Overtime, we'll write it in separately. Basic wages, dearness allowance. Employer contribution to PF. Employer contribution to PF. Overtime, we'll write in some time. This is part of my expenses. And the contribution percentage can be different also. Put a total at this stage and call normal labor cost. Overtime separate. Normal labor cost. Overtime, we'll write it separately and then say total labor cost. Normal labor cost. 19,410. 24,263. Normal labor cost 19,410 and 24,263. Separately overtime cost. Overtime cost. We have already calculated the amount. 1,371. Total labor cost. In this segment of the topic, we are trying to see how I can recover it from the customer. Earlier focus was on calculation. Now I have to recover this also. Now whatever I paid to worker P will be recovered in this proportion from three people: job A, job S and job T. Overtime whatever I paid will be recovered from job S, and worker Q 30, 50 and 20. Next, allocation of labor cost. Allocation of labor cost. Purpose of allocating is telling these customers to make the payment. Particulars in three jobs. Particulars in three jobs. Normal labor cost of P 19,410. Normal labor cost of P 19,410 will be distributed in the ratio of 30, 30, 40. 30, 30 and 40. 5823, 5823, 7764. This is the normal cost part. Normal cost in the ratio of 30, 30 and 40. Overtime cost. Overtime cost will be recovered from only one job as per the question. Overtime is done on job S. 1371, job S has to pay whoever is the customer there. The normal labor cost of Q, 24 to 63. Some proportion they have given, 30%, 7279, 7279, 50%, and 20%. Total labor cost. This is what is allocated to the various jobs. Thirteen one zero two, 19,326, 12,617. Clear? Any doubts on this? Go through question 10. Okay, the next concept is called labor turnover. Labor turnover basically measures the rate of change in the workforce of the company. Whenever there is a change in the workforce of the company, new employees come in, they take a lot of time to new learn things, and all of this will cost company some money. So that is what this concept is all about. Because of the new employees, what is the loss the company is facing? Now there are five methods of measuring employee turnover. First method is called separation method. Separation method means number of separation. What is number of separation? Is employee leaving divided by average workforce into 100. Second is replacement method. Number of replacement by average workforce. New recruitment method. Number of new recruitment by average workforce. Replacement means you are recruiting a person in place of somebody going out. New recruitment means you are recruiting a person without a person going out. So opening workforce, less separation, add replacement, add new recruitment is the closing workforce. Opening, less separation, add replacement, add new recruitment. Replacement and new recruitment put together is called accession. What is accession? Is number of people coming into the company, and all the three put together is called flux method. Here have replaced 72 workers, flux method 16%, replacement method 8%, separation method 5%. I have to find out average number of workers. I have been given replacement answer. Let's write replacement method is equal to replacement method is equal to replacement method is equal to number of replacement by average workforce. Number of replacement by average workforce Number of replacement is 72. Replacement method answer is 8% divided by average workforce. This will give us the average workforce. 72 by 8%, 900. Left and discharge. Left and discharge basically means separation. Left and discharge is how many people are going out of the company. Left and discharge is people going out of the company. Separation method is equal to number of separation divided by average workforce. 5% is equal to number of separation by 900. Number of separation is, this is technically called workers left and discharged. Workers left and discharged is 45. Recruited and joined means there are two things recruited and joined. One is called number of people getting replaced, that is called recruited and joined. Also new recruitment. Flux method is equal to separation plus replacement plus new recruitment by average workforce. Separation plus replacement plus new recruitment by average workforce. Separation plus replacement plus new recruitment by average workforce. What's the flux method answer? 16%, 45 plus 72 plus new recruitment by 900. This will give the new recruitment number 20. And finally write worker recruited and joined is equal to recruited and joined is equal to 27 plus 72. Recruited and joined is replacement is also recruited and joined. New recruitment is also recruited and joined. Replacement joined in place of somebody leaving. New recruitment joined for some extra new work which has come in. 27 plus 72, 99. Clear? Then equivalent employee turnover rates for the year. What was calculated was for the quarter. Now write equivalent employee turnover rate is equal to equivalent employee turnover rate is equal to equivalent employee turnover rate for year is equal to quarterly rate, because they have given quarterly rate, into 4. If they give monthly rate, into 12. If they give number of days also, then into 365 by number of days. Quarterly rate into 4. 4 methods. Flux method 16% into 4. 64% is the annual rate. 64% is the change in the workforce for the year. Replacement method 8% into 4. Separation method 64, 32 and 20. 5% into 4. 64, 32 and 20. Then there's a requirement called opening and closing workforce. I know the average workforce. From opening, if you subtract separation add replacement, add new recruitment, you'll get closing. And somewhere this will help us in calculating opening and closing workforce. Next, computation of opening and closing workforce. Of opening and closing workforce. Opening and closing workforce. Particulars and amount. Opening and closing workforce. Opening workforce. Opening workforce. X. We don't know the number. Opening workforce is X. From this, we subtract two items. Subtract one item, less separations. Separations are the people who have left the company. Less separations. How many people left the company? 45. Add replacements. New people came into the company. 72. Add new recruitments. And this will give you closing workforce. Closing workforce. Opening plus closing by 2 is 900. You will get the answer to opening and closing. Opening plus closing by 2. This is X plus 54. X plus 54 by 2 is 900. This will give you answer to X, which is opening. Closing is X plus 54. Closing is X plus 54. X plus 54 by 2 is equal to 900. Is equal to 900. What's the answer you got? Opening workforce 873. Closing is 927. Opening is 873. Closing is 927. Any doubts on this? Go through 11. You go through the question. Okay. Super Limited is a manufacturing company facing a problem of high labor turnover in the factory. Before analyzing the causes and taking remedial step,
the company wants to ascertain the profit lost for the year 22-23 on account of labor turnover. For this purpose, some data is given. So we are finding out what is the loss due to labor turnover, because labor turnover is to be avoided. Last year we did a sales of 2 crores 16 lakh 80,000. PV ratio is 15%. Number of hours worked is 5 lakh. In this, some 60,000 attributable to training new recruit. 40,000 hours were unproductive there. Due to delays, we lost some 95,000. 1,500 was defective. Settlement cost, recruitment cost, cost of training. All this cost put together is the cost of labor turnover or profit lost due to labor turnover. Profit lost due to labor turnover. Let's do this. Working note 1. Impact of labor turnover. Impact of labor turnover. Particulars calculation amount. Impact of labor turnover. Particulars calculation amount. Contribution lost due to training. What is this? I'll explain. Lost due to training. Now, in the last year, we did a sale of 2 crores 16 lakh 80,000 and we earned 15% contribution on that. This was earned by working 5 lakh hours, but there's a problem in this 5 lakh. In this 5 lakh, 60,000 is due to training new recruit, in which 40% hours is unproductive. 40% hours is unproductive. So last year, 5 lakh hours minus 40% of 60,000 hours were waste of time. 40,000 of 60,000 hours were waste of time. Minus 24,000 hours gave me 2 crores 16 lakh 80,000 into 15%. This is what I earned. I earned 5 lakh minus 24,000 hours. 24,000 hours were wasted. In 4 lakh 76,000 hours, we earned 2 crores 16 lakh 80,000 into 15%. Approximately some 6.83 per hour we were earning. 5 lakh hours included 60,000 hours attributable to training new recruit, out of which 40,000 hours were unproductive. If this extra 24,000 hours were productive, this could have given us extra profit. Extra profit if these were productive in the company. We could have earned extra 163 966. If people had not wasted this time, we would have earned extra 163 966. I was training them. In the training period, obviously production was not coming properly, so we wasted time. There's another loss also. There is delay in recruitment. Delay in recruitment, 95,000 hours were lost due to this. Contribution lost due to delayed recruitment. Due to delayed recruitment, 4,76,000 hours equal to 3252. 95,000 hours. 95,000 hours. Put together some 8,13,000 we have lost because we could not recruit people on time, and the people whom we recruited also, they are taking their own time to learn things. So training losses there and also delayed recruitment losses there. These two are the most important loss. One is there is a delay in recruitment because of which we are losing money, and second is contribution is getting lost due to training part.
Beyond this, it's straightforward. Then 1500 units produced were defective. Rectification cost. Rectification cost 1500 into 40. Rectification cost 1500 into 40. Then everything directly. Settlement cost. Settlement cost 237,880. Recruitment cost 1,40,000. Training and induction cost 161,950. Total cost of labor turnover or impact on profit due to labor turnover. Impact on profit due to labor turnover. How much? This is the loss we are suffering because of labor turnover, and that's why organization would want to control the labor turnover. If labor turnover is not controlled, this loss will be huge for the organization. 14,12,830 is the loss due to labor turnover. Clear? Any doubts on this? Go through 12. Okay. Treatment of overtime premium. Whatever extra we pay is called overtime, and how do we treat it depends on various situations. I'll explain the concept as we do. In a factory, there are 50 workers working 8 hours per day, including 30 minutes for lunch break, work for 160 days. During the period, I paid employees 3,90,000. Overtime premium rates are 180% and 160%. If you work on Sunday, you have to pay 180%, extra 80%. And if you do before and after normal working hours, you have to pay 160%, 180 and 160%. During the last 6 months, following hours were worked: normal time, Sundays and holiday, before and after normal working hours. And then there is a separate job called job BX where this has happened, where overtime is worked regularly as a policy, irregularly to meet the requirements of the production, where it is due to the request of the customer, where overtime is worked on account of flood. The treatment differs for the four situation. I'll explain the treatment as we do. First, let's calculate what is the normal rate and what is the overtime rate, because the rate per hour is not given in the question. How will you get rate per hour? Is 3,90,000 divided by the number of hours. You'll have to calculate the number of hours and divide by the number of hours to get the rate per hour. In that, 180% and 160%. Let's start. Working note 1, computation of rate per hour. Rate per hour. Basic wage rate per hour is equal to, basic wage rate per hour is equal to rate per hour is equal to 3,90,000 divided by 50 employees work for 7.5 hours per day. Work for 7.5 hours, 8 hours including 30 minutes worked for lunch break, and 160 days. 160 days. 50 workers into 7.5 hours into 160. I'm assuming for lunch break there's no separate payment made. If you say that is paid, then into 8 in the denominator. How much you get? 6.5 per hour. Then rate for Sundays working. Rate for Sundays working 6.5 into 180% into 180%. Rate for Sundays working 6.5 into 180%, 11.70. Sundays working 11.70. Rate for before and after normal working 6.5 into 160%, 10.40. 10.40. 10.40. And there's another calculation called, why is this calculation, we'll understand later, average inflated wage rate. Average inflated wage rate. What is the use of this? You'll understand in some time. Average inflated wage rate. What is average inflated wage rate? Is 56,250 hours. Okay, in fact, number of hours was available here. 60,000 was available here. 56,250 hours. We are paying at the rate of 6.5. 750 hours we are paying at the rate of 11.7, and 3,000 hours we are paying at the rate of 10.4. On an average, what is the rate? We'll calculate. 56,250 into 6.5 plus 750 into 11.7, 3,000 into 10.4, whole divided by 60,000. Whole divided by 60,000. Six point, no, 76 I'm getting. Just check. Just check the calculation. What is the number you get? I got 6.76. Maybe check again. 6.76. Working note 2, treatment of overtime. Particulars and 4 situations. Particulars and 4 situations. Situation 1, whatever situation they have given. Particulars and 4 situations. Particulars and 4 situations. First is where overtime is worked regularly in whole year. Where overtime is worked regularly in whole year. Labor cost. If you do regular overtime, Whether you are doing overtime for your job or not doesn't matter. Labor cost is 3000 into 6.76. 3000 into 6.76. 3000 into 6.76. Average inflated wage rate 20 to 80. 20 to 80. Second situation, irregularly to meet the requirement of the production. If it's done irregularly to meet the requirement of the production, that is because demand has gone up something. 3000 into 6 rupees is labor cost. 3000 into 6 is labor cost, and then there's another item called overhead cost. 3000 into 6 is labor cost. What is overhead cost is, in this 200 hours you paid something extra. The extra payment is called overhead. Overtime premium is the extra payment. When I did first scenario, I'm least bothered whether you do overtime or not. 3000 into 6.76. Now overhead cost is 200 hours. 200 hours. 200 hours into 200 hours into, for the first category we are paying extra 11.7 minus 6.5. 11.7 minus 6.5. First category we are paying 11.7 minus 6.5. Extra, whatever extra we are paying, 11.7 minus 6.5. What? 6.5, sorry, 6.5. 6.5, sorry, 6.5. 11.7 minus 6.5 minus 6.5. 200 hours into 11.7 minus 6.5, and 400 hours into 10.4 minus 6.5. The extra payment is called overtime premium, and that is treated as overhead. That is treated as overhead. $2,600. 2,600. Clear? Third situation, labor cost 3000 into 6.5, where it is done at the request of the customer, and extra 2600 is treated as labor cost. If it's at the request of the customer, that extra payment is treated as labor cost. It is treated as labor cost. In situation 2, the extra payment is treated as overhead premium, or overtime premium is treated as overhead cost. Situation 1, we are not bothered whether we are paying extra, not paying extra. 6.76. So first situation, cost is 20 to 80, labor cost. Second situation, labor cost 19,500, overhead cost 2,600. Third situation, labor cost itself 20 to 100. And last situation, if it is due to flood and all, labor cost is 19,500, and the extra whatever you paid will go to costing P&L, because it is an abnormal cost. It is due to flood, abnormal cost, customer will not pay. Customer will not pay. Situation 1, regularly as a policy, average inflated wage rate. Average inflated wage rate. Whether you do overtime or no overtime, it is average inflated wage rate as a policy. Second situation, irregularly to meet the requirement of the production. In this situation, extra part is treated as factory overhead. And third situation, the normal and the extra is treated as labor cost. And fourth situation, labor, and this will go to costing P&L. The extra will go to costing P&L. Clear? Any doubts on this? With this, my labor chapter get over. I will take a break of 45 minutes and then do process costing. So we start process costing at 9:45. Okay, let's start now with process costing. Now, this chapter
is again a format driven chapter. There are set of steps to be followed, and you follow the steps properly, you will get to the answer. We have, I think, 5 6 different types of question: P4 method, weighted average cost method, one material problem, two material problem, without degree of completion, with the degree of completion. So I will explain the steps as we do question. First, we are going to do non-equivalent units question, where sorry, where we have very limited steps. Go through question one. Question one. Go through question one. A chemical compound manufactured through two processes, namely X and Y. Y is dependent on output generated by X, and the semi-finished chemical compound received from process X shall be mixed with further chemical in process Y. Details of the cost: material cost, labor cost, process plant time, expected output, actual output, realizable value of normal loss, and certain overhead cost. There is no finished stock, no work in progress, so concept technically no degree of completion. This type of question we do only two steps. First step is called input output statement. Second step, we prepare a process account. Working note one: input output statement. Input output statement. Particulars and two processes. First we'll do process X, and then we'll fill the process Y one. Process X and process Y. So there's a format for input output statement: opening stock, add input, total input, less closing stock, processed production, less normal loss, expected output, actual output, abnormal loss or gain. Abnormal loss or gain. Opening stock, add input, total input, less closing stock, process to production, less normal loss, expected output, actual output, abnormal loss or gain. We'll do process wise. Process X, is there an opening stock? 0. Input is 1000. Input is 1000. Total input is addition 1000. No closing stock. We have processed 1000 units of raw material. Processed 1000 units of raw material. Normal losses: expected output is 75% of input, which means loss is 25%. Loss is 25%. So 25% into 1000. Expected 750. 75% output I wanted. In reality, we got an output of only 700. 50 is, I wanted 750. I got only 700. 50 lesser I got. I got 50 lesser. That's called abnormal loss. Abnormal loss 50. I got 50 units lesser. Abnormal loss 50. Second process, opening stock 0. Normally, the output of first process will become input. Here,
700 will become input, but on top of it, I'm adding extra 700 also on top of it, because it said process X shall be mixed with further chemical, So input is 700 plus another 700, 700 plus another 700, 700 plus another 700. Normal losses 80%, which means losses 20%. Losses 20%. 1120. Actual 1150. 30 units. Abnormal gain. We have got more than what we wanted. Abnormal gain 30 units. First process abnormal loss 50 units. Second process abnormal gain 30 units. Working note to process X account. Process X account. Particulars units amount. Particulars units amount. Particulars units amount and particulars units amount. Process X account. Process X account. In the debit side, we record all expenses. And in the credit side, we try to value various items. To direct material. To direct material. 1000 kg. 50,000. 1000 into 50. To direct material. 1000 units. Units will only come for raw material or finished product. 1000, 50,000. To direct labor. Only amount 35,000. To direct labor 35,000. To process plant time. Process plant time 200 hours into 60. 200 hours into 60. Process plant time 200 into 60. To overhead has to be absorbed in the ratio of direct labor cost. 30,000 split, below they have given 30,000, split in the ratio of 35 is to 25. 30,000 on the basis of direct labor cost. Direct labor cost. Two overheads 30,000 into 35 by 60. 35 by 60 in the ratio of 35 is to 25. Two processes in the ratio of 35 is to 25. Two overheads by normal loss, by normal loss. In the input output statement, you'll have the normal loss units. How many units? 250. And there'll be some selling price for this. 250 into 8. By abnormal loss. Abnormal loss will be recorded in the credit side and ultimately will go to debit side of P&L. By process Y. By process Y. And now units will tally, will total and put the units tallied. 1000, 1000. Units got tallied. Units have got tallied. 1000 and 1000. But I have to value that 50 and 700. Below this, cost per good unit is equal to cost per good unit, like we did in material chapter. All expenses minus sale value of normal loss, remove the recoveries for scrap, divided by expected output. What is expected output? Is all units minus normal loss. All units minus normal loss. All expenses minus sale value of normal loss divided by expected output. $150 per unit. All expenses minus sale value of normal loss divided by expected output. Expected output is all units technically minus the normal loss. So abnormal loss will be 50 into 150, and process Y is 700 into 150, and both the sides will tally. In case if it was in decimal, then rounding off differences can come. Otherwise, both the sides will tally. Process X account. Clear? Any doubts on this? Can you proceed? Then working note 3, process Y account. Process Y account. Particulars units amount, particulars units amount. Process Y account. To process Y account. To process X account. 700, 1,05,000. Double entry recording 700, 1,05,000. 700 units and 1,05,000. Then we keep recording various expenses. To direct material 763,000. 700 into 90, 63,000. 700 into 90. To direct labor 25,000. To process plant 120 hours into 80, 9,600. To process plant 120 into 80, 120 into 80. To overhead cost, 30,000 into 25 by 60, 12,500, 12,500 by normal loss 280, and some realizable values given. 280 into 5, 1,400 by FG stock account. It goes to the FG process. By FG stock account, how many units are produced in process Y? 1150. We will first tally the units, and this side abnormal gain will be recorded in the debit side and ultimately go to credit side of P&L. To abnormal gain, how many units? 30 units. Now we need values for these. For that, the same formula: cost per good unit is equal to all expenses minus sale value of normal loss divided by expected output.
all expenses divide and let me know what you get. If you get in decimal, 4 decimal number. How much? 190.8036. 190.8036. Now this side 30 units into 190.8036. 30 into 190.8036. 4 decimal to avoid rounding of gap. 5724. And this side 1150 into, but you will do the calculation, don't write it, take it as balancing figure because account has to tally, and when you multiply and balancing figure 2-3 rupees difference can be there, that is rounding off. So you will not write the value, but you will do the calculation in the calculator. 1430 is tallied. 220824, and balancing figure is 219424. And you can check 1150 into 190.803, very closer you may get 1-2 rupee difference can be there. I'm getting exactly 219424 itself, but sometimes differences can be there, that is why we take it as balancing figure. Any doubts on this? Clear? Open 3 more accounts: normal loss, abnormal loss, and abnormal gain account. Normal loss account, particulars units amount. Normal loss account, abnormal loss account. Normal loss some 6 lines, abnormal loss 4 lines, abnormal gain 4 lines. Abnormal loss account and abnormal gain account. Normal loss account, abnormal loss account, and abnormal gain account. We'll do the double entry posting to process X account. First, let's close the process X part. Process X account 250, 2000, and this side to process X account 50, 7500. 50 and 7500. In the process 1, I introduced an input of 1000. I got an output of 700, which means 300 units is the actual loss. So what you can sell is 300. Actual loss is 300. So normal loss is 250, but actual loss is 300. So this side by bank account. By bank account, I will sell this 250 units and get 2000. By bank 250 and 2000. And this side by bank 50 units you will sell, but you'll get only 5 rupees for 8 rupees for this. Only 8 rupees you will get. 50 into 8. By bank 50 into 8. The cost is 150 rupees, but you'll sell it for 8 rupees. You'll sell it for 8 rupees. Balance is by costing P&L. That's all. No, abnormal loss is over. By costing P&L 7100. $7,500. Below the table, right? Transfer to costing P&L is equal to
units into cost price minus realizable value. Cost price minus realizable value. Units into cost price. This is what is will go to P and L. Cost price. I have a cost of 150 rupees and I'm selling it for 8 rupees. So my loss is this much. 50 units into 150 minus 8. 50 into 150 minus 8. In case question asks P and L but doesn't ask abnormal loss, abnormal gain, then no need to do it. In P and L directly this formula we will use. Units into cost price minus realizable value. Units into cost price minus realizable value. Then process Y do the posting to process Y account. To process Y account 280,400 and by process Y 30 units abnormal gain 5724. 30 and 5724. 30 units and 5724. Clear? Now here in the second process we introduced 1400 input and we got output of 1150, which means loss is only 250. Loss is only 250. So I cannot sell 280 units. Loss is only 250. So what they say is you sell 250 units by bank, sell 250 units at the rate of 5 rupees, buy bank 250 units at the rate of 5 rupees. You can sell only 250 units because loss is only 250 and balance you adjust it with abnormal gain. Buy abnormal gain 30 units 150 rupees. Buy abnormal gain 30 units 150 rupees. Normal loss account is over. It's neither loss nor gain. Normal loss is neither loss nor gain. 30 units. Why we are doing this? So that abnormal gain can be closed. Normal loss 30 units 150. Balance will go to P and L. 5000 5724 minus 150 5574. Here also same formula. Transfer to costing P and L is equal to units into cost price minus realizable value. Units into cost price minus realizable value. Whether it is abnormal loss, abnormal gain, what goes to P and L is cost price minus realizable value. Units is 30. Cost price is 190.8036. What is abnormal gain is I wanted a bad unit of 5 rupees. Abnormal gain means I wanted a bad unit, but I got a good unit. So bad unit is 5 rupees, good unit is 190. My net gain is the difference. Net gain is the difference. 5574. In case question does not ask abnormal loss or abnormal gain account, just give me a minute. Net got disconnected. So with this, we are done with the changes 5574. Clear? Any doubts on this? Let's go to question 2. Go through question 2. Go through second question.
Okay, Meta Company Limited is engaged in the production of product trio, which passes through two different processes. Other data from the books of accounts is as under: particulars, process P, process Q, raw material, cost, wages, expenses, selling price, production overhead, management and selling expense. Normal loss is given. And in this question, there is some sale happening. So, what do we do if sale is happening? Is what we are going to learn in this question. And it says P and Q are not responsibility center. What is the use of this? Also, you'll understand. Let's first do input output statement. Working note 1, input output statement. Input output statement. Particulars and two processes. Process P and process Q. Process P and process Q. Opening stock, add input, total input, less closing stock, processed production, less normal loss, expected output, actual output, abnormal loss slash gain. Abnormal loss slash gain. Let's do process wise. No opening stock. What is the input in the first process? 10,000. Total input 10,000. No closing stock. Process to production 10,000. Process to production 10,000. Normal loss is how much? 6%. 600. Expected output 9400. 9400. Actual output of the first process is 9,200. 9,200. I got lesser than what I wanted, 200 units. Abnormal loss. 200 units abnormal loss. 200 units abnormal loss. Normally, output will become input of the next process. Here they are saying production overheads 9,200 units, 6,000. 3/4 of the output was passed on. Balance was sold. Only 3/4 we passed on. So input is 9,200 into 3 by 4, 6,900. Only 3/4 we passed on. Balance we sold it. Normal losses, what percentage? 10%, 690. We should have got 6210. We got abnormal gain. Only difference between the previous and this, there is a sale entry. How do we record sale is what we are going to see here. Abnormal gain. Working note 2, process P account. Process P account. Question has said P and Q are not responsibility center. For solving, you just write P. I'm assuming it to be responsibility center. You'll understand both ways of accounting. P is a responsibility center. Q is not a responsibility. In the printed answer, both are not responsibility center. How does it deviate? You'll understand. P is a responsibility center. Particulars units amount, particulars units amount. P is a responsibility center. How does it deviate? The answer you'll understand. P is a responsibility center. Particulars units amount, particulars units amount. Let's record various items. Raw material 10,000 units, 8 lakh, 10,000 and 8 lakh.
raw material 10,000 and 8 lakh. To direct wages 52,000. Direct wages 52,000. To direct expenses 8,600. Various expenses will be recorded in the debit side. Production overhead is recovered as a percentage of direct wages, split in the ratio 52 is to 78. Split in the ratio 52 is to 78 as a percentage of direct wages to production overheads. 3 lakh into 52 by 130, 1 lakh 20 by normal loss. By normal loss, how many units? 600. Some realizable value would have been given. 600 into 5, 3000. By normal loss, 600 into 5, 3000. By abnormal loss 200, value we'll see in some time. By sales, we have sold 9,200 into 1 by 4. By sales, by process Y 6,900. Below this, we'll have to calculate cost per good unit. Same, all expenses minus sale value of normal loss divided by expected output. Cost per good unit. Cost per good unit. All expenses minus sale value of normal loss divided by expected output. Nine eighty 600 minus 3,000 by 9,400. What's the number? 104. 104 per unit. Abnormal loss 200 into 104. 200 into 104. 20,800. 200 into 104. Rounding of challenges are not there. Process Y 6,900 into 104. 6,900 into 104. 7 lakh. I've assumed it to be a responsibility center. Responsibility center has a different way of accounting. 2,300 units into what is the selling price? 130, right, into 130. 2,300 into 130. Not a responsibility center accounting, you'll understand in the next process. 2,300 into 130. 2 lakh. And this side, to P&L account. Costing P&L account. To costing P&L account. On these 2,300 units, our profit is 24 rupees. 26 rupees. On the 2,300 units, we earn a profit of 26. We earn a profit of 26. This is called responsibility center accounting. 2,300 into 26. 59. Both the sides will tally. 59,800. It will not match the printed answer because I have changed the accounting here. One, I have assumed responsibility, second, non-responsibility. 1040, 400. 10,000 units, 10,40,400. This is responsibility center accounting. Q is not responsibility center accounting will do. Any doubts on this? Process Q. Process Q, not a responsibility center. Process Q, process Q, not a responsibility center. Question said both are not responsibility center, but to explain the difference, one I've assumed as responsibility center, second not a responsibility center. Process Q account, not a responsibility center. Not a responsibility center. First thing is double entry posting. Two, process P account 6,900. Then keep recording various expenses. Two, direct wages 78,000. Two, direct expenses 11,100. Two, production overhead 3 lakh into 78 by 130, 1,80,000. 3 lakh into 78 by 130 by normal loss, by normal loss 690, by normal loss 690 into 8, 5520 by cost of sales. By cost of sales. If it's not a responsibility center, you record cost of sales, you don't record sales. By cost of sales, we have sold 6,400 units. And this side, two, abnormal gain. Two, abnormal gain 190. Same thing, cost per good unit. All expenses minus sale value of normal loss by expected output. All expenses $986 $700 minus 5520 divided by 6210, 158. We don't record sales here, we record only cost of sales. 158. That's called not a responsibility center accounting. 158. That's all. 190 into 158. No rounding of difference. 6,400 into 158. There was no FG transfer and all here. Everything is sold. Both the sides should tally. 7,090 units. Value how much? 10 lakh. Clear? This is called not a responsibility center. If it's a responsibility center, right, by sales 6,400 into 190. 6,400 into 190 and 2 P&L is 190 minus 158. Any doubts on this? Question has asked for abnormal loss, abnormal gain. We are not going to do it. Costing P&L, directly we use the shortcut formula. Costing P&L. Costing P&L. Costing profit and loss account. No units here. Particulars amount, particulars amount. Costing P&L. Particulars amount. Particulars amount. In process X we wrote by, in process X we wrote 2 P&L, 2 costing P&L. So by process X account, by process X account 59,000. The printed material, this will not come because there the accounting is different. Then 2 cost of sales of process Y, cost of sales of process Y, cost of sales of process Y 10 lakh, and against the cost of sales by sales. Sales will be recorded in the P&L account. Sales will be recorded in the P&L account. In first process, I recorded in the process account itself. Sales 6,400 into 190. 6,400 into 190, 12 lakh, 16,000. Apart from this, there was some management expenses. It says management and selling expense were 1 lakh 70. These are not allocable to the process. To management expense, 1 lakh 70,000. Management expenses 1 lakh 70. Two, abnormal loss. Abnormal loss. Two, abnormal loss. Units into cost price minus realizable value. Units into shortcut formula. Units into cost price minus realizable value. Abnormal loss units is 200 into 104 minus 5. 200 into 104 minus 5. Cost price minus realizable value. Cost price minus realizable value. And by abnormal gain, gain will come to the credit side of P&L. Units into cost price 158, realizable value 8. And close the account now. You will get the profit or loss for the year. Abnormal gain 28,500. How much the profit? To profit for the year? 1,03,300. In the printed material, we would have done both the same way of accounting, same 103,300. Just that here, cost of sales is recorded for both the processes here, and sales is recorded for both the processes here. Both the processes, cost of sales and sales is recorded because they are not responsibility center. If problem is silent, you'll have to take an assumption. Here it was clear. I wanted to explain both the way of accounting, one responsibility center, second non-responsibility center. Clear? Any doubts on this? Go through question 3. Either of them.
Following details are related to the work done in process A of XYZ during the month of March 2007. Opening work in process. Moment you see opening work in process, it becomes equivalent units question, or wherever there is a degree of completion, it is equivalent units question where the number of steps are on the higher side. So here it is an equivalent units question. How are we going to do it? Let's see now. First thing you have to understand whether we need to follow FIFO method or weighted average cost method. How to identify? Once I'm done with 3-4 question, I'll tell you when FIFO, when weighted average. Here we are going to technically follow FIFO method, and first we have to identify whether it's a one material problem or a two material problem. First thing itself, working note 1, process account. Working note 1, process A account. Process A account. Particulars units amount. Particulars units amount. Process A account. Particulars units amount. Particulars units amount. Process A account. Let's record the debit side. Debit side information will be there. Credit side is what you will have to do lot of steps to get the number. To opening work in progress. Opening work in progress. 2000 units. 1,40,000 value. To opening work in progress. 2000 units. 1,40,000 rupees. To material cost. To material cost. 38,000. 14,80,000. To material cost 38,000 and 1480. To direct labor 359. To overheads 1077. First thing we'll do a process account. In the debit side of the process account, we have found one entry for material cost. Some question you will find two entries for material cost. That's called a two material problem. This is a one material problem because only one entry is there for material cost. Opening work in progress is not a material cost. That is last year's stock. There will be two entries for material cost, which we'll see in the next question. So this is a one material problem. Working note 2 below this, input output statement. Input output statement. Input output statement. Opening WIP. Add input. Particulars units. Same format, just that it is called as WIP now. And last line we will either write abnormal loss or gain. Will not write both and all. One of them, only one process. Particulars units. Particulars and units. How much is the opening work in progress? 2000. 2000. Input. Total input is 40,000. Closing work in progress 2,000. Processed is 38,000. Till now question was giving normal loss and input, total input. So now normal loss will be given, but it can be on input, it can be on total input, it can be on processed production. Question has clearly said normal loss is 5% of total input. 5% of total input. If it is silent, it is 5% of input. It is 5% of input. So normal loss is 5% into 40,000 total input. Expected 36, actual 35. Abnormal loss. Abnormal loss. I expected 36,000 units.
I got only 35,000 units, abnormal loss of 1000 units. Abnormal loss of 1000 units. Now, this 1000 is nothing but unit scrap 3000. What is unit scrapped? Is normal loss plus abnormal loss put together. Actual loss of the company is 3000. Normal loss 2000. Abnormal loss 1000. Put together 3000. We are going to follow FIFO method. One another item I want, units started and completed. Unit started and completed. Why is this item? We'll understand as we proceed. Unit started and completed. Now, in the current year, we have completed 35,000 units. Output is 35. Of the 35, some units came from the last year and got completed in the current year. So, from this 35,000 which we have completed, I subtract 2,000 of opening stock. 33,000 were started and completed in the same year. Started and completed in the same year. 33,000 units started and completed. Started and completed. 35,000 minus 2,000. 33,000 were started and completed. Working note 3. Statement of equivalent units. Statement of equivalent units, 8 columns. Statement of equivalent units. Particulars, units, material with 2 subcolumns, labor with 2 subcolumns, overheads with 2 subcolumns. I'll explain the and all. Material, DOC equivalent units, labor, DOC equivalent units, overheads, DOC equivalent units. Okay, what we are trying to do here is, see, earlier what happened is, when we were following earlier method, all units were getting completed, so denominator was units completed. But here some are incomplete, some are partly complete, some are got fully completed. So because of this, what happens is, we are going to do something called as equivalent units, separately for material, separately for labor, separately for overhead. First item, further work on opening work in progress. 2,000. Opening work in progress is 2,000. Others will fill in sometime. Further work on opening work in progress. 2,000. Units started and completed. Units started and completed. 33,000. Units started and completed 33,000. Totally 6 items will come here. Normal loss. Normal loss. How many units? 2,000. No? 2,000. Abnormal loss. 1,000. Closing work in progress. Closing work in progress. And put a total. Put a total. Totally 6 items will come. Abnormal loss or abnormal gain in that. So 5 have written. Either it's abnormal loss or abnormal gain. What's the total of this? This has to match total input. Otherwise, there is a mistake. It has to match total input. Total input is in the earlier working note. If it's not matching, there is an error. It has to match total input. If it's not matching, there's an error. Now, what concept says is, we are trying to find how much is the production during the year. On the opening work in progress, this much work was done in the previous year. Balance work is done in the current year. What is balance work? Material full work done. So this year no extra work. Labor balance 25%, overheads balance 25%. So degree of completion 0%, 100 minus 100 technically. 100 minus 100, 25%, 100 minus 75, and again 25%. 100 minus 75. How much extra work we did in the current year? Unit started and completed, full work done 100%. Started and completed. Started and completed. Full work done in the current year. Started and completed. Normal loss has to be removed from the units. So we take 0% so that it will be removed from the units. How is it removed? You'll understand. 0%. Normal loss 0% to remove it from the units. Abnormal loss means it's a defective. A defect can be identified after incurring everything, or can be identified in between. If no data is there in the question, 100%, 100%, 100%. But question says units were scrapped when their degree of completion was 180%. When their degree of completion is 100% and 80%. 100% work done, 80% work done, 80% work done. Closing work in progress, some work is done in the current year, write that. Next year 100 minus what you write here, 100 minus what you write. Closing work in progress, they have said degree of completion for closing work in progress is also 180. 180, 100% and 80% work done in the current year, balance done in the next year. So 100%, 80% and 80%. I'll repeat. Further work on opening WIP is 100 minus given percentage. Unit started and completed as the name indicates 100 percentage. Normal loss to remove it from the question 0 percentage. Abnormal loss given, if anything is given take it, else take 100. Closing work in progress given. Equivalent unit is multiplication, 2000 into 0%, 33,000 into 100%, 2000 into 0%. Moment you write 0%, it will be removed in the total. 0, 1000, 2000. 36,000, like this you keep doing it. 2000 into 25%, units into degree of completion, units into degree of completion, units into degree of completion. Clear? Units into degree of completion. 36,000, 35,900 and 35,900. Working note 4, statement of cost per unit. Statement of cost per unit. Earlier we were calculating all expenses together and one cost per unit. Material separate cost, labor separate cost, overhead separate cost. Statement of cost per unit, particulars and 3 columns. Particulars, material, labor and overheads. Material, labor and overheads. Material, labor and overheads. Cost incurred. Look at the debit side of your process account. You have already written them. Cost incurred. 1480, 359, 1077. Earlier we were adding all the three together. Now you cannot add them together. You will have to write separately each of them. Earlier we were adding them together. Now we'll have to write it separately. 1480, 359, 1077. less sale value of normal loss. I have to subtract the sale value of normal loss like we were subtracting earlier. 2000 units, what is the sale value? Realizable value would have been given. Now, earlier everything was clubbed together. Now this will be reduced only from the material cost because that is the major expense, only from the material cost. Our rule is it's always deducted only from the material cost. Net cost incurred, net cost incurred, and then copy the equivalent units and get cost per equivalent unit. Earlier you were clubbing all of them together, now separately. Equivalent units 36,000, 35,900, 35,900. Cost per equivalent unit 40, 10 and 30. Cost per equivalent unit 40 rupees, 10 rupees and 30 rupees. Cost per equivalent unit 40, 10 and 30. Clear? Working note 5, statement of valuation slash distribution of cost. Statement of valuation slash distribution of cost. Valuation slash distribution of cost. Particulars, 3 columns and a total. Particulars, material, labor, overheads and total. Material, labor, overheads and total. What you need to do is you need to copy paste whatever items are there. Here we had 5 items, copy paste them. Whatever items are there in working note 3, like activity based costing, you copy paste all the 5. Further work on opening WIP, unit started and completed, normal loss, abnormal loss, closing WIP. Copy paste the items from there. Whatever be the items. Some question 3 will be there, some 4 will be there, some 5 will be there. Copy paste them. Further work on opening WIP, unit started and completed, normal loss, abnormal loss, and closing work in progress. Now for each of this we have units. Material 0, listen, 0 into 40. Listen for a minute, 33,000 into 40. Normal loss, no separate valuation, already done 40,000 rupees, 2,000 into 20. Take units from here, 1,000 into 40, 2,000 into 40. Where are the numbers? I am taking numbers from here. Equivalent units from here, 0, 33,000, ignore normal loss, okay? 1,000 and 2,000 multiplied with 40. Then for labor, take these, multiply with 10. For overheads, take these, multiply with 30. Multiply with 30. Normal loss, in fact, you can remove normal loss from here. It's not needed. Normal loss is already valued. So you can even remove it also. Doesn't make any difference. Even if you write also, it's okay. You don't write also, it's okay. Clear? Any doubts on this? So take units from there, cost per unit. Keep doing it. You do and then refer the screen.
This total, there is row wise total, column wise total has to match net cost incurred. Has to match net cost incurred. In case difference, rounding off will be there, but here no rounding off issue. Net cost incurred. Good part about process costing is everything can be checked with your workings. There are always interlinkages. Net cost incurred. Clear? Can we proceed? Below this, transfer to next process is equal to, because this unit started and completed and all, we created it, but we do not have an item like unit started and completed for doing the process account. Transfer to next process is equal to opening WIP plus unit started and completed. How we got unit started and completed is from the production we removed the opening WIP. So transfer to next process is equal to opening WIP has two values, one given in the question, second extra work which has been done. Given in the question is 1,40,000, 1,40,000, and extra work is 20,000, and unit started 2640. All this is transferred to next process. 1,40,000 plus extra 20,000 plus extra 2640. 28 lakh. 140 plus 20 plus 2640, 28 lakh rupees. Clear? 140 plus 20 plus 2640. Any doubts on this? 140 plus 20 plus 2640. So let's go to the process account now. Every item is valued, automatically it will tally by normal loss. By normal loss, 2000 units, 40,000 value. By normal loss, 2000 units, 40,000 value. 2000 units, 40,000 value. By abnormal loss, 1000 units, value in that process was, in that step was 72,000. 1000 units, 72,000. By next process name is process B, 35,000, 28 lakh. 35,000, 28 lakh. By closing WIP, 2,144. Both the debit and credit side should match. It's a time consuming area, but straightforward, simple steps you have to follow. Follow the steps properly, you will get to the answer. It is a time consuming area, like activity based costing, a time consuming area. But if you follow the steps properly, you will get to the answer. Apart from this, question can ask for abnormal loss account, abnormal gain account. All that if they ask, you do it. I am just focused on the process account. So first we prepare the debit side. We check whether it's one material, two material. Input output statement, same thing. At the end you do unit started and completed. Then you calculate equivalent units for various item and then calculate cost per unit, and step 3 into step 4 is step 5. Step 3 into step 4 is step 5. Any doubts on this? Clear? Can we proceed? Go through question 4. Okay, very small question. Prepare process account, but the same thing. It is going to be there are some degree of completion given. If degree of completion is equivalent units, question has said FIFO method. Later on, you will understand when FIFO weighted average. Working note one. Let's do the debit side of the process account to understand. So the heading says two material, but you will have to understand this process three account. Process three account. Particulars units amount. Particulars units amount. Particulars units amount. Particulars units amount. Let's write the debit side of the process account. That will give us clarity whether it's a one material problem or a two material problem. Two opening work in progress. Two opening work in progress. Two opening work in progress. How many units? 2000 units and value is 25,750. Two opening WIP 2000 and 25,750. Two next expenses two account 53,000 411 500. Process to 53,000 4,11,500. Then closing stock and all will not. Next is two direct material. Not given any quantity, just the direct material 197 600. Two direct material 197 600. Two direct wages 97 600. Two overheads 48 800. Now, if you see, there are two entries for material cost. One entry is 4,11,500, and there's another entry 197,600. One entry 4,11,500. That is called main raw material, or we call it as material A. And there's a direct material again written, which is called sundry material or material B. There's a main material and there's an allied material. Main material and an allied material. Two process two is called main material because quantity is there for that, and two direct material they have given separately. So two material item. So leave this now, come down. Working note 2, input output statement. There are no changes in it's a two material problem. No changes in input output statement. You do it same format, complete input output statement, and then refer the screen. Input output statement. You do and then refer the screen.
No changes in input output statement. Other steps there are changes. It's a two material problem. There will be changes in other steps. Opening WIP 2000. Losses 5% of production. Production means process to production. That's the only change. Losses 5% of production. Process to production. Clear? Any doubts on this? Can we proceed? And units started and completed like what we did in the previous question. Units transferred minus the opening work in progress. Working note 3, statement of equivalent units. There are going to be changes in this step. Statement of equivalent units. Totally 10 columns now. Why 10 columns? You'll understand. Totally 10 columns. Particulars units. Material A. Material A. Material B. Labor overheads. So there are two material now. Material A, DOC equivalent units. Material B, DOC equivalent units. Labor DOC equivalent units. Overheads DOC equivalent units. Particulars units. Material A, material B, labor overheads. Same five things, let's write it. Further work on opening WIP. Some changes will be there in the rules. Further work on opening WIP 2000. Units started and completed 46,000. Some changes will be there. Units started and completed 46,000. Normal loss 2,500. Abnormal gain. Gain means you'll have to write the units in negative. Units will be written as negative. Abnormal gain. Then only it will tally. Abnormal gain, we write units as negative. Negative 500. And closing work in progress. Closing work in progress. How many units? Put a total, it will match total input. Abnormal gain units negative. Abnormal gain units negative. It will match total input. 55,000 is the total. 55,000 is the total. It will match total input. Clear? Any doubts on this? Now, material A, degree of completion, don't look at the question. Let's first fill material B, labor and overheads. Material A is not from the question. There are certain rules, I'll explain. Further work on opening WIP, 100 minus given percentage. 100 minus given percentage. 80, 60, 60, whatever they have given, 80, 60, 60 is for material B, labor and overheads, not for material A. Not for material A. 100 minus 80, 20, 100 minus 60, 40, and 100 minus 60, 40. Only for material B, labor and overheads. It is not for material A. Don't look at the question for material A. Unit started and completed 100%. Unit started and completed 100%. Whatever is given in the question is only for material B, labor and overheads. Normal loss 0%. 0%. Abnormal gain are those units which got fully completed, because what is abnormal gain is units got completed, then only it can be an abnormal gain. Abnormal gain are those units which are fully completed. So this is 100%. They have given some degree of completion for unit scrap that will be useful if there was an abnormal loss. Abnormal gain, I don't use it. Abnormal loss, we use given percentage because loss can be identified anytime. Gain can be identified only once it is fully complete. And closing work in progress is 70, 50, 50. 70, 50 and 50. Whatever is given in the question is only for material B, labor and overheads. Two material problem, only for material B, labor and overheads. Don't write it for material A. Don't write it for material A. Material B, labor and overheads. Now material A is always 100% complete because it is the main raw material. We start processing only once that is received. So it's always 100% complete. Listen. So this 100 minus 100, 0%, 100%, normal loss 0%, abnormal gain 100%, closing work in progress 100%. Everything is 100% only. Normal loss obviously 0. Further work is 100 minus 100. Further work. Material 1. Main raw material is always 100% complete. Don't look at the question. Don't look at the question. You will unnecessarily complicate. Don't look at the problem. It's always 100% complete. Complete the equivalent units now. Multiply them and then keep writing it. Material A, material B, labor, overheads. Units into degree of completion is equivalent units. Rules be very clear. Material A is as per a predetermined rule. Don't look at the question for material A. Any doubts on this? Can we proceed? Any doubts on this part? It's a time consuming area, but everything is straightforward, format driven like activity based costing. Any doubts on this? Working note 4, statement of cost per unit. Statement of cost per unit. Now you'll have to calculate cost for even material A. Earlier we did material, labor, overheads, but now material A, material B. Particulars, material A, material B, labor, overheads. Material A, material B, labor and overheads. You can call it as material 1, material 2, material A, material B, main material, sundry material, whatever name you want to give. Material A, material B, labor and overheads. Rules remain same. Cost incurred. Cost incurred. In the debit side, you will have the cost incurred. In the debit side, it's there in your notebook itself. Cost incurred 4,11,500. 197 600, 97, 600 and 48, 800 less sale value of normal loss, sale value of normal loss. Now this will be deducted from main raw material, that's all. It can be deducted from both also, but ICA says main raw material. 2500 into 3, main raw material, sale value of normal loss, 2500 into 3, net cost incurred, equivalent units, and cost per equivalent unit. Equivalent units, cost per equivalent unit. Eight, 4, 2 and 1. It is a purely format driven area. You follow the steps properly, you will keep getting to the answer correctly. 8, 4, 2, 1. Any doubts on this? Done. Working note 5, statement of valuation. Particulars, 4 columns and a total. Step 3 into step 4. Particulars, 4 columns and a total. Row wise and column wise total will put total, and it has to match net cost incurred. We'll copy paste the items from there except obviously normal loss. Normal loss should not come. Copy paste the items. Copy paste the item from there. Particulars, 4 item, material A, material B, labor, overheads and total. Further work, unit started, abnormal gain, closing WIP. Abnormal gain, we will write a negative value and ultimately record it in the debit side of P&L. Abnormal gain will write negative value because negative units are there. Take the units from here. 0, 46,000, negative 500 and 5,000. 0 into 8, 46,000 into 8, 46,000 into 8, negative 500 into 8, and 5,000 into 8. Then material B, 400. You keep doing it. Let me know if you have a doubt.
The total will match net cost incurred. And below this, transfer to next processes, opening WIP plus units started and completed. Any doubts in the table here? Just take working note 3 units, working note 4 cost per unit. Under to material, there was a small change here. Material A, degree of completion is as per a predetermined rule. We don't take it from the question. And then we calculate material A, material B cost per unit separately. Below this, transfer to next process is equal to opening WIP plus units started and completed opening WIP is one is given in the question 25,750 extra 4,000 and 690 and 690. How much you get? Seven one nine seven five zero 719 750. Clear? Can you proceed? Now you go to the credit side. By normal loss 2,500. It will tally on its own because no rounding off issue. To abnormal gain 500, value was 7,500. In that process, negative value, we write it in the debit side. By process 4, 48,000 units are transferred. 7,19,750. Everything is already done by you. Valuation is done. 61,500. Both the sides should tally. Clear? Any doubts in this? Both the sides will tally. Any doubts in this? Clear? We are done with FIFO 1 material, FIFO 2 material. Why FIFO you'll understand once we are done with average cost method. Any doubts in this? Okay, I'll take a break of 15 minutes. Okay, let's proceed. Now we are left with four, totally 5 questions are there. In that 4 I'll do. But before that, I'll just discuss a little bit about what you need to do to complete your preparation because we are covering around 8 chapters. 7 more chapters are pending. For that, as I said, you can go through this material. Videos of the earlier revision material is there in YouTube. So in case you want videos, you can see that also. Most of the questions may match in the previous material and this material, but changes are there. Changes are also there. So first thing is you complete this material, then MCQ and other things if you can do it. Otherwise, completing first the 160 question is very critical because once you complete these 160 question, that will kind of give you the comfort needed to face the exams. Second part is in exam writing. What should I do? Because completing the paper is becoming very difficult for many students in costing as well as FM. FM, costing, both the places people find it difficult.
So always follow a rule called as 1.5 minutes per mark, or at max maybe 1.7 or 1.65 minutes per mark. So depending on the marks available for a question, don't try to spend, for example, a process costing question, answer it in the end. In case you're okay with other question, answer this in the end, because this may take more time and you will not be able to then complete the paper. So completing the paper can become a challenge, because a normal process costing question can go on for some 25-30 minutes. Some if you are very fast, you can complete in 20 minutes. Otherwise 25-30 minutes it takes, and it will be a 10 mark question or a 8 mark question. That much amount of time if you spend for a 8 mark question, completing other parts can be difficult. So rule is 1.5 minutes per mark. In that, first try to complete your MCQ part. Be little smart. If certain things are not needed, don't try to calculate them, and then complete the MCQ part fully. Once the MCQ part is over, once the MCQ part is taken care, then in descriptive, try to answer the mandatory question and the last theory question. In case paper is easy, then you can answer the practical part. Otherwise, answer the last theory question. That will take care of 30 marks, 14 marks, and 14 marks. 58 marks of paper you would have attended. MCQ ideally 30 marks. Max you take is 40 minutes. Don't spend more time than that. In 40 minutes, somehow try to complete it. Then the two questions which are there, 14 mark, 14 mark, each if you end up taking 25 minutes or 20 minutes, somewhere around in 1.5 hours you'll be done with this. Then another 1.5 hours you need to complete three questions of 14 marks each. That's how you'll have to plan your exam writing. Otherwise you'll find it difficult to complete the paper. MCQ, mandatory question, and the last theory question, answer it in the beginning. In case paper is relatively easier, then ignore the theory part and answer the descriptive part itself. But MCQ plus two more 14 marks should get over in the first 1.5 hours, and last 1.5 hours, three 14 mark questions. So 30 minutes, 30 minutes, and 30 minutes. This is what is needed. I don't see anything else to be done as far as my subject is concerned. The material is very comprehensive. If you can complete MCQs, and I think one MTP is not covered in this, so cover the MTP in costing, and in FM, I think two MTPs are something. Whatever is not covered, I've mentioned in the initial note. So just cover that MTP alone, and then you can easily go ahead and face the exam. This is the only guidance I wanted to give. I'll get back to questions. We'll quickly try to complete this now. Go through question 5. Okay, let's now start with question 5. We'll do the debit side of the process account to understand whether it's one material or two material, and then why average cost also you'll understand. Let's get to the question. Let's open the debit side of the process account. Process account. Mounting process account. Mounting process account. To opening WIP. To opening WIP. 31,000 units. to opening WIP 31,000 units, and the question has given breakup of the various values. So you'll have to just add them like we did step 5 statement of valuation where we add material, labor and overheads. They have given the breakup 12 lakh 40 plus 232 500 697 500 all put together how much? 21 lakh 70,000. To material cost, to material cost 5 lakh 89,000, 2 crore 29 lakh 40,000. To material cost 5 lakh 89,000, 2 crore 29 lakh 40,000. To labor cost 55 64 500. To overhead cost, so I see only one material cost entry in the debit side, two material cost. So it's a one material problem. It's a one material problem. Why the opening WIP breakup is given, you'll understand as we proceed. Next, working note to input output statement. It's an average cost method. Some changes will be there. Input output statement. Under average cost method, I don't do any lot wise tracking. What is lot wise tracking? In FIFO method, you separately track opening stock, separately units started and completed. So here in input output statement, we don't calculate units started and completed. No need to calculate units started and completed. So write the format, complete it without units started and completed. Opening WIP, add input, total input, closing WIP, process production, normal loss, abnormal gain. Sorry, normal loss, expected output, actual. You may get an abnormal loss or gain. No need to do unit started and completed. They have given somewhere the actual loss is 46,500. That 46,500 is nothing but normal loss and abnormal loss put together. Actual loss is 46,500, normal and abnormal loss put together. Any doubts in this? No need to write units started and completed. That's the only change here. Average cost method. Why average cost? You'll understand. Any doubts in this? Can you proceed? Working note 3 statement of equivalent units. Particulars units, material, labor, overheads, degree of completion and equivalent units. Particulars units, material, labor, overheads, material, labor, overheads, degree of completion and equivalent units. DOC and equivalent units.
Now, under average cost method, we do not segregate this further work, unit started and completed. So these two items are not there, and that is replaced with transfer to next process. We directly write only one item, transfer to next process. No breaking it as further work, unit started and completed. All that headache is not needed. Directly transfer to next process. 5 lakh 42 500. Let's first write the units part. 542 500. Normal loss 31,000. Abnormal loss 15,500. Closing work in progress 31,000. Closing work in progress 31,000. Transfer to next process. Normal loss, abnormal loss, closing WIP. Five 42 500, 31,000, 15,500, and 31,000. Overall total is 6 lakh 20,000. This will match total input. Total input 100%. 542 500. Transfer to next process is 100% complete. 100% complete. No further work, no unit started and completed concept. Normal loss rule remains same, 0%. Abnormal loss, some degree of completion would have been given. For unit scrap, they would have given some degree of completion. What's the degree of completion for abnormal loss? 100% and 80%. Unit scrapped 100% and 80%. And closing WIP is also given 100 and 80. Last line said the with 100% material used along with 80% labor, 31,000 units were shifted to next month. So I did not complete it in this month. 80%, 24,800. Any doubts on this? The only main change is transfer to next process replaces unit started and completed and further work on opening WIP. That item is not needed. We replace it with transfer to next process. Working note 4, statement of cost per unit. Again, some changes are there. Statement of cost per unit. Particulars, material, labor, overheads. Material, labor, and overheads. Some changes are there in the average cost method. First item is opening work in progress. Under FIFO method, when you do cost per unit in cost sheet chapter, you don't consider opening stock. But average cost method, cost of production plus opening stock. So if I want to follow average cost, I need breakup like this. This was not there in any of the question till now. The opening WIP, they have to give breakup. Question only said 1 lakh 40, 10,000, 20,000. They did not give the breakup. In this question, FIFO not possible. Because for FIFO, you need
degree of completion of opening stock. For FIFO, you need degree of completion of opening stock because you will say 100 minus given percentage. Here it is not given, and I did not even ask what is the given percentage because under average cost method, I don't need DOC of opening stock. So if you want to follow average cost method, breakup of opening stock is needed. You want to follow FIFO method, degree of completion of opening stock is needed. Both are there. You can follow either of the method. You can follow either of the method. So this question, the previous two question, only FIFO is possible. This question, only average cost is possible. If they give degree of completion also for opening work in progress, then either of the methods. Opening work in progress breakup 12 lakh 40, 232 500, 697 500. Current period cost. Current period cost. Current period cost. The current period cost is 229 40 55 64 500 less sale value of normal loss. Only difference is you have to consider opening stock also in the cost per unit calculation. 31,000 into what is the realizable value? 20. Net cost incurred equivalent units, cost per equivalent unit. Net cost incurred equivalent units, cost per equivalent unit. Two crore 35 lakh 60,000, 57 lakh 97,000, 1 crore 23 91,000. Opening stock is to be considered in cost per unit. This is the rule of weighted average cost method. 589, 579 700, 579 700. Once you divide, you'll get the cost per unit. 40, 10, 40, 10 and 30. Clear? Working note 5, statement of valuation. Statement of valuation. Statement of valuation. Same rules. Particulars, 3 items: material, labor, overheads, and a total. And whatever items are there, we'll value them. And good part about FIFO average cost method is you directly will get transferred to next process. Whatever items are there, we'll have to value them, ignoring normal loss. Transfer to next process, abnormal loss, closing WIP. Closing WIP, total. Directly we will get transfer to next process value here.
Let me know if you get anything different. Anywhere, any calculation error, if you find, please let me know. Any doubts on this? It has to match the net cost incurred. That rule remains same. Here, no separately transfer to next process calculation because it's already calculated in this working note. Transfer to next process is already valued here 4 crore 34 lakhs. Any doubts on the valuation step? Units and cost per unit and keep doing multiplication. Can you proceed? Now in the credit side, let's close it now. By normal loss 31,000, 6 lakh 20,000. Abnormal loss 15 500, 11 lakh 16,000. By the next process name is given soldering. By soldering process 542 500, 4 crore 34 lakh, and by closing WIP 31,000 22 32. I'm not putting a total number. Total should match unless we have made some calculation error. Total will match. So the main changes, you don't need to separately write unit started and completed, and cost per unit. When you calculate opening WIP will form part of cost per unit calculation. Opening WIP will form part of cost per unit calculation. Any doubts on this? Clear? Can we proceed? Go through question 6. Okay. Heading as set to material and value of opening stock material 1 material 2. Value of opening stock material 1 material 2. The breakup is given material 1 material 2. Anyway, we will do the debit side of the process account. We'll understand why it is a two material problem. In this question, breakup of opening stock is available. Breakup of opening stock is available. So we can follow average cost method. Degree of completion of opening stock is not given. Degree of completion is not given. Let's start. First, process to account. Process to account. Particulars units amount. Particulars units amount. To opening WIP. To opening WIP. 1000 units, and you'll have to add up everything. 4 plus 2 plus 350 plus 800. How much? 7,150. To process 1 16,000. This is technically material 1. This is technically material 1. To process 1 16,000 and 81,000. To
Material 43,750. This is the material 2. Material 1, material 2. We did there material A, material B. 43,750. 43,750. To labor 14,300. To overheads 28,500. Overheads 28,500. To labor 14,300. To overheads 28,500. So we see two entries for material cost. This is a two material problem. Breakup of opening stock is given. We'll follow average cost method. Working note 2, input output statement. Input output statement. Particulars and units. No need to calculate units started and completed separately. Input output statement. How many units of opening WIP? 1000. Input is 16,000 units. 16,000. 17. Closing work in progress 2,000. Processed 15,000. Normal losses kind of straightforward. One adjustment is there in this question. Have they given the actual output? No. But what they have mentioned is unit scrapped is 500. What is unit scrapped is normal loss of 750 and abnormal gain. Abnormal gain because unit scrapped is only 500. Normal loss plus abnormal loss, but loss is lesser, which means it is an abnormal gain. In this question, abnormal gain 250, reverse working actual output. Abnormal gain is 250. How 250? 750 is the units, 750 is the normal loss, but actual unit scrapped is only 500. Actual unit scrapped is only 500, which means my actual output is going to be 250 more than the expected output. 14,500. Working note 3, statement of equivalent units. Degree of completion for material 1 will be as per predetermined rule. Only material 2, labor and overheads will see question. Statement of equivalent units, particulars and 10 columns. Totally 10 columns. Particulars units, material A or material 1. Here the name is material 1. Particulars units, material 1, material 2, labor overheads. Material 1, material 2, labor overheads. First item is transfer to next process. First item, transfer to next process. No further work on opening WIP, no concept of units started and completed, all that will not come. Transfer to next process. 14,500. Normal loss. Let's close the total input checking. Normal loss 750. Abnormal gain negative 250. Just give me a minute, Wi-Fi issue. Abnormal gain negative 250. Closing WIP. How much is the closing WIP? 2,000. Total 17,000, which matches the total input. Now I'll not look at the question. Let me close degree of completion for material 1 without looking at the question. Material 1 without looking at the problem. Transfer to next process 100%. Normal loss 0%. Abnormal gain 100%. Closing WIP 100%. I am not even looking at the question. I don't want to look at the question for material 1. By looking at the question, you may end up making mistakes. So we will not look at the question for material 1. Then we'll see what is there in the question and then keep writing. Material 1, not to look at the question. Material 2, transfer to next process anyway 100%. Transfer to next process 100%. Whether it is any of the item. Transfer to next process 100%. Normal loss 0%. Abnormal gain also 100% only. The change alone is closing WIP. Change alone in closing WIP. Closing WIP given percentage. What is the given percentage? 50 only for material 2. Only for material 2. 50, 20 and 20. Put a total. Material 1 is as per predetermined rule. Material 1 is always as per predetermined rule. Any doubts on this? It's a very simple chapter as long as you are aware of the rules. Any doubts on this? Working note 4, statement of cost per unit. You'll have to do it for material 1, material 2, labor overheads, and opening stock will be considered in the calculation. Average cost method, opening stock will be considered in the calculation. Particulars, material 1, material 2, labor and overheads. Labor and overheads. Opening WIP will form part of cost per unit calculation. And that's why they gave that breakup. What is the breakup opening WIP? 4,000, 2,000, 350 and 800. Breakup of opening WIP is given to do average cost method. 4,000, 2,000, 350 and 800. Current period cost. Current period cost is 81,000, 43,750, 14,300, 28,500. Sale value of normal loss will come only in material A. 750 into 5. Only in material A.
Cost per equivalent unit 5312. Cost per equivalent unit 5, 3, 1 and 2. Please do working note 5, multiplying 3 and 4 and close the credit side of the process account. Refer the screen if you want. Any doubts till this? And then close the credit side of the process account. Keep doing it. We'll be back. Any doubts in this? It's a straightforward computation.
In all the question I have selected, decimals are not there, but decimals can come, and that can lead to a little bit of extra computation. This side by normal loss 750 3750 by next to process P account 14,500 159 500 by closing WIP 2000 and 14,200 to abnormal gain 250 and 2750 total and all. I'm not doing it, will match. Any doubts in this? Clear? Go through 7. We are not going to solve it, but I'll discuss something here. Go through the question. Go through the question. I'll be back in a minute or two. You keep going through the question. Go through 7. Okay, let's quickly discuss this question. It is about two processes. Material for 1,20,000 toy cars were put through process 1, of which 90,000 were completed. The cost incurred is given. Degree of completion for those not transferred to process 2. So there is no opening stock in the question. 1,20,000 is input, 90,000 completed, 30,000 work in progress. No normal loss, no abnormal loss, nothing is there. Process 1, you will have to follow the 5 steps, but you call it as FIFO method or you call it as weighted average cost method, both are same because there is no opening stock here. There is no opening stock. When it comes to second process, 84,000 were completed and transferred for protective packing. If you imagine the process account of the second process, first entry will be to process 1, second entry will be to packing material, so it becomes a two material problem. It becomes a two material problem for the second process, to process packing and to packing material, to wages, to overheads. In the second process, 84,000 completed, 600 units is normal loss, and some units were still in progress and thus shifted for the next month process. There is no abnormal loss discussion here. So whatever was completed is okay. In the second process, it will become a two material problem. The degree of completion for protective packing, this is one of the cost. Material 1, material 2 is called protective packing. For completed 100% complete. For incomplete ones, your material 100% is only for material 1. Packing material will not be used for the incomplete units. Packing material will not be done for the incomplete units. Labor and overheads, whatever they have given. Clear? Any doubts on this? So if you see here, process 2, material A material B, material A and material B. I call it as unit started and completed. You can call it as unit started and completed. You can also call it as transfer to next process. There's no difference between FIFO method and weighted average because there's no opening stock. When opening stock is not there, both are technically same. Any doubts in this? It's a good problem for you to practice. You do practice that. Go through 8. Go through 8. Okay. Star Limited needs your help to prepare the process account for the month during which the fire has happened. They are following some process cost FIFO method and some fire has happened. They have given certain information. Here it's a reverse working question because they have given cost per equivalent unit FIFO method. Because it's a reverse working question, we will open 5 working notes. First is process account. We may not fill anything. Then input output statement, you know the format. Then you know the third statement of equivalent units, statement of cost per equivalent unit, and then the statement of valuation. Open the 5 accounts. Open the 5 working notes. One material problem. It's a one material problem. Open 5 accounts. First is process account. Process account. Nothing to be written, just the format. That's all. Particulars units amount, particulars units amount. Process account, particulars units amount, particulars units amount. Then input output statement. Mostly it will be abnormal loss, but it can be gain also. Fire has happened, but okay. Let's just open input output statement then. Input output statement. Then statement of equivalent units. Particulars units, material, labor, overheads. Open all the working notes. Some 6 lines. Cost per unit. Cost incurred less sale value of normal loss, net cost incurred equivalent units, cost per equivalent unit. Format remains same. Open all the formats.
and statement of valuation slash distribution of cost. Valuation slash distribution of cost. Open the 5 notes and then we start going through the information. Can we? You open the 5 working notes. Okay, okay, quick, do it. Reverse working question. Write all the 5 formats first. Can we? Okay, let's look at the information from the beginning. First para, nothing is there. Opening work in progress, beginning of the month, 800 liter. Opening WIP, right? To opening WIP, 800 liters. 800 liters. Amount is 26,640. Write 800 in working note 2 also. 800 in working note 2 also. And further work on opening WIP. Further work on opening WIP 800. Further work on opening WIP 800. Every step, that's why I said we'll do it together. All the working notes should be opened. Further work on opening WIP 800. In that they've said 70% complete for labor and overheads, and somewhere they've said all raw material are added at the commencement. So raw material is always 100% complete. 100 minus 100 is 0%. 100 minus 100 is 0%. 100 minus 70 is 30%. 100 minus 70. 100 minus 100, 0%. 100 minus 70%. 100 minus 70%. 100 minus 100. 100 minus 70% and 100 minus 70%. 30%, 240 and 240. Clear? Closing work in progress in the process account by closing WIP. By closing WIP 160. By closing WIP 160. In the input output statement minus 160. Minus 160. Statement of equivalent units closing WIP 160. Material will be 100% complete. Material is added at the commencement of the process. Material is 100% complete. Labor and overheads they have given some percentage.
30% for labor, 20% for, sorry, this was 640 then. Sorry, this is wrong then. 70 and 60 they had given for opening WIP, 20 and 60, so 30 and 40, and this is 30 and 20. Different degree of completion is given for labor and overheads in this question. Clear? Then normal loss is 10% of input, total loss is 1800. I'll park it for the time being. Normal loss 10%, I don't know the input figure, and overall loss is 1800. Normal plus abnormal or normal minus abnormal gain is 1800. Output 4200. Actual output, right, by FG stock account. By FG stock account. Output transferred to finished goods. By FG stock account. By FG stock account 4200. Actual output 4200. Actual output 4200. Unit started and completed is 4200 minus 800. 4200 minus 800. 4200 minus 800. 4200 minus 800. And in the equivalent units, unit started and completed 3400, 100%. 3400. Clear? We'll step by step we'll take it. Next information, that loss I'll have to consider 1800. Then losses have a scrap value of 15. I don't know the normal loss into 15. Cost per equivalent unit is given right here. Cost per equivalent unit 23, 7 and 9. 23, 7 and 9. Now, only thing I don't know is input. If I know the input, I'll be able to get to the overall figure. So what we can assume is, see here, if I imagine the debit side, opening WIP plus input, opening WIP plus input is equal to closing WIP plus output plus normal loss plus abnormal loss minus abnormal gain. I don't know whether it's an abnormal gain or abnormal loss. I know the normal and abnormal loss put together. I know the normal and abnormal loss or normal and abnormal gain. Mostly it will be loss. So below the table, right? Opening WIP plus input is equal to normal loss plus abnormal loss, normal loss plus abnormal loss, output plus closing WIP. Opening WIP plus input equal to normal loss plus abnormal loss plus output plus closing WIP. Plus closing WIP. 800 plus input 1800. Normal plus abnormal put together is 1800. Could be abnormal gain also, doesn't matter. Okay, the actual loss is 1800. Output is, and closing WIPs, this will give you input, and then we'll be able to complete most of the question. Input input is 5360. Input is 5360.
5360. Let's write the input figure now. 5360, 6160, 6000, 5464. Abnormal loss 1264. Abnormal losses 1264. Any doubts on this? Clear? So note 2 is done. Somehow we'll have to complete all the notes. Any doubts on this? Any doubts on this? Now come down. Normal loss 536, 0%. Abnormal loss 1264. Abnormal loss 1264. Nothing is given, so I assume 100%. I assume they're identified once everything is over. Once everything is over, abnormal losses identified. Clear? It's a reverse working question. Any doubts on this? Any doubts on the statement of equivalent units? Now we take it here in the reverse order. 4824, 4952, 5016. Net cost incurred is 23 into 4824. Reverse working. 23 into 4824. 1 lakh. Reverse order. Sale value of normal losses 536 into 15. 536 into 15. 8040, and in the reverse order cost incurred. Adding back 8040. Adding back 8040. Clear? Any doubts on this? Now these three items will go to the debit side of P&L account, debit side of process account. These three items will go to the debit side of the process account. We used to write it from the debit side. So let's close the debit side of the process account. Any doubts in these three items? Any doubts in these three items? In the reverse working, from 23 we got 110, from 110 we got 118. In the debit side, to raw material 5360 118992 118992, labor cost 34664, labor cost 34664, to overhead cost 45144. I'll explain again. With the cost per unit, we have reverse worked and got these numbers. With the cost per unit, we have reverse worked and got these numbers. Take equivalent units, cost per unit, multiply complete step 5 and then write the credit side of the process account. Close the credit side. Once this is done, I'll end the session. Last question. You can either watch the last time video or you can do on your own. It's an on inter-process profit. Questions can come on that. Either you see the last time video, the playlist I'll share, or you go through the question, you'll understand on your own itself. Quickly close the credit side now. Any doubts on the statement of cost per unit? Zero, 240 and 320. Let me know in case any doubts are there. It's a very good question. Reverse working. With this, you can complete the credit side of the process account. Any doubts in this? Any of the items, if there is any error, anything, let me know. Transfer to next process is equal to opening WIP plus unit started and completed. Opening WIP, two values are there. One is in the question. How much is in the question? 26,640 plus 4560 plus 132,600. This is how your account will look. Total is some 163,800. This part we have already written. Credit side we have got it in the statement. In the statement, any doubts in this? Last area is inter-process profit. Because of some time constraint, I'll have to leave now. So you complete inter-process profit by looking at the previous video. Clear? With this, we have covered around 75 marks of costing. Balance areas, I will share the last time playlist. So use that and then complete your preparation. Clear? Great. Thank you, guys.